Hello everyone, welcome to this session. And as you have already seen the thumbnail and you are here, this is a part 2 marathon for CMA final paper 17 cost and management audit. And I am CMA Parvati, your faculty for cost audit. As many of you have already watched part 1 marathon for paper 17 and are very much eagerly waiting for part 2 marathon, I know that. So here I am in front of you with part 2 marathon for paper 17. This part 1 and part 2 marathon are very much relevant and applicable for December 2024 attempt students. So those students who are giving your attempt in December 2024 can rely on this part 1 and part 2 marathon completely and score the desired marks in your examination, that's for sure. And before coming into part 2 introduction, I want to say that any of you students have not yet watched part 1 marathon and directly skipping into part 2 marathon, do watch part 1 marathon before coming into part 2 marathon. Because in part 1, I have covered entire section A cost audit, which covers 60 marks in your question paper, which is very, very important section from your syllabus. So do watch part 1 marathon and then come to part 2 marathon. And in part 2 marathon, what are the topics I have covered is section B, management audit, section C, internal control and internal audit, and section D, forensic audit and anti-money laundering. Yes, section B weightage is around 25 to 30 marks. Section C weightage is around 10 to 15 marks, and section D weightage is also around 10 to 15 marks. So all these three sections have been covered in this part 2. Combinedly, part 1 and part 2 marathon, I have covered entire 100% syllabus of this paper 17. By just watching part 1 and part 2, you can be able to easily score 80 plus marks in your examination. I can give you guarantee for that. Now, that is regarding what topics I have covered in this particular marathon. And coming to the next thing, what sources I have used in this marathon? I have used my color concept book and handwritten notes for your easy reference and how to purchase this concept book and handwritten notes. Concept book will be available only as a hard copy. No soft copy will be provided for concept book. We are very sorry for that. Only hard copy will be provided for the color concept book. And for handwritten notes, soft copy will be available. For workbook, also soft copy is available. All these three books are available in our BCCA app, so you can go there and purchase it. Soft copy of handwritten notes and workbook is available as a download option. So right after purchase, you can download it and take use of it. And concept book, hard copy will be in front of you within 3 to 4 days. After your purchase. So that is regarding the sources or the books which I have used in this particular marathon. And regarding upcoming videos, important questions video is going to come in the BCCA YouTube channel, and also MCQs video will also be there in front of you within few days before your examination. So combinedly, part 1 marathon, part 2 marathon, important questions marathon, MCQs videos. What else do you want? Just by looking into these 4 videos, you'll easily able to understand all the concepts with ease and be able to give your examination with so much confidence. Be confident. And yes, what is the speciality of this marathon? Both part 1 and part 2 marathon, I have covered entire 100% syllabus, covering all the concepts in detailed manner with simple language. It is 100% English, so everyone can watch this. I've used a simple language you can easily understand. And most important concern for the students who are coming for cost and management auditors, we have not yet started our preparation. By just seeing this part 1 and part 2 marathon, can we understand the concepts and give our examination? You can. Yes. Even first time listeners, or you haven't started your preparation, start now. Not a problem. See the part 1 marathon, see the part 2 marathon, and important questions video is yet to come. MCQs video is going to come. Make use of all these 4 videos. Start your preparation now. Even by watching these marathons, if you're starting your preparation and giving 100% in your preparation, you can be able to score 80 plus marks in your examination. No one can stop you from that. That's the assurance which I can give you. Yes, even if you're not yet started your preparation, start it now. By watching these marathons, you can easily understand the concepts and you can learn the syllabus which we have to tackle the exam question paper. So yes, that's regarding the entire marathon regarding information. And coming to the classes, recorded classes for June 2025 attempt are also available, and in this recorded class, it is 100% English. It is applicable for June 2025 attempt. Entire 100% syllabus is covered, and this course is inclusive of books. You will get both concept book, workbook, and also my handwritten notes if you're purchasing these recorded classes. And yes, clear understanding of concepts in detailed manner with very much slowly. I've explained each and every concept by taking time very much slowly. You'll able to understand it very easily. I have covered ICMAI material, past term papers, and also MCQs have been covered in these videos. So yes, regarding these recorded classes, in detail video will also be released regarding how much time and what are the classes, how much parts are there for the classes. Regarding the entire details of the recorded classes will be uploaded in a separate video. You can see that and purchase the recorded classes also. So yes, this is a little bit introduction regarding the marathon classes and books. So, and at last, I want to thank you, everyone, students who have watched part 1 marathon and you have liked the part 1 marathon. So here I am in front of you with the part 2 marathon. Make use of both part 1 and part 2 marathon and do learn your concepts with very much easy. So yes, that's regarding introduction of Marathon Paper 17 Cost and Management Audit. After this introduction, you'll directly skip into the marathon classes. I hope you understand all the concepts. If you have any doubts with any of the concept, please do ask your doubts in the comment section or the Telegram channel. I will be there to address those issues or the doubts. I'll make you understand very much easily, even if it is through online mode. Don't worry. Even if it is through chats or any other mode, I will make sure that you will understand your doubts. So that's regarding the doubts clarity also. Yes, thank you so much. Take use of it and all the best for your upcoming examination. You will rock. I believe in you. Believe in yourself. Thank you. Bye.
Yes. So now we are going to start with our section D, forensic audit and anti-money laundering. This is our section D. And in our section D, we have 2 concepts or 2 units. Unit 1 is forensic audit. Unit 2 is anti-money laundering. Now, in this section D, what we are going to see? In forensic audit, we are going to see what is forensic audit, like what the meaning of forensic audit, why we are going into forensic audit, what is the use of forensic audit. We have many other audits like financial audit, cost audit, internal audit, statutory audit. Now, what is the difference between other audits and forensic audit? When we have all the audits in the company, what is the use of this or the speciality of going to forensic audit? That we are going to see the difference between other audits and forensic audit, and what is the reason for conducting a forensic audit in that particular company. If any company is undergoing any forensic audit, what are the benefits that company will derive, and at last who can go on doing this forensic audit. We have certified fraud examiners. Who can be certified fraud examiners? What is the role of them and what are the specialities of them? What are the objective of them? We are going to see all that. And then we are going to see regarding accountants, like accountant auditors. They can also be a forensic auditor. So what are the these concepts regarding to, and we have a one important tool for conducting this forensic audit, which is called as fraud triangle. What is the tool regarding us, and how that fraud triangle is related to this forensic audit? Regarding all concepts, we are going to go in detail in this particular forensic audit. And coming to anti-money laundering, what is anti-money laundering, and what are the concepts regarding anti-money laundering? What is the steps or the process of this money laundering? How we are going to oppose this money laundering to not to happen in that particular entity or organization? What kinds of money laundering we have? And in this cost audit, we are going to see mainly how this money laundering is related to counter financing of terrorism, how this money laundering is related to terrorism activities, how we have to take the necessity steps to control this money laundering and counter financing of terrorism. Those concepts you are going to see in anti-money laundering. This is nothing but an overview of section D. Now we are going to start with forensic audit. Coming to forensic audit. What is forensic audit? Now, we have financial audit, we have cost audit, we have statutory audit, we have internal audit. All these are nothing but statutory compliances, because company has to do it as a statutory purpose or a legal requirement. They are undergoing those financial audit or cost audit. But forensic audit is not a statutory compliance, not a mandatory requirement which should be undergone by a company. But if company wants to know about anything, what are those things? We'll see now. If company want to know about any fraud which is being committed in that particular company, crime which is happening in that particular company, or any asset misappropriation in that particular company, then they can go for forensic auditing. Now, forensic audit is also examination of financial records and financial statements. But the examination of financial statements and financial accounts are also called as financial auditing. Now, what is the difference between financial audit and forensic audit? Both are nothing but examination of financial records and financial statements. But in both the cases, we'll prepare a report at the end. For financial audit, we'll prepare a financial report, and for forensic audit, we'll prepare a forensic audit report. The financial audit report will be just a statutory compliance, will only be in that board's report only. But forensic audit report can be produced in the court of law as a evidence. So it is nothing but a proof which can be held the particular company for guilty of that particular misconduct. So that is the main difference or the main use of conducting a forensic audit. If any company is conducting a forensic audit and they are getting to know that there is a fraud in that particular company, that only report which is prepared can be put in the court of law, and that particular company can be held guilty of that particular fraud. That is the main introduction of forensic audit. I hope you have understood it. Now, getting to our concept 1, introduction regarding forensic audit. So this is my handwritten notes. You can refer the handwritten notes for better understanding. Now, forensic audit. Forensic audit is nothing but an analysis and review of financial records of company or a person to extract facts which can be used in the court of law. So what these facts are regarding about? To detect any illegal action happening in the company, to know if there is any manipulation in the books of accounts, or to know if there is any siphoning of funds. Siphoning of funds means misappropriation of funds, misuse of companies' funds for their own benefits, or they are doing the theft of funds, they are using the funds for their own benefit. That is nothing but as siphoning of funds. So forensic audit is nothing but having an analysis and review of financial records to know or to detect whether there are any illegal actions or manipulation of books of accounts or siphoning of funds. These detection is prepared as a report which can be used in court of law. Now, forensic audit begins with suspicion and doubt. What is the suspicion? Suspicion about whether the company is involved in any fraud or not, whether the assets are being used for company purpose or personal benefits, whether there is any funds theft or not. To know about that, we'll have a suspicion or doubt at the beginning. After that, it will ends with the performance of investigation. Then we go on with the investigation to find out what is fraud regarding to. So that is the basic introduction regarding forensic audit. So that is what I have given in your introduction. A forensic audit is an in-depth examination of individual or organization financial records to collect the evidence that can be used in the legal proceedings. That is our first point which I have given you as introduction. Now, forensic audit can be done in two cases: in case of financial frauds, in case of non-financial frauds. What are these financial frauds? Financial frauds are nothing but to know about fraud, to know whether there is any embezzlement. Embezzlement is misappropriation of funds without authorization. If they are taking any funds, that are nothing but embezzlement, which can be also called as theft of funds or money in the company. Financial crimes: misstating or omitting the material information from the financial statements, or not giving any material information in the records, in documents, that are nothing but financial crimes. So if any of these things happen, that is nothing but financial fraud, which is entirely related to money, finance purposes. That kind of fraud is called as financial fraud. Now coming to non-financial frauds. In non-financial fraud cases also, forensic audit can be commenced. What are those cases? If a company is undergoing into bankruptcy, how the bankruptcy is related to forensic audit? Now, there is a bankruptcy for that particular case. To know the reason for that particular bankruptcy, is any shareholder or any director or any management personnel is involved in that particular cases which led that particular company into bankruptcy, whether the management has not given any proper internal controls to know about that, whether the management has not taken the decisions which benefited the company, they willfully took the decisions which led the company into bankruptcy. So what is the main reason behind this bankruptcy? What are the, if any assets has been taken by the management or not? To know about all these things, forensic audit can be conducted. Now, filing disputes. If, for example, the company is undergoing into any mergers or acquisitions, or taking over any company into their company, or they are getting into any new businesses, there will be a dispute, or in the court of law there will be some legal disputes which has to be taken. In that cases also, to know whether this particular company can be merged with that particular company or not, whether the both businesses are aligning with the same intentions or not, same objectives or not. To know about that, forensic audit can be done. Closure of business. In case of closure of business also, forensic audit can be done. To know what? To know whether there are any hidden assets in that particular company. When business is getting closed, some shareholders or some management can hold the money with themselves, or hide the assets of that particular company for their own benefit. Whether there are any hidden assets, to know about that, forensic audit can be conducted. After that, hidden assets will come to the picture, and they will be utilized to give the shareholders their own money. To know about that also, forensic audit can be conducted. And at last, divorces. Divorces are not between husband and wives or between persons, but between the company and the management. If management is having a conflict of interest between the company and their, if management objectives are not meeting with the company's objectives, the management will intentionally take the wrong decisions which can lead the company into falling down. So to know about that also, forensic audit can be conducted. So these are the two cases or two elements in which forensic audit can be conducted. One is financial fraud and non-financial fraud cases. Now, difference between financial audit and forensic audit. As I have already told you, financial audit is an examination for a statutory compliance. Now coming to forensic audit, it is just an investigation of financial records of the entity to derive the evidence to support of a fraud, and that can be used in the court of law or legal proceedings. So that is nothing but a difference between financial audit and a forensic audit. So that is regarding our introduction. I have told you regarding financial crimes and various legal disputes, which is nothing but non-financial fraud cases. The difference between forensic audit and regular audit lies in the legal implications, as forensic audit often involves in presenting evidence in court. Now, coming into common areas of forensic audit. These are the common areas of forensic audit. Why this forensic audit can be conducted? In which areas this forensic audit can be conducted? Forensic audit can be conducted in mainly three areas. When there is a asset misappropriation in that particular company, when there are instances of corruption, when there are financial statements fraud. What are these? We'll see now. Under these three areas, forensic audit can be conducted, or forensic audit can be started in that particular company. Now, what are the cases of asset misappropriation? When there is a cash theft in the business, when using company's business for fraudulent payments, company's funds are using to make illegal activities payments or doing any fraud payments, in that case also forensic audit can be done. Billing frauds, which means a fictitious supplier is there. There is no supplier at all. We are not getting or receiving any raw materials from that particular supplier, but in our books of accounts we have given an entry regarding we have purchased certain materials from that particular supplier and we have made a payment also. So what we are doing, we are the management is taking the cash from that particular business and showing the entry for that particular cash as fictitious supplier, as they are taking the raw materials from outside, which is nothing but misappropriation of funds. Now, payroll frauds. Payroll frauds can also be done. An employee is working in our organization. There is no employee who is actually working in our organization, but that employee's name is recorded in our books of accounts, and it is recorded as we have paid a salary for that particular employee. That is nothing but payroll frauds for a fictitious employee. Theft of inventory from a company, when inventory or a main particular asset in that particular company is become theft or misused by any management. Misuse of assets, in that case also, these all cases will be lead to asset misappropriation, which can lead to forensic audit. This is the first area where forensic audit can be commenced. Now, second case, instances of corruption. What are these corruption cases? Corruption can be of three kinds. It can be conflict of interest, it can be extortion, it can be bribery. What are these three cases of corruption? These three are also called as corruption. How these are different from each other? We'll see now. Conflict of interest. Conflict of interest is nothing but when individual is making decisions which is against the decision of the company or which is against the interest of that particular management. They are doing that or they are taking the decision on their own benefit. For their personal interest, they are taking that decision. That is nothing but conflict of interest. For example, there is a manager person in that particular company or a key personnel in that particular company who has to give his opinion regarding a merger of one company with the other company. For example, this manager or key personnel is working in XYZ limited company and this company is want to take a merger with ABC limited company. Now, for this merger, the opinion of this person is being asked by that particular company, and this person is closely related to ABC limited management. He has a business relationship with them. So what this person is doing, even XYZ limited and ABC limited are not in a common source of business. Even if they won't have any benefit with this merger, this person is saying that no, when you both are merged into one business, you'll have profits. When he knows that this will lead to losses, he's telling that no, it will be a profitable business, you can go on with that. This is done to deceive the person but to get a personal benefit. That is nothing but called as conflict of interest. That can lead to corruption. Extortion. Extortion is nothing but demanding money or favors through coercion or threat. So by threatening someone, if you are demanding them to give money to go on with any work, that is called as extortion. Now coming to bribery. Bribery is nothing but willfully giving money to any person to do that particular work. So they are asking that person to please do me this work and I'll offer you some kind of money or some kind of asset in that particular place. That is called as bribery. So these are the three instances of corruption: conflict of interest, extortion, and bribery. Now coming to financial statements fraud. What are the cases of financial statements fraud? Fraudulent financial reporting, when financial reporting itself fraudulent. Fraud of material misstatements, when material things have to be recorded in that particular financial statements and they are willfully misstated. Many material information is willfully omitted from that particular statements. That can also be there. Deliberate falsification or omission of any activities or any transactions or events further from that particular statements. Misapplication of standard itself willfully misapplicated. So all these cases are called as financial statements fraud. So these are the three common areas where forensic audit can be commenced. So this is what I have given in my material also. Common areas of forensic audit: corruption, which can be conflict of interest, bribery, and extortion. And asset misappropriation can be due to cash theft, fraudulent disbursement, inventory fraud, and misuse of assets. And when coming to financial statements fraud, it can be omission or misapplication of accounting standards. So these are the common areas of conducting a forensic audit. Is it clear? Now, getting into a concept 3, which is called a scope of forensic audit. What is the major scope of forensic audit? As we have already discussed, forensic audit can be commenced in two cases, which in case of financial frauds also forensic audit can be commenced, which are fraud, embezzlement, other financial crimes. In non-financial cases also fraud can be commenced, like bankruptcy filings, business closure disputes, divorces where financial assets are contested. In all these financial fraud cases and non-financial fraud cases, forensic audit can be commenced, which is nothing but a scope of forensic audit. That is our concept 3. Now coming to concept 4, we have already discussed this difference between financial audit and forensic audit. Financial audit is nothing but a statutory compliance, focuses on ensuring compliance with accounting regulations and provide assurance that financial statements are accurate enough. Now, forensic audit is nothing but focused on investigating financial records to uncover the evidence of fraud or misconduct that can be presented in the court of law. So that is the basic difference between financial audit and forensic audit. Now getting into concept 5, reasons for conducting forensic audit. This also we have already discussed. What are the reasons for conducting a forensic audit? If they have suspected that there is any financial fraud in that particular company, they can go with forensic audit. In case of legal proceedings, like in case of court proceedings where auditors have to serve as an expert witness, in that case also they can go for forensic auditing. Misappropriation of assets takes place in that particular business, to uncover the assets which has misappropriated, they can go for forensic auditing. Business conflicts like merger, acquisition, or business closures, they can go for forensic auditing. Bankruptcy and insolvency, when the company is going into bankruptcy cases or insolvency cases, to uncover what are the hidden assets in that particular company, whether there are assets or funds which are there in the management control, to get that out also forensic audit can be conducted. So these are the reasons for conducting a forensic audit. Now getting into concept 6, investigation methodology of forensic audit. What is the investigation methodology? Nothing but the process of doing this particular forensic audit. We cannot say as a process, but was the investigation steps which can be taken in the forensic audit. We have around 5 investigation steps. What are those? First step is nothing but accepting the investigation. Next is planning the investigation. Third is nothing but gathering the evidence. Fourth is reporting. And fifth is court proceedings. So what are all this? We are going to see in detail. Accepting the investigation, getting into our first step, accepting the investigation. Now, for whom this forensic audit will be assigned to? Forensic audit will be assigned to an independent firm or group of investigators. Why this forensic audit have to give to an independent firm? Why not to a already auditor who is working in our particular company? Because he already know about our company, he can go with forensic audit. No, because that particular forensic audit investigation should be free from any biased opinion, and the investigation should be in a truthful manner. Always the auditor who is coming to do a forensic audit should always suspect that there is a fraud in that particular company. If already auditor who is working in our company is coming and doing the audit, he already has idea regarding our company, so he'll not go on find any fraud or crime. He will just say that no, everything is truthful enough. So for that, independent firm or group of investigators who doesn't know anything about our company should come for forensic auditing. What is the first step? When also this forensic audit is given for an independent firm or group of investigators, what they have to do first, they have to determine whether they have necessary tools, skills and expertise to go forward with that investigation. First they have to check themselves whether they have that proper expertise or skills to uncover that particular fraud or not, whether they are being able to detect what is the error or crime which is doing in that particular company or not. Those auditors have to check themselves. After that, after determining whether they have particular expertise, what they have to do, they have to again train themselves to be more efficient in conducting their work. They have to do their own training and get more knowledge of fraud detection. If they are all satisfied with their expertise, skills, and they have done a proper training, if they are satisfied enough that yes, we can go on with that particular forensic audit and we can detect what is the fraud happening in that particular company, they can go ahead and accept the investigation. So this is the first investigation methodology step which will be taking up, which is called as accepting the investigation. Now getting into second step, planning the investigation. Now they have gotten into the investigation process, they have to plan the investigation. What are the planning steps? First, ascertain the goal of audit being conducted. First, they have to know what is the goal of that particular forensic audit. Why forensic audit is being conducted? Due to misappropriation or due to corruption or due to financial statements fraud. What they are going to search in that particular forensic audit, what they are going to do, find out in that particular forensic audit. They have to fix that as their particular goal. And then determine procedures. Determine procedures to achieve it. They have to maintain a proper procedure. So what will be the first step and what will be the last step? Entire procedure have to be taken up. Use effective tools and techniques. They have to use what are the effective tools and techniques which can help them to uncover that particular forensic audit fraud. Now, regarding this effective tool, we have one such tool in our syllabus which is called as fraud triangle and fraud risk. What is nothing but a fraud triangle and a fraud risk? So, a fraud triangle and a fraud risk is a tool which can be used in the forensic audit that explains regarding three interrelated elements, which are incentive, attitude, opportunity. What are these three elements? Why we are getting into these three elements and why this is called as a fraud triangle? Because incentive is called as a pressure, a motive that drives a person to commit fraud. If he is in need of money or if he want that particular money and he is in financial problems, in that case, for wanting of that particular money, he will commit a fraud, which is a pressure on that particular person, which is a motive. I need this money right now. I want this money. If he is any person who is having a addiction of gambling or any other drugs or something, then he needs money. So to get that money, what he'll do, he can't go and ask his parents or something that I want to go for gambling or I want some drugs to purchase. He can't go. So for that he want illegal money. For that he'll commit a fraud and he will get that money. So incentive is nothing but a pressure or motive to derive that money. And coming to attitude, attitude is a realization and ability to rationalize fraudulent behavior. A attitude of that person who is committing a fraud, even after committing a particular fraud, he is saying that no, I have not done anything wrong, because that company owes me. I am working in that particular company and I have right to take the money from that particular company. He is rationalizing it. Or else he is saying like, I am very closely related to the manager and I are very close friends, and I can have a right to take the money from that manager desk because we are very close enough. I'll just put it back when I get my payback. That is a rationalization attitude which a person will have. He'll not think like it is a wrongdoing or a fraudulent activity. He'll always say like, this is a right of mine doing it. So that is called as attitude. Now coming to opportunity. Opportunity is that enables a person to commit fraud. So there is an opportunity for that particular individual on conducting that particular fraud. For example, there is an open room like this and there are crores of money which has put here in an open box and the door is open. Will no one come and take that money? No, they will come and take that money. If anyone are coming and asking regarding why you have took this money, what that person will say, this is uninspected money, no one is here, so I have come here first, so this will be my money. So what he'll say, no one is here, no one is demanding or no one is taking the ownership of this money, so I came first, so this is my money, I am the owner for this money. Because he has the opportunity to take that money, he will commit that particular fraud. So these are the three elements which leads to fraud triangle. This is a fraud triangle. At one side it will be incentive, attitude, opportunity. So these are the fraud triangle. This can be used as a tool for conducting forensic auditing. So in planning of investigation, they can use an effective tool like fraud triangle to know about the forensic audit or fraud which is happening in that particular entity. So this is a planning process. Identify what is the type of fraud, how long it has been operating, how fraud has been concealed, like it has been done, how it has been come to picture, how everyone has known about that particular fraud. Identifying fraudsters who have involved in that particular fraud, financial loss suffered by the client, gathering evidence to proceed in the court, and to provide that advice to prevent reoccurrence of the fraud. These all should be there in the planning process of that particular forensic audit. So this is our second step or second investigation methodology in forensic audit. Now getting into third investigation methodology, gathering evidence. We have certain techniques that can be used for gathering the evidence. What are those techniques? First, they can go for reviewing the public documents and conducting background investigation checks. So they can go to the public documents, they can review them, they can check them and gather the evidence. They can conduct detailed interviews. They can go to the least working people in that particular organization, like sleeper or a worker or any watchman or something, and they can go directly and conduct the interviews. They can ask regarding the explanation or management doings. They can go and interview them. Gather information from the trustworthy sources. Always when auditor is getting any evidence, that should be from a trustworthy source. Why from trustworthy source? So that the evidence is not also falsified. If he is collecting the evidence but that evidence is coming as a false evidence, then entire forensic audit will go wrong. So evidence which is collected should be from a trustworthy source, that should be reliable enough to get into the forensic audit. Conducting surveillance, he can not only go on and documents, he can not only check the data, he can directly do the surveillance of how the employees are working, how the management is working, how the directors of that particular company are working. Is everything is in under control or not, whether the meetings are conducting or not, he can surveillance that also. Going undercover is not like changing everything get up and all, but he can go on in detail from external environment also and go on verify regarding the organization, environment and activities. Analyzing financial statements. He can analyze regarding the financial statements. After every evidence is gathered, he can analyze whatever evidence gathered also. So this is the third investigation methodology which can be conducted. Now, fourth investigation methodology is reporting. After investigating and gathering evidence, investigating team will submit a report. Now, auditor is there. Under auditor, they will have a team of members, a partners who will be called as a investigating team. That investigating team, after gathering evidence, after conducting forensic audit, at last they have to give a forensic audit report. What will be there in that particular report? Findings of investigation. Whatever findings they have in that particular investigation, that will be in that particular report. Summary of evidence collected. Whatever evidence collected, that will be there. Conclusions about loss suffered for that particular fraud. How much loss has been suffered by company, by shareholders, by customers, by clients, everyone. How fraud was planned and how it is unfolded. How fraud is planned and how it is unfolded, like how it has been committed and how it has been got into picturization. Whole trail of events, the entire trail of events, like from this period to this period, this step to this step, part of everything, how it has been made up. Suggestions to prevent fraud in the future. All these information will be in that particular report. Now, coming to fifth investigation methodology. At last, what they have to do? They have to give that particular evidence in that particular court. Now, planning is done, investigation is done, evidence is collected, conclusions are given, findings are there, everything is there. Now, the evidence has to be given to the court of law. Auditors to be called to jurisdictional court to lay down facts and findings as easy understandable. So this is nothing but fifth step. So this is the investigation methodology, which is our concept 6. Accepting the investigation, planning the investigation, gathering the evidence, reporting and court proceedings. That is the investigation methodology. Now coming into concept 7, need for forensic audit. In my handwritten notes, I have given a 9-step method for fact finding. This is not so important. If investigation methodology question is asked in your examination, you can write that 5 points. That will be more than sufficient. But here it is a 9-step process of fact finding. That is investigation methodology. But this is for a fact finding. Nothing but those 5 points adding on with 4 points. Accepting forensic audit engagement is our first investigation methodology. Now, after that, they will evaluate whether the suspicion is correct or not, whether the allegations which are put in that particular company are correct or not. Next, they'll conduct due diligence background checks. Next, they'll complete the preliminary stage of investigation. Like before getting into investigation itself, what are the matters to be dealt with? Next, checking, prediction, assuming that there is a litigation, which means they will doubt everything, they'll question everything. After questioning, they'll go on with the investigation. Begin with an external investigation, not only internal, checking the records, books, they'll go to the external investigation, like go on to the employees and conducting interviews, go on with the outside environments, going on to the competitors and asking about that particular organization. Begin with the external investigation. Gather evidence required and proofs required. They will gather the evidence, prepare report of findings and at last produce in the court. So this is the 9-step process which can be followed for fact finding. This is not that so important, but you can see it. Now getting into next concept, need for forensic audit. What is a need for forensic audit? Forensic audit is an early warning signal for fraud. So it is an early warning signal which is done to detect the fraud and to determine organization needs. So 5 forensic audit is conducted to detect whether there is any fraud and organization needs. What are these organization needs? Nothing but whether there is an asset misappropriation, to find out corruption, to find out financial statements fraud. Why management wants forensic audit to be conducted? That is nothing but organization needs. Okay. Now, few instances occurrence of which entity direct forensic audit. Check her. Okay. Now, There are certain few instances which can be occurred by which entity can direct forensic audit. What are those instances? Like what are those activities which can lead company to go on with that particular forensic audit? If there are any theft of business information where business systems have been hacked, directly business information itself have been thefted, it has been hacked, in that case forensic audit can be done. Issues identified by whistleblower. Whistleblower is nothing but an individual who is already working in that particular organization, who provides right information to the right person that they believe evidence wrongdoing. So any person who is working in that particular organization, who can be anyone, it could be an employee or anyone. Mostly the employees will be the one who will come and tell about the wrongdoings. So they will be called as a whistleblower. So whatever wrongdoings are happening in that particular business, with an evidence, if he is coming and giving that information to the right person, that in that case that individual will be called as a whistleblower. If any issues are identified by whistleblower, in that case also that can lead to forensic audit. Reconciliation results is identified materially different. If any reconciliation statements are being prepared, like reconciliation between financial audit and cost audit, or reconciliation between cash book and bank book, whatever reconciliation proceedings are happening, in that case there is a huge difference which can directly impact the decision making of that particular entity. In that case also forensic audit can be conducted. Suspicions of fraud or illegal activity. When there is any fraud or illegal activity suspicion in that particular business, in that case also forensic audit can be conducted. Turnover and balances are showing negative results. If negatively turnover and balances are there, not at all profits are there, everything is going under losses, but activities are going in a proper way in that particular business, in all these instant cases this can lead to forensic audit. That is nothing but need for forensic audit. When in any organization any of these activities are being done, that can lead to forensic audit. So that is our concept 7, need for forensic audit. Now getting into our concept 8, forensic audit procedures. What are the procedures to be followed by a forensic audit? We have 4 steps. Professional skepticism. What is professional skepticism? Professional skepticism is nothing but having a questioning mind or doubtful mind. Approach the audit with skepticism and question the authenticity of the financial records. Always they have to question regarding the financial records, whether the financial records are proper or not, whether the amounts are recorded correctly or not, whether each and every material information is recorded in that financial records or not. Always the questioning mindset should be there for that particular auditor. That is called as professional skepticism. That is one of the procedure. And getting to the second point, scientific approach. What is the scientific approach? For example, the other entity is there in which that particular forensic audit procedure has been followed. Now, in our company, we want to take the same procedure which has been followed by the other entity, because it has successfully done it and it has successfully uncovered the fraud which has happened in that particular entity. So, we want to take the same procedure in our company also, because the both businesses or the both line of businesses are similar. We can do so like that, which is called a scientific approach, which means already it has been designed and it has been detected the fraud. Such kind of procedures we are applying it. Use systematic forensic audit procedures designed to detect the material misstatements and fraudulent activities which are already designed. We are using them, that are called as scientific approach. Now, forensic data analysis. What is forensic data analysis? Employ data analysis techniques to investigate potential fraud and misstatements. If you are getting into any data analysis techniques to uncover the fraud, that is called as forensic data analysis. Now, at last, forensic fraud investigation techniques, which we have already discussed as a tool of fraud triangle, address 3 common elements of fraud: incentive, attitude, and opportunity, or conducting interviews, or doing any surveillance or document reviews. All are these techniques for fraud investigation. So these 4 are the forensic audit procedures which can be followed by the entity to uncover any fraud or crime. That is our concept 8. Now getting into concept 9. Till now we have seen regarding fraud. What is this fraud? Fraud is nothing but we know what is fraud. Fraud is nothing but to deceive others. If anyone is doing anything, that is fraud. But what is the actual definition which we have for fraud? We are going to see that. Now, fraud is nothing but a deliberate act, which means doing something or failure to act or refraining to do something to obtain an unauthorized benefit if they are doing something, or restraining to do their own job to get a benefit for oneself or for a institution by deception. Deception is nothing but deceiving others, which means even if they know that other person will not get any benefit, if other person will be having any losses or any um, wrongdoing from that, even then also they are committing that mistake. That is called as deception, to deceive others. False suggestion, giving any false suggestion even if they know that will lead to losses. Suppression of truth, they are not telling the truth about that particular activity. Unethical means doing any illegal means. By doing all these, and not only doing this, which are believed and relied upon by others, by doing all these they are getting some benefit, and this benefit is believed by others that this is legal benefit, then such kind of activity is called as a fraud, which is called as a deliberate act or failure to act to get an authorized benefit by following all these which are believed and relied upon by others, which is called as fraud. Now, what are the examples of fraudulent activities? These are the examples which we have for fraudulent activities, which is called as embezzlement, forgery or alteration of documents, fraudulent financial reporting, unauthorized alteration or manipulation of computer files, digital documents alteration, misappropriation or misuse of resources, authorization or receipt of payment of goods not received or services not performed. As we have seen, fictitious suppliers, even there is not at all supplier, but the authorization for doing the payment for that particular supplier is given by the management, which means management didn't check on that particular supplier. So authorization or receipt of payment also leads to fraudulent act. Authorization or receipt of unearned wages or benefit, which is payroll fraud. Conflict of interest or violation of ethics, if they are having any conflict of interest with the company or doing any violation of ethics. All these are the examples of fraudulent activities. So that is our concept 9. This is the definition of fraud, and these are the examples of fraudulent activities which we have discussed. Now getting into a concept 10, business fraud. What is business fraud? Now we know for fraud, we know regarding forensic audit. Now what is business fraud? Business fraud is nothing but, which can be also called as corporate fraud, which involves illegal, unethical or deceptive actions committed by a company or an individual in their capacity as an employee. For this committing a fraud, he need not be an employee or a person working in the organization. Anyone, if he is doing any act to deceive the company, that will be called as a fraud. But the person in their own capacity as working in that particular entity, if he is committing any illegal or deceptive actions, that will be called as corporate fraud. The individual who is working in that particular business is conducting fraudulent activities. Those will be corporate frauds. So this is business fraud or corporate fraud. Illegal, unethical and deceptive actions committed by a company or individual acting in their capacity as employee of the company. Often extremely complicated and difficult to identify. Usually this type of business frauds are very much difficult to identify. They will not come to picture because they will be doing that particular fraud in such a way that no one will be able to detect it. No one will be able to suspect that particular fraud. Usually takes months to unravel. So coming to complexity, corporate fraud schemes are often highly complex, which means that will be in a huge number and difficult to uncover. challenging to detect, sometimes taking months for forensic accountants to unravel. Scale of fraud. Large scale corporate frauds perpetrated by top executives can exceed to billions of dollars. Mostly this business fraud will not be done by any small person like watchman or any sweeper or any employee who is having a less salary, but who have the entire authorization in that particular company, like top executives will do such kind of corporate frauds, which can go extended up to billions of dollars. Now, who will be the victims for this particular business fraud? Consumers, clients, creditors, investors, other businesses, and even the company itself and its employees can also be the victims of that particular corporate fraud. And coming to consequences, what can be the consequence? It can lead the company to may face severe financial ruin, which can lead to bankruptcy. So, by conducting this for corporate fraud or by happening of this business fraud, the company will lead to bankruptcy or insolvency. So, this is our concept 10, which is called as business fraud. And coming to the last point, recovery challenges. For example, there is a business fraud happened in that particular company in which manager is involved, and he had the benefit of $100 billion of cash, and this fraud has been uncovered after 10 years of period. Now the forensic accountant or the fraud examiner is going to that particular manager's place, for example his home or his office, and going and checking for that $10 billion cash. Will they find out? No. Till now, what it could have happened, the manager could have invested it in some other place. He could have done anything with that amount. So, majorly money obtained through corporate fraud is often irrecoverable. But any kind of immobile property, if he has taken, or any asset misappropriation has happened, they can again take that asset back. They can again take that immobile property back. But money involved cannot be taken back. That cannot be recovered back in cases of business fraud. So that is our concept 10. Now coming to concept 11, reasons for corporate fraud. What are the reasons for corporate fraud? Why corporate fraud happens? The desire or perceived need to attract or retain investors, which means they are telling the investors that my company is very sure enough, our products are the best products in the entire world. Just come and invest in our particular entity and you will get profits in no time. They are trying to get the investors' attention to invest most of money in that particular company, or whatever investors who have already invested, they are trying to retain them. They are telling that investors like, no, our company is performing very well, our company is in profits, and you will get your interest back. So to desire to perceive the need to attract the investors or to retain the investors who have already invested in our particular company. For that, the fraud can happen. Problems or defects with companies' products that they want to hide. If there are any problems with any particular product, if there are any defect in that particular product, will company tell regarding the defects? No, they will not tell regarding defects or complications by taking that particular product. They will always tell like, my product is the best product in this world. You have to buy it and you will be most healthiest person in this world if you take our particular product. So this kind of defects will be done by pharmaceutical companies. They will only tell regarding the tablet uses. They'll not tell regarding the complications or side effects by taking that particular medication. So, desire to attract or retain investors, problems with the company's product. These are the two reasons for committing any corporate fraud. Now, what are the regulatory challenges which we have? Regulatory authorities like SEBI can attempt to prevent and punish the corporate fraud. So SEBI, what they'll do, if they find out any corporate fraud has happened in any business, they'll try to prevent and punish the persons who have involved in that particular corporate fraud. But detection can be delayed because corporate frauds will be in a huge amount and will be conducted by whom? Top executives in particular entity. This will be taken lot of time to be detected, especially in private companies, not required to disclose financials at all. There are certain private companies which are not at all required to give financials. We could be able to detect the fraud which has done in the particular company only if we examine the financial records or financial statements. Now the SEBI does not have any financial records about that particular entity. How they will try to detect it? They will not have any source to find out the fraud in that particular company. So this is nothing but regulatory challenges. The detection can be delayed, and when the private companies does not disclose the financials, the SEBI also cannot take any preventive actions. Now coming to major corporate fraud cases, these are the examples of the cases which has been happened in life, like in practical cases. These are the practical cases in which fraud has been committed. You can write these as examples in your examination for any question which has been asked in the forensic audit. Whatever question which could be asked in the forensic audit, you can write these as examples. Now, what are the major corporate fraud cases? Enron company. What does this Enron company do? The executives hid financial troubles through massive accounting fraud. They have done a massive accounting fraud and they have hid all the financial troubles which they have. Even that company is running in losses, they have showed it as profits. Resulted in bankruptcy, and the Sarbanes-Oxley Act has been introduced for greater transparency. Only after this Enron company case, we had bought a new act which is called as Sarbanes-Oxley Act in 2002. Now, waste management company. What did happen in this particular waste management company? Waste management company, the previous owner who is there in that particular waste management company had done a lots of fraud. He has misstated all the financial records. Now, that particular owner has been exchanged with the new owner. The new owner has been introduced for that particular business. Now, when this new owner has entered in that business, he has found out that all the financial statements are in wrongdoing. There is fraud happening in this particular company. Now, this new owner had gone to the authorities and given all the proofs regarding the fraud and told that till now there has been fraud happening in this particular company. Now I am the new owner and I will pay the penalty for happenings till now, and I will run the business correctly from now. So, previously perpetrated a multi-billion-dollar accounting fraud, survived the scandal under new leadership but faced penalties. There was new leadership, but after paying penalties, it was running correctly. That is regarding waste management. And Forset Best Company. Founder Barry Minkow engaged in Ponzi scheme, fabricating customers. He entirely deceived the customers. He told that customers will get the product. He had collected all the amounts from them, but the products weren't given to the customers. The company collapsed shortly after going public. So that is regarding the Forset West Company. Now, Wirecard Company discovered a $2 billion discrepancy between its books and actual cash. In books, everything is recorded as we have purchased raw materials from them, or we have made the sales of this amount, but no cash amount was recorded. Every entity was recorded as we have done purchases, we have done sales, we have done investment, we have this much of income, we have this much of profit. Everything is recorded but in cash it was zero balance. Led to bankruptcy and the arrest of CEO. Wells Fargo and Company. High pressure sales quota led to employees opening fake accounts. When higher sales pressure is there, employees usually taken more fake accounts, resulted in $billions in fines and loss of clients when uncovered. So, entire fake accounts has been created in this particular Wells Fargo Company. So, these are the cases or examples of the corporate frauds which had happened in the practical life. So, this is regarding our concept 11. This is what I have given here, why corporate fraud happens, and these are the examples of major corporate fraud. Yes. Now we are going to start our next concept, fraud triangle. Fraud triangle has three elements in it: opportunity, rationalization, pressure. What is opportunity? If there are any weaknesses in internal controls, like there is a inadequate supervision or review for the works of employees or works regarding the management or works regarding directors, there is no supervision and reviewing at all, then it is weakness of internal control. When there is no proper separation of duties, when employee is not given saying that this is only up to your duty, you're only allowed till this, you have only access till this work. If there is a proper separation of duties, he know about his duties, he'll only do up to that, he'll not go beyond the powers, he'll not go beyond the rights which he have. But if there is no proper separation of duties, he'll tell that no one will question me because no one told me that this is my duty, I'll go and do that, uh, I'll go to direct CEO room. If there is no unrestricted access, you will go inside any room. So there should be a separation of duties. Management approval for each and everything which is done in the company needs a management approval. If there is no management approval, then everyone will do whatever they want. But if there is a management approval, they'll properly come for the approval from the management. Management will verify regarding that work. If approval is given, they'll perform that particular work. System controls. If controls are proper in that particular system, if internal controls are very proper, there will be proper way of doing any particular thing. The departments will work under that particular internal controls only. The workers will work in that particular internal controls only. So there needs to be everything. If any of these things are not proper, then that leads to opportunity for committing any fraud. So that is the first fraud triangle. Now coming to the second, pressure. It is a motive. Due to personal financial problems, due to any unforeseen expenses, due to personal addictions such as gambling, drugs, unrealistic deadlines, performance goals. This all leads to pressure. For gambling, for drugs, they need money. And for money, what they'll do? They'll go for fraud to earn that money in a fraudulent manner. That is nothing but pressure. Rationalization. I need this money. I'll pay it back when I get it back. I didn't get the raise. The company owes me. These are the two cases where the attitude of that particular person will deal with rationalization. So these are the three elements which cause an fraud triangle. Breaking the fraud triangle. When the fraud triangle can be breaked? Fraud triangle can be breaked only in one element, which is opportunity. Opportunity is given by the company to that particular individual who is committing the fraud. So we can eliminate the opportunity from the fraud triangle by implementing better internal controls, by keeping very stringent rules in that particular entity or organization. We can break the opportunity. Removing one of the elements to reduce fraudulent activities, they can remove the opportunity cause it provides more actionable route to do fraud. So we can eliminate the opportunity and break the fraud triangle. So that is nothing but fraud triangle which I have given. This is fraud deterrence. Fraud deterrence is nothing but breaking the fraud triangle. Now we have concept 13, red flags of fraud. We have red flags. These red flags are in two cases. Employees red flag and management red flag. Okay. Red flags are nothing but warning signals that fraud risk is higher without any evidence of fraud occurring. Red flags of fraud is nothing but there is a fraud happening in that particular company, but there is no evidence of occurrence of that particular fraud. So these are warning signals that fraud is being occurred. These are nothing but red flags of fraud, which has to be always analyzed by the management and the company. If only one or two flags are there in that particular entity, then that is not a very big thing to be overly concerned about. They can only be less concerned about. Just take the proper steps and that will be resolved. But if there are multiple flags, then that should be directly reported to the internal audit department. They will take the properly measures. Okay. Now, what are the red flags? Employee red flags and management red flags. Sudden lifestyle changes. For employee red flags, sudden lifestyle changes. Till now, he used to come by walk. But today, he comes in Benz car. Sudden lifestyle changes. If we ask, he'll tell that this is my own car. He's doing build up, coming to the office late at 10 o'clock and saying that I'll buy this entire company in just 10 days. If anyone is asking, he's saying that I'll buy this entire company in 10 days and you will be working under me. Total lifestyle changes are changing suddenly. Significant personal debt and credit problems. Till now when he comes to office, he used to be very much stressed with his debt problems. He used to always complain about the debt which he is having. I have lots of debt, what to do, how to do it. The salary which I am getting is not sufficient to pay my debts. He used to complain. But suddenly he is coming to the office and saying that all my debts are clear now. I'm free from all my debts. I don't have any personal debt. I'm trying to take a new house, not in debt, buy in full payment. So these are employees' red flags. Behavioral changes. Till now, he used to not have addiction even for a cigarette. But suddenly he's going to gambling, he's going to casinos, he's investing lots of money, he's taking lot of money, he's putting lot of money in those gambling and casinos, and that is sudden behavioral changes. Fear of losing job. Always he's thinking that if manager is calling, if someone is coming and telling manager is calling you, he's fearing that why manager is calling me? What is he going to talk to me? What is he going to ask about? He's having a fear of losing job. Refusal to take vacations or leaves. Even if the head of the company is coming and asking him to, Babu, take leave for 2 days because you are overly stressed. Go and take leave. Go and enjoy with your family. He's saying, like, no, sir. I have very much work to do. I'm very concerned about the profits of company. I'll work my hard. I'll give my 100% to the company. That is refusal to take vacations or leaves. These are all employees' red flags. Now coming to management red flags. Overriding internal controls. Whatever internal controls are there in that particular entity, they're trying to override it. The internal controls are created by the management. Management, they themselves are not following the internal controls. Decisions are dominated by individual or group. One individual or one group are manipulating the decisions which are being taken in that particular company. Shows disrespect to the regulatory bodies. When any regulatory bodies coming to that particular entity and asking about any information, they are not giving the information. That is nothing but disrespect to the regulatory bodies. Policies and procedures are not documented. When any policies and procedures are not documented, that leads to management red flag. No monitoring, lack of experience. There is no experience for that particular manager at all, but he has become manager. No monitoring, frequent changes in bank accounts. When bank accounts are being frequently changed. Excessive and unnecessary year-end transaction. The year-end transaction is not at all required at all, but they are doing year-end transaction to show lesser cost, to do the cost higher. Photocopied or missing documents. Documents are photocopied or missing at all. Reluctant to provide records to the auditors. If auditor is coming and asking about the records to do the auditing, they are reluctant to give, because means they are not giving the records to be audited. Sold companies' assets below market value. When management sells the assets of the business in the below market value. These are the red flags of the management. So these are the red flags of employees and management. Red flags are nothing but early warning signals to detect that there is a fraud happening in the particular company, but there is no evidence of that fraud occurrence. So these are the points which I've given. I've only given 5 and 5 points. Just learn 5 and 5. That's enough. Okay. Reporting suspected fraud or misconduct. If any employee is suspecting any fraud which is happening in that particular entity, he should not directly go and report it. What he have to do, he have to do his own investigation first. He have to know about the fraudsters who have involved in that particular fraud. Why for doing it? To avoid suspected individuals alerting, so that he will not go and alert the suspected individual, or to avoid false accusations. He is doubting that manager is involved in any fraud, but it is not short enough. If he is directly going and complaining about the manager, what will happen if manager is not at all involved? The job of that particular employee may go. So what he have to do, he have to first do the background check whether the manager is actually involved or not, to avoid the false accusation. 2, not to alter suspected individual, to report suspicions to the appropriate authority. Instead, he can do the background checks or he can directly go and report it to the appropriate authority. Clear till now? Concept 13. Now, financial forensics. Financial forensics is nothing but a field that combines both accounting and investigation. If both accounting and investigation is combined, that is called as financial forensics. The main purpose is to discover and gather evidence of criminal activity involving money. Forensic auditing is done to know whether there is any crime, whether there is any fraud, not it is related only to money. But financial forensics is to discover and gather evidence of criminal activity involving money. Financial forensics professionals. Who will be financial forensics professionals? Investigate individuals and organizational financials, determine how they manage them. So these professionals, what they will do, they will investigate individuals and organization financials and determine how they manage them. And also they help to prevent financial crimes and recover lost assets. Researches other businesses to determine their true value. So these are the work which be done by the financial forensics professionals. Why they are doing this? To discover whether there is any criminal activity involving in money. Common areas of financial forensics. We have seen forensic auditing common areas. Now what are the common areas of financial forensics? Financial theft. Customer, employee or individual is stealing money from the organization. That is financial theft. Securities fraud. Types of white collar crime. Sometimes presents false information to the investors. The individual who is working in that particular company itself, they are giving false information to the investors. That is called as securities fraud. Money laundering, process of making money earned through illegal methods look legal. You know what is money laundering. Corporate valuation disputes, finding true value of organization done when one business is acquiring other business. To know about the merger, amalgamation or something, when one business is acquiring about the other business, to know about the corporate valuation, they can go for financial forensics. Tax evasion, to know whether there is any tax evasion in that particular company, whether they are paying their tax properly or not, whether they are avoiding their taxes or not. To know about that, financial forensics can be done. Now, what are the qualities of forensic accountants or professional? Professional is nothing but financial forensics professional. So now we have forensic auditing, we have financial forensics. For forensic auditing, we'll have forensic accountants. For financial forensics, we'll have financial forensics professionals. What are the qualities which has to be maintained by both? They should have a logical mindset. They should have a mindset which is logical way to detect and correct the errors. Give attention to details. For each and every minute detail also attention should be given. Be spontaneous. They have to be very spontaneous to know about the each information. They have to analyze that information right after it is in their hands. They should be very spontaneous. Give value to moral principles. They should give value to the moral principles of that particular organization which they are working for. Question everything or inquisitiveness, nothing but professional skepticism. Good understanding of accounting transactions and impacts. They should have a good understanding of accounting transactions and their impacts on the financials. So these are the qualities of forensic accountants or professionals. This is regarding financial forensics, common areas in financial, essential qualities of forensic accountants. Now coming to concept 17, investigation techniques for forensic accounting. We have seen investigation methodology. Now coming to investigation techniques for forensic accounting. While doing the accounting of forensic, what all the investigation techniques can be done? They can review public documents, conduct background checks, conduct detailed interviews, gather information from trustworthy sources, analyze evidence gathered, conduct surveillance, going undercover, analyzing financial statements. The same step which we have seen in gathering evidence in that methodology. Investigation methodology, we have seen gathering evidence point, which is third. In that everything is there. So that is nothing but techniques which can be followed while investigating the forensic accounting. So this is investigation techniques. Ethical issues in business. So there are some fundamental ethical issues that organizations will face to maintain the integrity. Integrity is nothing but being very honest. Due to these issues, organization loses the integrity. What are the business issues which entity have to face? Understanding ethical standards. The ethical standards are nothing but integrity and trust, diversity and inclusions, compliance and governance. These are the ethical standards due to which it has a understanding ethical standards, integrity and trust. Businesses must promote conduct rooted in integrity and build trust among employees, customers and stakeholders. They have to build the trust. They have to maintain the trust which that customers or employees have on that particular entity, due to which there will be a ethical issue. Will everyone trust in our business? No. Will everyone believe what is telling by the business? No, they will not believe it. So there could be a issues in that particular business. Diversity and inclusion. Accommodating diverse perspectives and backgrounds is vital. Before getting into any business, before getting into any product or something, the background checks has to be done. What is the diverse perspectives? If we are entering into this project, what are the complications we can get? What are the benefits we can get? Everything has to be analyzed. As is empathetic decision making that aligns with core values, because any new product or any new project will directly implement in the decision making of the entire company. So diversity and inclusion should be considered. Compliance and governance. Organizations should ensure that their governance structures reflect ethical standards and compliance requirements. They have to comply with the ethical standards and requirements which they have. So this is regarding understanding ethical standards. Now, harassment and discrimination in workplace. Harassment and discrimination can lead to severe financial and reputational damage. When company is running, then they have to mainly focus on these harassment and discrimination rules which we have. Like if there is any age, any person who is working in our organization who is in a 40 plus years age. So the requirements of that person has to be fulfilled by that particular entity. They have to keep very keen on that. They have to not give more pressure on that particular person because he is so aged. These are under rules, not in real life. Okay. Disability, physical or mental disabilities. If there are any physical or mental disabilities, under that circumstances, they have to provide some requirements to that particular person. Equal pay for boys, for girls, for ladies, gents, on the basis of not following any religion, race or anything, everyone should have a equal pay. Pregnancy, due to pregnancy, they should give certain requirements or certain what we'll say leave or some facilities to be provided for the pregnant ladies, race and ethnicity, without following any religion, race, ethnicity, everyone should be treated equally. If anyone is following religion, no compromises, everyone should be treated equally. Sex and gender identity, whatever they say, male, female, or any other transgender, equally should be respected. So that is nothing but anti-discrimination laws which has to be followed by the company or that business. Harassment and discrimination in the workplace, they have to mainly focus on this. Even a minute mistake in this can lead on entire reputation of that particular business. That will affect the entire reputation of that particular business. Now, health and safety in workplace. Always the company have to focus on the health and safety. If it is mainly industrial companies, chemical sectors, then they have to mainly focus on the safety measures. Employee rights under occupational safety and health administration regulations, employees have the right to have a safe working conditions. Top cited violations, fall protection, if they are working under any construction, then they should have a fall protection. Hazard communication, if they are working under any chemicals or any other gases, then hazard protection should be given. Scaffolding, respiratory protection, if scaffolding is nothing but if there is any kind of in any entity, there is any thing which is affecting the employees, like in respect of their work conditions or in respect of the work done by them, that is nothing but scaffolding. That should not be in a affecting way. That is scaffolding. Respiratory, if they are working under any chemical industries or something, they should give that respiratory protections. Lockout, tag out procedures, power industrial trucks, ladders, safety standards, electric wiring methods, machine guarding, general electricity requirements, these are all nothing but what? Health and safety in workplace. They have to comply with all the requirements. Psychosocial risks and mental health. Not only physical health, also mental health should be taken care with the business. Health and safety concerns extend beyond physical injuries. The International Labour Organization reports increasing psychological risk linked to work-related stress and mental health. So not only related to physical injuries, regarding mental health also should be taken care. Not lots of pressure should be given to that particular employee. Factors contributing to mental health issues: job insecurity, high job demands, effort reward imbalance, low autonomy. So these are the cases of or the factors of mental health imbalance. Whistleblowing and social media content. We have seen as a whistleblowing that if any individual is coming and telling regarding the entities, frauds or entities non-compliance with any laws and regulations, if he is coming and disclosing it, he is called as whistleblower. A whistleblower is a person, often an employee, who reveals information about activity within a private or public organization that is deemed illegal, immoral, illicit, unsafe, or fraudulent. A whistleblowing means calling attention to wrongdoing that is occurring within the organization. The Government Accountability Projects list 4 ways to blow the whistle. What are the 4 ways? Reporting wrongdoing can be one case, or violation of law, second case, to proper authority such as supervisor. A hotline is nothing but which is majorly being done in that particular entity. Like if it is getting into merger or something, or if it is not disclosing any material information to the securities board, which is very hotly done, that is a hotline. Even a inspector general. So these are the 4 ways of blowing the whistle. Blowing the whistle is more formally known as making a disclosure in the public interest. To safeguard the public, if any disclosure is being made that business is not running properly, that is called as whistle blowing. It's important you can do so knowing that you are protected from losing your job. If anyone is coming and disclosing any vital information regarding the fraudulent activities, then he is protected from losing his job, or being victimized as a result of what you have uncovered and made public. So whatever has been uncovered by him or whatever made public by him, he will be protected by law. Ethics of online conduct. Employment status. Employee conduct on social media can influence their employment status. Now if he is being a manager and he is going in the online any social media website and telling bad about the company, that will affect his employment status. Disloyalty. The ethical dilemma often arises when employees post content that could be seen as a disloyal to their employer. In today, what happened is, in that particular organization, manager came and scolded that employee. What he is doing? He is directly going to his Instagram, putting a reel regarding his manager, stating that this is my manager name, he has scolded me like this, this is the doings of this, the manager is like that, manager is like this. He is being disloyal to not entirely to the company, to the manager or his employer. Ambiguity. The complexity of determining whether a post is whistleblowing or disloyal. Ambiguity is between both whistleblowing and disloyal. Whistleblowing is if there is any crime happening in that entity, they are disclosing it. Disloyal, even if good is happening, they are stating it as bad and giving in social media. So the middle line between whistleblowing and disloyal necessities will be ambiguity. Clear social media policies within the organization. Whistleblowing protection. How this can be protected? Encourage reporting. Employees should feel encouraged to report workplace violations without fear of punishment, whether through regulatory channels or social media. So that should be very clear to them, the employees who are working in that particular organization, whether it is disloyal or whether is it whistleblowing. The contents of that particular whistleblowing should be given. Like if really fraud is happening, then you can directly go on tell in the social media. But if there is nothing much, you are only showing your anger on that particular employer, then don't go to social media. So they have to be very clear with the employees. They have to discuss it with the employees. Now coming to the sixth point, ethics in accounting practices. What are the ethics which we have? Accurate bookkeeping. Maintain accurate and ethical accounting practices is crucial for the organization. They have to maintain proper books. Cooking the books. Cooking the books is nothing but, even if nothing is there, they are making the books. Even if there are no profits, they are cooking the books. Engaging in unethical accounting practices can lead to serious consequences. Impact on stakeholders. The fallout from such scandals often affects thousands of jobs and can erode public interest in financial markets, which will impact the stakeholders. Stakeholders are nothing but customers or investors, which will directly affect whom? Stakeholders. This legal response is nothing but, till now whatever has been taken care of, like all these ethical issues in the business, are taken care of with a legislative response. What is the legislative response? A Sarbanes-Oxley Act of 2002 has been brought into picture. Why? To impose stringent financial reporting requirements to protect consumers and investors. Because of these ethical issues, there were certain cases which are being happening in that particular businesses. So a stringent financial reporting requirements has been bought, by which Sarbanes-Oxley Act of 2002. And in all companies, they bought maintenance of accurate financial records, not only complying with tax laws but also to attract investment and foster business relationships. Even it is a small privately held company, they have to requirely maintain accurate financial records. The mandatory requirement has been bought. So these are the legislative responses because of the ethical issues. And non-disclosure and corporate espionage. What is corporate espionage? Corporate espionage is nothing but involves the theft of confidential information such as intellectual property, client data by current or former employees. So whoever working under our employment now or past employees are trying to take the confidential information and disclose it in the public. That is called as corporate espionage. This unethical behavior can significantly harm the organizations, especially those in competitive industries, because directly the reputation will be damaged. To mitigate these risks, companies often implement a mandatory non-disclosure agreement. So the companies will get into a non-disclosure agreement to avoid this corporate espionage. They impose strict financial penalties for violation. If they are going and disclosing any unpublished price sensitive information to the outside, then there will be a penalty which will be imposed on that particular individual. Technology and privacy practices, monitoring employee activities while advancement in technology. Always the employees' activities will be monitored, will have CCTV cameras and all. Employers have increased their ability to monitor employee activities on company provided devices. While their surveillance aims to enhance the productivity and efficiency, it raises significant privacy concerns. Ethical use of surveillance. It will be transparent and employee awareness will be given that you are monitored, you are surveillanced. So these are nothing but ethical issues in the businesses. Clear? Is it so important for examination? No. But yes, can be questioned. Okay? Just refer it. What is there in that particular thing? Because we have only minimal syllabus from the forensic audit, we can't skip. Because it can be questioned. Okay? We have concept 9, concept 19, 20, 21 and 22, 23, 24, 25, 26, 27, 28. So yes, till now we have discussed regarding the fundamental ethical issues that organization have to maintain integrity. So to be enough of honest, they have some ethical issues, fundamental ethical issues. What did we see? Understanding ethical standards, harassment and discrimination in the workplace, health and safety in workplace, psychological risk and mental health, whistleblowing and social media content, the difference between whistleblowing and social media content, ethics in accounting practices, legislative responses. Regarding all these ethical issues, we have legislative response of two. One is Sarbanes-Oxley Act of 2002, and companies have bought a mandatory compliance with the laws and regulations. Non-disclosure and corporate espionage. What is corporate espionage and what is non-disclosure agreement? Regarding all this we have seen. Technology and privacy practices. These are nothing but ethical issues which we have in the business. Now coming into the next concept, ethical responsibilities of the auditor. What the forensic auditor has to do, or not a forensic auditor, what an auditor has to do, what are the ethical responsibilities. These are the fundamental ethical principles which we already know. Whoever the auditor could be, it could be a cost auditor, it could be an internal auditor, it could be a statutory auditor, or it could be a forensic auditor. The fundamental principles are similar: integrity, objectivity, professional competence, confidentiality, and professional behavior. These are the 5 fundamental principles which has to be complied with them. Okay? So these are the ethical responsibilities of the auditor. Just go through with that, similar to the one which we have discussed already. Now coming to the next concept. When anyone is getting into the auditing profession, there are major threats. What are major threats in the auditing profession? We have 5 threats: self-interest threat, self-review threat, advocacy threat, familiarity threat, intimidation threat. What are these threats of? We'll see now. What is self-interest threat? When an auditor has a financial interest in the auditing company, if he has bought any securities from that particular company, if he is having any stake in that particular company, or directly or indirectly, which means their related persons or their relatives are having any financial interest in that particular company. Firm is reliant on client fees. Outstanding fees are due. For example, the auditor has already worked in that particular company as an auditor before itself, but for the past term auditing, they didn't pay him appropriate fees. The outstanding fees are still pending even for this term also. Under all these cases, there will be a self-interest threat. So, threat is nothing but auditor will not be able to give his effectiveness in that particular audit. There will be some barrier between his auditing work. Self review threat. Self review threat is when auditor performs non auditing services like specialized services. If any auditor is giving any investment advisory services or bookkeeping services for that particular entity, or preparing the financial statements of that particular entity. He himself is preparing the financial statements and he himself is coming and doing the auditing of that particular financial statements. That will be taken as a self-review threat. Whatever work done by him, he is reviewing it. That is nothing but self-review threat. Now coming to advocacy threat. Auditor promotes or advocates on behalf of the client which compromises their ability to remain impartial. So, the cost auditor is being very partial to the work of that particular entity. Even if entity is not doing the work properly, even if they are doing any fraudulent activities, he is being partial and supporting and compromising all the things which are done. He is advocating, which means he is telling that every work which is done by that particular company is correct. He is trying to oppose everyone. If anyone is coming and asking what is the management work, this is the wrongdoing by that particular management, he is doing as a advocate. Like he is trying to oppose that particular person against the company. Familiarity threat. When auditor becomes too close or familiar with client's management or personnel, leading to biased decisions, and that will be called as familiarity threat. He is becoming too close to the management. Intimidation threat. Auditor is covered auditor is covered, threatened by clients, management, directors and other individual influence. So he is doing his work under the influence, under the management threats. If he is conducting any work, then that is called as intimidation threat. Under all these threat cases, the work done by the cost auditor is not true and fair. He is doing it on the partiality basis or doing any biased basis or through any threat or something, because if he is having any interest on that particular entity, overallly the auditing is not done properly. It is based on some influential thing. It is not independent. So these are nothing but the threats which we have. This can be asked as a question. Okay. Major threats in the auditing profession: self-interest threat, self-review threat, advocacy threat, familiarity threat and intimidation threat. Now coming to the next. To minimize the risk of ethical violation, auditors and organization must take some proactive steps to uphold these principles. We have certain ethical principles which has to be followed by the cost auditor. Now, to avoid that the ethical violations are there, to avoid the violations from that principles, auditor and organization both combinedly have to take some proper steps so that organization will work properly and auditor will do the ethical requirements properly. What are the steps? Steps are of 5. Honestly assess the needs and resources. What is the basic need of that particular organization? What are the optimum utilization of resources? He have to honestly assess it. Conduct honest evaluation of ethical risks that organization might face and ensure that these are sufficient resources to address the risk. First, he has to identify what are the ethical risks are there and how much resources will be consumed to overcome those risks. That is honestly assess the needs and resources. Next, establish a strong foundation. There needs to have a written standards of ethical workplace conduct. What all should be done by the employees? What is the ethical workplace conduct? On that there should be having a written standards. Training on standards. Regarding standards, the proper training should be given to the employees who are working. Companies' resources for advice on ethics. What are the available resources which are there for the employees to be work on? Regarding that information also should be guided to the employees. Performance evaluation based on ethical conduct. Frequent performance evaluations, like what is the performance levels of that particular employee, that also should be given to them. Disciplinary system. A proper disciplinary system has to be maintained. Now, next, build a culture of integrity from top down, which means if management is in honest and integrity, the employees also will be honest. Ethical leadership. Talk about importance of ethics regularly. They should always communicate with the employees that you have to be very ethical enough, you have to be honest, you have to come to us if you have any trouble. They have to frequently communicate. Inform employees about the decisions and actions that impact them. If there is any impact of the decisions and actions which is taken by the management on the employees, that actions have to be disclosed to them, that have to be communicated with them. Yes, you have threat or you have any effect on this particular decision, but the effect will be rectified by us. We will handle about that effect. You don't have to worry about that. That assurance should be given by the management to the employees. Uphold promises and commitments to stakeholders and employees. If they gave any promises regarding we'll give bonuses if we have a 30% of increase in our profits, if we have any 20% hike of our profits, we'll provide you bonuses. If they're promising it, after getting off the 30% profits rise, the bonuses should be given. The promises which are given for the stakeholders and employees should be upholded, which means to be maintained. Acknowledge and reward the ethical conduct. If any employee is properly maintaining the ethical conduct, that should be rewarded, that should be appreciated by the management and upper level authorities. Hold violators accountable, especially leadership positions. If anyone are doing any wrongful things or doing any violations to the ethical principles, and if they are in the leadership positions, they have to be held accountable, which means they have to take the responsibility for their liability. That is nothing but having the integrity from top down approach. That means management have to take care of the entire thing. Now, keep a value focus in movements of big and small. Like what will be the value focus in the big events and the small events? HR policies, fairness and integrity. When the HR policies are being implemented, those policies should be fair enough and to be integrated. Reward system and reward ethical behavior. As we have discussed, if any employee or any person, individual working in the organization is conducting with the ethical behavior, that should be rewarded. Hiring and retention. Prioritize candidates with strong ethical behavior. From when hiring itself, they have to hire the persons who has a strong ethical behavior. Performance management. Integrate ethical conduct into performance evaluations. Not only being honest enough with the work done by them, even in their work also they have to be honest enough. They have to conduct their work in a proper way. Promotion decisions. Promote individuals who continuously demonstrate integrity, who are all continuously following the ethical principles. Those kind of candidates should be promoted, which means the boost up confidence, or they should be motivated from time to time, that you are way more giving to our organization, like you are the major, you are playing the major role in our organization. This year's profits are only because of you. Like the company's managers will usually do that. The employees who are working from day and night, they'll usually keep them on their heads. They'll usually praise them, like you, because only because of you we got our bonuses, only because of you we got this project, you have worked so hard regarding this project. Everyone will praise them. Timely they have to be motivated. So that is regarding keep a value focus. And at last, we have to re-evaluate and revise as needed. If anything to be re-evaluated or revised again, that has to be done. Conduct risk assessments, survey employees, hold focus groups, and measure the progress. Everything should be revised and re-evaluated. So these are the steps which can be done to minimize the risk of ethical violation. Okay. Honestly assess needs and resources, establish a strong foundation, build a culture of integrity from top down, keep a focus in moments like big and small, re-evaluate and revise as needed. Now, the next. In the steps we have seen, for minimizing the risk, there needs to be a effective ethics program. We have seen that there are certain code of ethics, principles of conduct, principles of standards, and that has to be having some characteristics. What are the characteristics to be had to have a effective ethics program? Freedom to question management without fear. If any employee needs to be honest enough or has to work with an integrity, then he shouldn't have a fear of questioning the management. The employee should be given assurance that he has a freedom to question management without fear. Reward for ethical conduct. He should be rewarded for ethical conduct. No rewards for questionable practices. Like if there is any management is doing any wrong or management work is affecting the employees, then they can go and question it. But whenever the management is doing any work which is not related to employee but related to decision making part, will employee have any right to question the management? No. Regarding that, management practices cannot be questioned by the employee. So no rewards for questionable practices. Management practices cannot be questioned by the employee. Positive feedback for ethical behavior. If he is complying with the ethical behavior, positive feedback should be given. Preparedness to address misconduct. If any misconduct has been occurred unwillfully, then the employees have to prepare enough to address that particular misconduct. Willingness to seek ethics advice. If they want any advice from the management or higher authorities, they should be in a condition to seek advice easily. So these are the characteristics of having an effective ethics program. Clear till now? Now we have seen regarding ethics, code of conduct, principles of standards that employees have to follow it, management have to follow it, and we have seen what are the ethical issues will be there in the business. Till now, is it clear? Now the next point is challenges in implementing these effective ethics policies within the company. We have seen that there are certain characteristics of ethics policies. Now if these ethics policies have to be implemented in company, there will be certain challenges. What are those challenges? Resistance from employees. If any new system has bought into the management or bought into the company, employees will not easily adopt with that particular circumstances. They will question it. Why? If, for example, till now no review system has been there in that particular company. Now management is coming and telling that we are going to implement effective ethics policy. So what we are going to do is we are going to frequently review your performance and going to reward your performance. Now the employees, what will they think? So you don't have trust on us, so you're going to review about our work. The employees will try to defend themselves. So you're trying to say that you don't trust our work, so you want to review our work. Employees will take it in a wrong way. So there could be a resistance from the employees. They'll not be able to in a position to easily accept that ethics program. Cost of training and implementation. Even employees accepting it, they have to be properly trained to get about that ethics program. So training cost can be higher. Inability to determine ROI of ethics policies. Even if this effective ethics policies is brought into the organization, the return on income from that particular effective ethics program cannot be identified by the entity, because these is a factor which will be there in the employees management. These are about the personal behaviors. Will that be having the direct effect on the profit? No. Will that be have a, for example, this particular year on this day I'm implementing the effective ethics policy in my company. Will I be guarantee, will I can give a guarantee that the month end results will be higher? Will I get profit? No, because effective ethics policy is only bringing now. It has to be properly implemented. Everyone has to be cope up with that. Everyone has to understand it. Everyone has to properly follow it. Only then in a quiet period, like in 6 months or after 1 year, we can get a return on income from it. But right after implementation, we cannot expect any return on income. So these three could be challenges in implementing the effective ethics policy into the company. Clear? Now, we have code of conduct and forensic audit. Till now we have seen forensic audit, we have seen financial forensics, we have seen regarding the ethical issues in business. Now we have come to the forensic audit code of conduct. What is the code of conduct of forensic audit? We have a code for it. Like we have insolvency and bankruptcy code, we have forensic audit code. This code is applicable to two persons: certified fraud examiners and associate auditors. These certified fraud examiners are nothing but the individuals who are qualified with the examination of certified fraud examination which has been conducted by the institute. Like we are cost and management accountants because we are writing CMA exam and we are getting that qualification. Similarly, certified fraud examiners will have a proper exam. After qualification, they can be CFEs. Okay, certified fraud examiners. So this code of forensic audit will be applicable to the certified fraud examiners. Nothing but forensic audit can be done by whom? Certified fraud examiners, or else can be done by associate auditors. The auditors who had been appointed by the board, appointed by that particular entity, those will be associate auditors. So auditing, forensic auditing can be done by certified fraud examiners or associate auditors. We have certain standards on certified fraud examiners, code of ethics which has to be followed by certified fraud examiners, and role of certified fraud examiners. And also the code of conduct in forensic audit, the same thing which we already know: integrity, professionalism, responsibility to clients and public, and commitment to excellence. These are the code of conduct in forensic audit, and this code is applicable to certified fraud examiners and associate auditors. We have certain standards for certified fraud examiners, as we have standards for financial auditors, for cost auditors. For certified fraud examiners who are going to conduct the forensic audit also, we have certain standards. Standards on professional conduct, standards on examination, standards on reporting. We have 3 standards for certified fraud examiners. What are those standards? We are going to see now. Major threats we have covered, steps in reducing ethical risk covered, characteristics of effective ethics policy covered, challenges in implementing ethics policy covered, code of conduct in forensic audit. Now we have come to the concept 24. Clear till now, right? Having any doubts? Did I skip any concept? No. Now, the Associate of Certified Fraud Examiners sets ethical standards for professionals involved in the forensic auditing, ensuring that they perform at the highest levels of integrity and professionalism. So we have certain standards for certified fraud examiners who are going to conduct the forensic audit, so that the work done by them is integrity and with professionalism. These standards guide the auditors in conducting forensic audits ethically and responsibly, emphasizing their duties to the clients, public and their peers. Peers are nothing but under them who they are working for. So forensic audit is conducted why? To have the ethically and responsibility towards their clients and public. What are those things? Key ethical principles in forensic audit: integrity, professionalism, responsibility to clients and public, and commitment to excellence. These are the key ethical principles in forensic audit. Applicability of code: it is applicable to certified fraud examiners. CFEs are nothing but professional standards is mandatory for all CFEs. CFEs are required to adhere to the standards in all professional activities. Failure to comply can result in disciplinary actions. So they have to comply with these standards. Associate auditors: while associate auditors of associate CFEs like certified fraud examiners are not legally bound by the code of professional standards. These standards are only applicable to the certified fraud examiners, not to associate auditors. They are encouraged to follow them. These are not mandatory compliance, but if associate auditors want to comply it, they can comply it. Striving to uphold these standards demonstrate a commitment to the professional growth and ethical conduct. What are the standards for to have a professional growth and ethical conduct? So, getting into the standards of professional conduct, what are the standards which we have? Standards of professional conduct is the first standard. Standards of examination for certified fraud examiners is the second standard. And standards of reporting for certified fraud examiners is the third standard. We have 3 standards. Clear? Now, we are going to go with the first standard. Standard of professional conduct for certified fraud examiners. Integrity and objectivity. What is integrity? To recognize that public trust is built on this. So, whatever work done by him, on that work only public trust will be built on. Conflict of interest. Any conflict must be disclosed to the client or employer before getting into engagement. If he is having any direct or indirect interest on that particular entity, he have to disclose regarding that interest. Objectivity. Ensuring unbiased judgment within the scope of their work. To give an unbiased judgment is a objectivity. Reputation. They must always act in a way that preserves the reputation of the profession. Legal compliance. They must comply with the court orders, dispute resolution bodies, criminal behavior, and should not encourage others to engage in illegal activities. So these all are integrity and objectivity. Now coming to the next. Professional competence. Competence in assignments. When working under that particular assignment, he has to make sure that he is competent enough, which means no unqualified behavior should be done. If he is not qualified to act under that particular assignment, he should not handle it. Whatever work is qualified to be handled by that particular certified fraud examiner, he should only take that. If he is not competent enough, he should not work on that. Now, continuing education. CFEs must fulfill the continuing professional education requirement set by the associate certified fraud examiners. So whatever the ACFE institute is having, like whatever professional educations, go on degrees they have to have, go on certifications they have to have, that should be obtained by them. Due professional care. The work done by them should be diligence, should not be negligent. Always there should be skepticism, evidence-based conclusions, planning for fraud examinations, supervision. Everything is coming under due professional care. Understanding with clients and employer. Initial understanding, as we have seen in the cost auditor's case, like the appointment of CFE is done with a proper care or not. Those are the initial understanding. Changes in scope, whether there are any changes in scope after the appointment or not. Now, E point is communication with the clients and employer. CFEs are obligated to communicate any significant findings discovered during the fraud examination. If they have discovered any significant findings, that have to be communicated with whom? With the client or employer under who they are working with. Confidentiality. CFEs must not disclose any confidential or privileged information obtained during the fraud examination unless given explicit permission by proper authority, by lawful or by court order. So these are the standards on professional conduct. Professional conduct is nothing but integrity, objectivity, professional competence, due professional care, understanding with client and employer, communication with client or employer, and maintaining confidentiality. Clear with the standard? Now, getting into the next standard, standards of examination for certified fraud examiners, like how the examination should be done by them. Fraud examination. How fraud examination should be conducted? Conduct of examination. The primary objective is to gather the evidence and information that is complete, reliable, and relevant to the case at hand. So, how they have to do the examination? To collect evidence, they are doing the examination. That is the major objective. And whatever evidence is collected is reliable, is accurate enough, and it is relevant to the case. If it is unrelevant, it is not needed to be collected as evidence. The evidence should be relevant for that particular case. In that way, they have to do the examination. Prediction and scope. These priorities should be continuously reviewed and adjusted as the examination progresses to ensure the examination remains efficient and focused. If there are any predictions they done before, like for example, if they have predicted or suspected regarding any fraud in the material thing or regarding financial statements, that should be analyzed again and again because they are not sure of it. There should be a skepticism mind, isn't it? So, there should be a continuous review according to that prediction and scope. If there are any suspicions which they have put on at that starting of audit engagement, that should be prioritized first and that should be reviewed continuously till that final opinion. Objective and awareness. CFEs must remain alert to the possibility of conjecture, whether there are any unsuspected things which are already coming into audit. Like during the audit, till now they haven't suspected anything, but now they are suspecting it. So they should be very much aware, remain alert about the things. Like at first planning, they have suspected about something, but during the audit, they shouldn't only focus on that thing. They should focus on many other things. That is nothing but possibility of conjecture. There could be any possibility of fraud anywhere. Starting, the goal was different, but during the audit, the goal can change. Unsubstantiated opinions and bias from witnesses and others involved. So it shouldn't be any influence. It should be not biased, or it should not be on the unsubstantiated opinion. Without any evidence, the opinion should not be given. Without any proper records, the opinion should not be given. So this is nothing but a fraud examination. This is how examination should be done by the cost auditor. Certified fraud examiner. Now, evidence. The evidence to be collected by that audit examiner. How kind of evidence will be collected? Control and management. CFE must establish effective control and management procedures for handling documents, data, other evidence obtained during the examination. Not only collecting is important, preserving it is also important. That should be maintained in a confidential manner. It should not be in such a way that everyone are easily accessible to it. Extent of documentation. CFEs should adjust the depth of documentation according to the specific needs and objectives of the clients and employer. So whatever documentation or evidence prepared by that particular CFE should be in such a way regarding the client and employer objectives, like how the client wants about that report, how the what is the objective of main of this forensic audit is conducted. According to that, the evidence should be maintained. If, for example, the forensic audit has started to know about the material misstatements, but during the audit, the forensic auditor has got to know that there is a corruption also. Now, the first objective should be regarding the material misstatements and the next should be regarding the corruption. So whatever the main objective of client and employer should be the main basis for the evidence collected, and after that what are all the external evidences collected, that should also be included. Clear? So that is regarding the evidence and fraud examination, standard of examination for certified fraud examiners. Clear with the second standard? Now coming to the third, standards of reporting for certified fraud examiners. Now they have collected the evidence, they have done all the work. Now regarding the reporting. General reporting guidelines, flexibility of report format. CFA's report can be delivered orally or in writing, may include both fact witness and expert witness testimony. The report can be oral or in writing and can include the actual fact witness, like who is the witness for the actual fact, or expert witness also, like there is an expert who have already worked in that particular field and he knows what could have happened. So he can be also taken as a witness because he is so expert enough. So certified fraud examiner's report can be oral or written. What all should be the written contents? Evidence based reporting should be there. Neutrality on legal guilt or innocence. He should not be sure enough that the company is in guilt, the company is innocent. It should be equal. He should only give his opinion and evidences. He should not conclude anything. Okay? Always the report should be based on the neutrality. He should not be on the innocent side. He should not be on the guilt side also. So that is regarding the reporting for certified fraud examiners. Clear with these standards? So what are the three standards? First is professional conduct. Second is examination. Third is reporting. So these are the standards which we have for certified fraud examiners. Now, after standards, we have certain code of ethics. What are this code of ethics? Code of ethics for certified fraud examiners. For professionalism and due diligence should not be negligent and the work should be in a professional manner. Avoidance of illegal or unethical conduct. They should not get into any illegal actions. Integrity and competent enough. Only the work which is competent and which will be done by them, they have to do it. Any work should be done in a honest and a fair manner. Compliance with court orders, impartial testimony, they have to comply with the court orders if there are any. Evidence-based opinions should be there. Confidentiality should be maintained. Full disclosure of material matters should be given. Continual improvement should be there throughout his audit proceedings. So these are the code of ethics which are there for certified fraud examiners. Clear? Now, coming to the next, what is the role of certified fraud examiners? Why they are being appointed? To identify fraud. So, identifying evidence of fraud is the main role. Conducting interviews and writing reports. Proactively evaluating fraud risk. So, these are the three roles which will be done by the certified fraud examiners while conducting the forensic audit. Clear? Now, regarding professional opportunities, this is not so much important, like how forensic auditing is getting being implemented in the world, in today's world, like what are the opportunities which we have. This is nothing but our institute itself is having a forensic auditing course which can be studied and you can become a forensic auditors. This is just opportunities which we have in the outside world. This is not relevant for the examination. Okay, so that is regarding the forensic auditing, forensic audit. Clear? Clear regarding forensic audit? Having any doubts? No? Clear? So what is important in forensic audit? Examination perspective. Regarding forensic audit, what I would suggest is go with the handwritten notes. Okay? Go with the handwritten notes for quick revision. Even in this material, how many pages it is? It is like 15 pages or something. In handwritten notes, it is 15. But handwritten notes is much simpler. You'll not have much in detail. You'll just have headings. So just by revising headings, it will be more than enough for you to revise the entire concepts of forensic auditing. So go through with the handwritten notes. Majorly, you have to remember the fraud triangle and fraud risk. The question from fraud triangle will be asked. Common areas of forensic audit can be asked as a question. Investigation methodology can be asked as a question. And regarding business fraud, corporate fraud. Regarding business fraud, a question can be asked from concept 10. Fraud triangle concept 12. Concept 13, red flags for fraud. What are the red flags for fraud? Question can be asked. Regarding financial forensics, question can be asked. And regarding essential qualities of forensic accountants, question can be asked. And regarding all these ethical issues in business, just go through with them. Okay, this ethical responsibilities, even if you're not learning it, you'll be frequently learning it, so you can attempt it. Okay, so don't focus it in forensic auditing, as you're already learning it in cost auditing. Just keep it simple. Okay, and major threats in auditing profession. What are the 5 threats? The question can be asked. Self-interest threat, self-review threat, advocacy, familiarity, intimation. And the next, you can directly go to the code of conduct and forensic audit. You can directly skip into the certified fraud examiners. Like what are the roles which they have, what are the standards which they have, what are the code of ethics of certified fraud examiners. Majorly focused regarding the forensic audit, basics of forensic audit, business business fraud or corporate fraud, financial forensic, because these are the main 3 concepts which we have. And you can go to the certified fraud examiners. So majorly focus on these 4 concepts in the forensic audit. Clear? So that is regarding forensic audit. Only 3 question papers are there for new syllabus, and this has been asked as a new question. Like this is a new syllabus. In new syllabus only this has been brought as a. So we don't have more frequent questions. Like we can expect any question in the coming examination. We cannot only stick with the past 3 attempts question paper. So you have to learn everything, but majorly focus on the things which I have given you. Okay? Yes. So yes, now we are going to start with our next unit in section D, which deals with anti-money laundering. So from this, we can get around 7 marks question. We can get MCQs. So for 7 marks question, this is important. Now, what is anti-money laundering and what we are going to see in this particular unit? These are the concepts which we are going to read in this particular unit. What is money laundering first? Next, what is anti-money laundering? What is money laundering? And the prevention of money laundering is nothing but anti-money laundering. Why we have to understand regarding anti-money laundering? Why companies have to inbuilt in their system the procedures or practices of anti-money laundering. Connection with terrorism financing. How this anti-money laundering or money laundering is connected with terrorism financing. How this money laundering and terrorism financing is interrelated, that we will see. Cycle of money laundering. What is cycle of money laundering? You would have already know by law, placement, layering, integration. Now, these are the sections which we have in this particular unit, which you have to remember. Okay. Section 2 deals with definitions, in which we will see regarding definitions of, we have around 3 definitions. We are going to see regarding that. And section 3 talks about a money laundering definition. What is the money laundering definition will be seen in section 3. And section 4 is regarding punishment of money laundering. Section 5, attachment of property. If any property is related to money laundering, then how will that property be attached to it? That deals with section 5. Section 6 deals with adjudicating authority. Who is the adjudicating authority related to money laundering concept? Section 16 deals with power of survey. What is the power of survey in relation to money laundering? Section 17 deals with power of search and seizure. Section 18 talks with the power of search a person. So how a person can be searched to, and what are the powers such a person. Section 19 talks with arrest. Section 21, retention of records. If any records are being like an evidence or proof of money laundering, can that be retained with the authorities people? How many days that can be retained? That we are going to see in section 21. And section 23 talks about interconnected transactions. So how any transaction, if one transaction is related to money laundering, another transaction, will that be related to it? Will it is interconnected, interrelated, interconnected? Regarding that details we are going to see in section 20. And section 24 talks with presumption and onus of proof. For example, in this circumstances or in this particular environment, in this particular area, if I have found out any documents related to money laundering or any money related to money laundering, and if any person is in that particular area, will that person be also involved in the money laundering case? Will he be having a presumption of something, and how he have to himself prove that he is out of the money laundering case? Regarding that topic we are going to see in section 24. And other than these sections, we have certain things. Who are the legal and regulatory authorities under this particular money laundering? Financial Intelligence Unit of India, Enforcement Directorate, RBI, SEBI, other regulatory authorities. So all these are the legal and regulatory frame authorities which work under the money laundering cases. So what they are going to do? What are the functions of Financial Intelligence Unit in working about the money laundering cases? All these we are going to see. And regarding the reporting entities, who are the reporting entities? Bank, financial institutions. What type of reporting they have to do to these legal and regulatory authorities to bring the principles of anti-money laundering? Regarding that we are going to see. And at last we are going to see Financial Action Task Force. How this Financial Action Task Force has been got, and what are the recommendations which are given to the accountants by Financial Action Task Force. This is the concepts which we are going to deal in this money laundering. Clear till now? So this is the introduction of anti-money laundering. Now getting into the concepts of anti-money laundering. Starting with introduction, what is money laundering? Money laundering is a process of taking money earned from illegal activities. Not only taking, but also disguising it as a money from a legitimate source. So the money is derived from an illegal activity, but they are trying to convey or show it as a legal money. That is nothing but money laundering. How these activities or illegal activities can be known as drug trafficking, embezzlement, or any kind of theft doing, or any kind of doing any related to illegal activities like selling of drugs or doing human trafficking, any of the things, any kind of illegal activities through which they are deriving money. All those activities, if they are deriving that money and showing that money as a legal, legitimate money, that will be nothing but called as money laundering. The aim is to make it appear as if the dirty money is, whatever the dirty money they have earned, they are trying to show it as a clean money. Black money is being converted into white money. How the process that converting of black money into white money, we are going to see that way money laundering. So it can be used without raising suspicion. This act is a serious crime. So any person involving in anti-money laundering will be a criminal, and he will be against the criminal offense. Now, what is money laundering? We have understood. What is anti-money laundering? Anti-money laundering refers to the procedures and laws set up by the financial institutions to prevent and detect the money laundering. So we have certain laws, we have certain procedures regarding the prevention of money laundering, which are called as anti-money laundering. Financial institutions are required to monitor customer transactions, report suspicious activities to the authorities. Who are these financial institutions? Nothing but banks, insurance companies. Those, what they have to do, they have to always monitor and verify regarding the customer transactions. Whether there are any huge amounts of money getting into any accounts only once in a while or once in a year, and the amount is now lump sum payment, like 10 crores has been suddenly come into one account. First, what the banks have to do, they have to try to ask the justification from that particular person, like how you have derived this money. If the justification is not so satisfied from that particular individual, what that financial institution have to do, directly go and report it to the legal authorities, and they will get into the anti-money laundering. They will try to investigate what is the reason for that particular amount involved in that particular account. So they have to monitor the customer transaction, and if any suspicious activities have been coming to the view of that particular institution, they have to report regarding suspicious transactions. So that is the procedure or laws to prevent the money laundering, will be called as anti-money laundering. Now, getting into important anti-money laundering legislation, like how this has been brought up, everything. The United States was first among the countries to address money laundering. So, this money laundering concept has been first introduced by United States, through which, through an act which is called as the Bank Secrecy Act in 1970. So they bought this act regarding money laundering concept, and first has been introduced in United States. This law required financial institutions to keep records of transactions and report suspicious activities. So what this Bank Secrecy Act done? They have told banks to maintain proper records of all customer transactions. The entire record of customer transactions will be maintained by them, and if they have got any suspicion regarding any transaction, that should be reported to the entity. Those are the concepts which are there in this particular Bank Secrecy Act, which has been brought in 1970. Over the years, this act has been stringented to improve enforcement. So they have strengthened all the rules. They have made every rule as a punishable rule, or a very stringent rule, so that no bank can avoid following that particular laws and regulations. The Financial Crimes Enforcement Network is the agency responsible for enforcing BSA in the US. So this Bank Secrecy Act will be done through a network called as Financial Crimes Enforcement Network. It missions to the protect the financial system from abuses such as money laundering and terrorism financing. So this network will help a Bank Secrecy Act to get the information regarding money laundering and terrorism financing. So this is regarding the history of AML. Like when did it start? In 1970 in United States, this anti-money laundering concept has brought up. Now, after in 1989, the Financial Action Task Force was created as an international body to establish global standards for combating money laundering and counter-terrorism financing. So even in 1970, the United States have started, after all the countries have known the importance of this money laundering concept. So everyone wanted an international body which will give the guidance regarding this money laundering principles. So in 1989, a financial action task force has been brought up, which talks about the combating money laundering and counter terrorism of financing. And also, this Financial Action Task Force has brought up an international monetary fund in which 189 member countries also play a crucial role by ensuring the stability of global financial system and addressing the risk posed by money laundering. So there was a monetary fund, international monetary fund, in which all the countries have been involved in that particular fund. Why? To compete whether there is any money involved in money laundering, whether there are any transactions of money laundering which are helping the terrorism to do it. So to know everything, all this, we have one Bank Secrecy Act, international, this Financial Crimes Enforcement Network, Financial Action Task Force, and International Monetary Fund. All these are working for preventing the money laundering and for counter financing of terrorism. Clear enough is the history of money laundering. Now, why the money laundering has to be understood? Because globally it is estimated that 2% to 5% of world's GDP, or approximately US dollars 800 billion to US dollars 2 trillion annually, is through money laundering. So through a survey done, they have got to know that among 2% 3% to 5% of world GDP is involved in money laundering. So the illegal activities or the crime networks are becoming more and more, and what they are doing, they are taking that illegal money and putting it to the GDP, into the society as it is of illegal money. So no one is knowing about that illegal money. Everyone thinking that this is a white money. No one is knowing about that black money. Through what? Through smuggling, through illegal arms sale, through embezzlement, insider trading of information, bribery, organized crime like human trafficking, drug trafficking, prostitution. By doing all these activities, what they are doing, they are procuring the illegal funds and putting into the market as it is of legal funds. So to avoid this entire network to be happened in the society, what we want, anti-money laundering, it means to first we want to understand what is anti-money laundering. So that is the importance of AML. Now, what is the connection of money laundering with terrorism financing? Money laundering is closely tied to counter financing of terrorism. How is it linked? While AML deals with the source of funds of dirty money, counter financing of terrorism focuses on destination of funds into terrorism activities. Now, there are many of terrorists who are trying to uh, destroy the country or do the illegal activities. How the funds are getting to them? Who are giving money to them? That is nothing but black money. So someone is doing any activities through legal sources. If they aren't able to put it into legal funds, what they are doing? They are funding it to terrorism. So terrorisms are growing day by day. How they are getting that arms and ammunition which they are converting into terrorism equipment, those are nothing but through money laundering funds. Both AML and CFT are critical for preventing illegal money flow in the global finance. So, is it through any activities done by terrorism financing, or it through legal money to illegal money to legal money? Both are trying to do the same thing to the society. They are trying to destroy the society. So both are easily interconnected. Why financial institutions should understand AML? Regulatory compliance. Because it is a regulatory compliance. Financial institutions must comply with AML regulations to monitor the transactions and report suspicion activities. So financial institutions have to follow AML regulations because it is a compliance tool for them. And reputation and shareholders value. Implementing robust AML measures helps institutions protect their brand reputation. If any bank is into AML regulations, what they can tell the public and investors, they can tell them my bank or our bank is involved in anti-money laundering regulations. So you can be reliable on us. You can directly invest your money into us because that funds are very safe in our hands. No money will be involved in money laundering cases. Even if you want your money back, we will be able to give it back. So they can give a confidence or they can build a trust into the society. That could be a case. Avoidance of penalties. Because it is a compliance tool, they have to comply. If they are not complying it, that will lead to penalties. So they can avoid penalties because of getting into AML regulations. Cost reduction. Effective AML system reduces cost associated with what kind of cost can be reduced. They will not be able to give any fines. Penalties will not be paid. Regulatory fines will not be imposed. Employee and IT costs needed for manual transaction reviews. If they are getting into AML regulations, banks and financial institutions will help them in customer transaction reviews. They need not to employ any other person to do that customer reviews, isn't it? So they will get the help of financial institutions. So in that case, they need not to do the recruitment separately for that particular region. So that could be done. Capital reserves set aside to manage risk exposure. If AML regulations are already in that particular entity, the risk is lower for that particular entity. So they need not to aside a separate capital for controlling the risk. So this all will be the utilities or advantages by which AML regulations can be done in that particular entity or company. Companies following AML regulations, these are the advantages which they can get. Now, getting into the definition. So, this is the basic introduction regarding AML and terrorism, counter financing of terrorism. Is it clear? Introduction is clear. So, why we are learning it? What is it about? Everything is clear. Now, getting into the definitions part, section 2 talks about definition, in which we have three definitions. One is what is proceeds of crime, what is property, and what is scheduled offense. Regarding scheduled offense, question can be asked, which has been asked in the previous attempt. Now, getting into the first definition, proceeds of crime. What is proceeds of crime? Don't try to remember the subsection and clause. You can just remember section 2. Okay? Now, proceeds of crime. It means any property derived or obtained directly or indirectly by any person as a result of criminal activity relating to scheduled offense. What is scheduled offense? We'll see now. Or the value of any such property. So, any money directly or indirectly derived through property or derived through scheduled offense is nothing but a proceeds of crime. Till now you have understood it. Now, getting into what is property. Property is nothing but property or asset of every description, whether corporeal or incorporeal, which means corporate asset or incorporate asset, movable or immovable, tangible or intangible, includes deeds, instruments, evidencing title to or interest in such property or assets wherever located. So wherever it could be located, in India or outside India, it could be deeds, it could be shares, it could be instruments, it could be documents, whatever it could be. It is movable, immovable, whatever it is, everything is called as a property. So if any property derived from value of any such property. So any person is selling this property and getting the property. It could be a proceeds of crime. Scheduled offense. What is scheduled offense? Scheduled offense means the offense is specified under part A of schedule, or the offense is specified under part B of schedule if the total value involved in such offenses is 1 crore or more. In part A of schedule, what is there? Normal cases like um, any human trafficking or drug trafficking, those are the cases in part A, which is not very stringent, or which does not the offenses which does not lead to major penalty or major imprisonment. Those are the offenses which are there in part A. But part B cases are like if it is related to narcotics drugs cases or military arms and ammunition cases. In those kinds of offenses are in part B, which will have a major offense, or which will have a more punishment and which will have more imprisonment cases. So those are the part A and part B. So part B offenses are less offensive, part B are major offensive. The offense is specified under part C of the schedule. Part C is also there, but is not so important. Okay, so we have part A and part B and part C are scheduled offenses. And part B offenses involving 1 crore or more. The amount will be 1 crore or more. So that is regarding scheduled offense. So these are the three definitions which we have under section 2 of anti-money laundering. Now getting into section 3. This is the definition of money laundering. Whatever question is being asked in your examination from anti-money laundering unit, first point should be your money laundering definition. Okay. Now, whosoever directly or indirectly attempts to indulge or knowingly assist or knowingly is a party or is actually involved in any process or activity connected with the proceeds of crime and projecting it as untainted property or claiming it as untainted property shall be guilty of offense of money laundering. Untainted, which means it is not illegal. They are showing it as illegal. So, projecting it as legal property or claiming it as legal property when they have derived that particular proceeds of crime, whether by attempting or whether by knowingly assisting it or by knowingly being partly involved in it or actually being involved in it, whatever it could be. If they just know and being silent, they are into money laundering. If they are actually involved in it, they are into money laundering. If they are assisting someone to, you can do it and I will be supporting to you, that is also involvement in money laundering. whatever the case could be, if they are getting any benefit directly or indirectly through that particular procedure, that are nothing but money laundering. So this is the actual definition. You have to remember it without missing any one word also. So the same words you have to write. Attempts to injure, knowingly assess, the same words you have to write because this is the definition. Okay. Now, getting into the cycle of money laundering. What is the cycle of money laundering? You already know we have three stages: placement, integration, layering. Now, the entire process can be broken down into three stages: placement, layering, and integration. First stage is placement. The initial stage where illegally obtained money or black money is introduced into the formal financial system. So this is the case where illegal money will be brought into the market. Criminals use various methods to place this money without drawing attention, without knowing by others. They'll bring this illegal money into the market by doing what? Payments to the cash-based transaction will not go any online transaction. Every transaction will be done on cash basis. Criminals use businesses that deals with lots of cash, such as restaurants, retail stores, deposit illegal money along legitimate sales. So they are doing legal sales, but the amount which they are getting for that sales are illegal money. Payments for false invoices. By doing false invoices, generating false invoices, they are making a payment to it. Creating fake transactions through invoices to move illegal funds. Smurfing. Smurfing means depositing small amounts of money across multiple accounts. So small amounts are being deposited into multiple accounts to avoid detection by AML system. Like, from where did this money actually start from? From which bank account this money actually derived from? To know about the legal source of that particular bank account, what they will do? They'll try to shift that money to various accounts. The amounts are kept below threshold limits that would trigger suspicion. It would be like just 10,000 rupees in one account or 5,000 rupees in one account, small amounts, not going into lakhs or something, crores or something. That is called as smurfing. Moving money into trust and offshore accounts. They'll move money to trust accounts and offshore accounts. Aborted transactions, transferring money to a lawyer, accountant, financial intermediary, then cancelling the transaction shortly after. They'll book the lawyer that we have a big case, you have to assist us in this particular case, and we will be paying you fees in lakhs or something. And he will check everything and he'll say that yes, I'll be into this case. The amount will be transferred. After that, he'll not take this call. So like that, no one will suspect the lawyer, isn't it? No one will question the lawyer because they are in the higher position. So whoever they are in higher position, they will target them. They will send the money to them so that that will not be treated as illegal money, because that will be as a legal source because they are in the higher position. So in all these cases, illegal money can go into the market or society. Now, second stage, layering stage. Once the money is placed, the layering stage begins. Now, the money has been brought into the market through any of the sources. Now, what is the next thing? This stage involves obscuring the origins of the funds by moving the money through multiple complex transactions across different accounts and jurisdictions. So, from where this money has been first started, to know about that, or even if suspicion has been arised, they will not have any evidence to know where this has been started from. Who is the major hand behind it? Not to know about it, they'll start layering procedure. Transferring money between accounts or across borders. From this account to international account, they'll try to transfer it. Converting the money into various financial instruments. They'll try to invest in the stock markets. Buying stocks, bonds, different currencies. They'll try to change it to the currency. Using shell companies or offshore companies. Shell companies are nothing but bogus companies. They'll try to invest everything into a bogus company which is not having any transactions. Offshore accounts, they'll try to invest in the offshore accounts. The purpose of layering is to serve the link between the money and its illegal origin. From illegal origin to money, they'll try to break the link between the origin and the money, making it hard for investigators to follow the truth. So that is the process of layering. Now coming into integration. final stage. In the third and final stage, the laundered money is reintroduced into economy in a way that makes it look legitimate by investing it into real estate, luxury goods, legal businesses, purchasing assets like cars, yachts, art, giving the appearance of legitimate wealth and creating legitimate business revenues to explain the origin of money. So they'll convert entire illegal money into legal money. So that is our third process of money laundering. Even it is a frequently asked question in the law, it could be asked in first audit also. Okay. Now getting into our section 4. We have seen two sections, section 2 1, section 2 definition, section 3 money laundering definition. Now coming into section 4, punishment of money laundering. What is the punishment? The penalties include both rigorous imprisonment and fines, depending on the nature of crime and laws involved. As we have seen, scheduled offences, that in that case, general punishment for money laundering. Any person found guilty of money laundering is punishable with rigorous imprisonment for a term of 3 to 7 years along with a fine. This is a general punishment. Punishment for money laundering related to narcotics, which is guilt in part 2 of schedule. For part 1, the punishment is only for 3 to 7 years. For part 2, if the proceeds of crime involved in money laundering are related to offences under Narcotic Drugs and Psychopathic Substances Act 1985, the punishment becomes more severe in such a case. It could go up to 10 years also. The offender shall also be liable to a fine, which could be almost 3 times of that particular amount involved. So this is the punishment regarding anti-money laundering or money laundering cases, which deals with section 4. Now coming into section 5, attachment of property involved in money laundering. What is the provisional procedure for provisional attachment of property? How the property related to money laundering will be attached to the procedures. Now, any authority, who is the authority? Director or deputy director has the authority to provisionally attach property suspected of being involved in money laundering. If director or deputy director is suspecting that this property is derived through a money laundering money, this property has been bought by that particular individual through illegal money or dirty money, black money, in that case, they can put that property as a money laundering property. They can put an attestation on that as a money laundered property. Conditions for attachment. For attaching, what are the conditions that deputy director and director have to follow? To exercise this power, the concerned officer must show that based on material in his possession, there is a reason to believe recorded in writing. They should give in writing what are the reasons that they believed this property is into money laundering property. That proceeds of crime, a person is in possession of proceeds derived from criminal activity, risk of concealment or transfer. There is a risk that these proceeds of crime may be concealed, transferred or dealt with in any way that could interfere with any proceeds or investigation related to confiscation of proceeds of crime. Which means it could also be a transferred property. No? Why you think that this person is involved in money laundering? Someone is involved in money laundering, they could have transferred it to this particular individual. This particular individual could be non-guilty of fraud also, he could be innocent also. How you are saying that this person is actually involved in that particular property dealings? It could be a transferred property, it could be a concealed property, that could be any other property, it could be just a benami of that particular property, it could be a concealed property also. So that reasons that why he is believing that that individual or that property is involved in money laundering has to be given in writing. Prohibition of transfer or property. After that, the officer can issue an order to prohibit the transfer, conversion, disposition or movement of such proceeds or property. If that property is taken into money laundered property, then he can order not to transfer it, not to make a movement of it, not to convert it or not to do any deposition of that particular property. He should not have any right to do anything of that property. Duration of attachment. Till when they can give the attachment? Order remains valid till 180 days from the date of starting to put the attachment for that particular property as a money laundered property, up to 180 days that can be valid. After 180 days that will not be valid. In this period of 180 days, they have to give their opinion, or they have to what to say, they have to make sure that this is money laundering property. That has to be set by the court of law. If it is confirmed that it is money laundered property, that will be confiscated by the authority. If it is not proven, that should be left off after 180 days. Submission to adjudicating authority. After issuing the attachment order, the officer must forward the order and the supporting material to the adjudicating authority. Regarding adjudicating authority, we'll see in section 6, which will further evaluate the case. When director or deputy director is sure that this has been money laundered property and they have attached it as money laundered property and they have got a stay for 180 days. During this period of 180 days, what they have to do, they have to forward the case to adjudicating authority. Adjudicating authority will investigate regarding that particular case. Now coming to adjudicating authority, section 6. Section 6 of law outlines the establishment, composition, qualifications, functions and the terms of adjudicating authority. Everything regarding adjudicating authority is in section 6. Now what is the composition of adjudicating authority? What is the members who are there in that particular adjudicating authority? A chairman, 2 other members can be there in that particular adjudicating authority. What are those 2 members? Out of 2 members, 1 member must have experience in the field of law, and one member should have experience in finance, accountancy and administration. The central government appoints the chairman of adjudicating authority. So that is the composition of adjudicating authority. Now what should be the qualification of members? Member with expertise in law. 1 member should be having expertise in law. That member should have a qualification. The person must be qualified to be appointed as a district judge, or the person must be a member of Indian Legal Service and should have held a post in grade 1 of that service. If he is qualified in any of these cases, he will be considered as an expertise in law and can become a member of adjudicating authority. Now, member with expertise in finance, accountancy and administration. The other member expertise, how that will be decided? If he is having a qualification as a member as specified in the rules based on experience in finance, accountancy and administration. Like we have courses, higher PG courses for finance, accountancy and administration. If he is qualified in that particular degrees, then he can be expertise in that and he can become a member of adjudicating authority. So this is the qualification. Now, functions of adjudicating authority. What are the functions which they will do? Jurisdiction by benches. The jurisdiction of adjudicating authority is exercised by benches. There will be adjudicating authority. Adjudicating authority will separate the benches based on the jurisdictional area. Like adjudicating authority will be common for one area. Like for this Royapeta, there will be one bench. For next Kindi something, there will be other bench. For next Egmore something, there will be other bench. There will be different benches to conduct the money laundering cases. Notification by central government. The central government will specify by notification the areas where each bench of adjudicating authority will exercise its jurisdiction. So, where the power of the jurisdiction will be there, the central government will give the notification. According to that, the benches on that particular jurisdiction, they will work on that. Now, coming to the duration of office and terms of condition. Till how much years the chairman can work, till how many years the members can work. The chairman and every member of adjudicating authority will hold office for a term of 5 years from the date they assume their role. From the date of appointment up to 5 years, there can be an appointment. No chairman or member is allowed to hold office after reaching the age of 65 years. So the retirement age will be 65 years. Salary and allowances. The salary, allowances and other terms and conditions of service for the members shall not be altered to their disadvantage after that appointment. So once the appointment is fixed, they have accepted the payment, they have accepted the scope of work. After appointment, there shouldn't be any changes which will affect that particular chairman or member. If they are trying to increase the salary, they can do it, but they cannot decrease the salary, which would not affect that particular chairman or member. So this is regarding adjudicating authority. Clear? This is section 6. Now coming directly into section 16, we don't have between sections. Okay, we have directly section 16, power of survey. Now section 16 gives the power to survey, grants certain officers in the power of survey. Who are those officers? We'll see. This power enables an officer to enter and survey a property or premises. So what they can do? They can do the inspecting necessary records available on that particular premises. Whatever records are there, they can investigate on that. Verifying proceeds of crime linked to money laundering. If they think any of the money in there or any of the jewels in there or that property itself is related to money, they can verify it. Examining any transaction related to the proceeds of crime that might be discovered on the premises. If on that premises there are some invoices regarding transaction, they can do examination for that particular invoices. Assisting with any other proceedings or investigation under the PMLA Act. If they have any other proceedings or investigation things which they want to do it, they can do it according to PMLA. The officer must record reasons for conducting the survey and document any findings obtained during the survey. But before getting into survey itself, what is the reason for doing survey has to be given in writing format by that particular officer. This helps maintain transparency and ensure the officer's actions are justified. So before getting into survey itself, they have to give a written document regarding why survey is being conducted. So that is regarding section 16. Now, survey is cleared. Now, search and seizure. Section 17, power of search and seizure. This section grants the director or officer authorized by director not below the rank of deputy director. So, the director or the officer or the deputy director will have powers to search and seizure records or property based on the belief that money laundering activities are involved. So, okay, they can go for search and seizure. What are the conditions? Suspected money laundering. They should have a belief that the money laundering has been committed. There is a cases of money laundering, but there should be a suspicion. Then possession of proceeds of crime. The officer suspects that the person is in possession of proceeds related to crime, that particular individual is related to it. Possession of relevant records. The officer suspects that the person holds the records relating to money laundering. Possession of crime-related property, that is having any property related to crime. In any of these cases, the search and seizure can be conducted. Authority is granted for search and seizure. Who can go for? Like what are the authorities or what are the powers given for search and seizure? The officer can enter and search buildings, places, vehicles, vessels, aircraft where they believe such records are stated. If access is restricted, like locked doors and safes, the officer can break the locks and go in. He can just do the CID. With his leg, push the door, go in. Seizure. Any records of property found related to the proceeds of crime can be seized. Marking identification. If any records are there and those records can't be taken from that particular entity, they can mark the identifications where they think it is related to money laundering. Inventory. If any inventory is there, can make an inventory or note of items or records. They can make note of it. Like what are the inventories they are trying to seize it or what are the records they want to seize it. They can directly take with them or they can make a record and they can say that this should not be touched because this is seized. Examine on oath. The officer may examine any person found in possession of relevant records or property and oath in matters related to investigation. Oath is nothing but whatever I am saying is truth. When in court cases we'll see in Bhagavad Gita they'll put the promise like everything which has been told by me under this area is truth. That is the oath. So they can examine any person on oath. By getting the promise, they can examine. So these are the powers which any officer who is going to search and seizure can have. Clear? So that is regarding section 17. Now section 18. This is regarding premises. This is regarding records. Now power to search a person. Section 8. Section 18 of Prevention of Money Laundering Act grants the authority the power to search a person. Even searching a person, they have a power. If the authority has a reason to believe, with the reasons recorded in writing, that the person has entered, secreted, hidden something or on their person, like they have any hidden assets or hidden information regarding that any other thing, they can go and directly investigate that particular person, or has possession, ownership, control over any records or proceeds of crime. They think that that particular person is holding anything, they can go and search that particular person, which might be useful or relevant to the proceeds under PMLA. Then the authority can search the person, seize any such records or property that could be useful for the proceedings. If that person is holding any records or property, they can seize that also. Now, section 19, arrest. They have searched, they have seized, they have done the survey, they have understood whether there is any person involved in that particular thing or not. Now, after that person has been done with the investigation regarding arrest under section 19. Certain officers, the authority has granted the power of arrest. Who can arrest? Deputy Director, Assistant Director, or any other officer authorized by the central government through general or special order. Any of this officer can go to arrest the person. What are the conditions for arrest? Has to have a reason to believe that the person has committed an offense and punishable under PMLA. Records the reasons for belief and writing. If all two conditions are satisfied, they can arrest a person. Post arrest obligations. After arresting, what are the obligations that have to be followed by these authorities? Once the person is arrested, the arresting authority must inform the arrested person of grounds for their arrest. Not to do like an Vijay Philip Prakash Raj will be asking like why you have bought it, why you have bring me here. Will ask, let me sleep. The comedy thing. Inform the arrested person of the grounds for their arrest. What is the reason for arresting them should be informed to them. Forward a copy of arrest order along with supporting material to the adjudicating authority. Even the power is given to the deputy director or director. They have to send a copy to the adjudicating authority. Produce the arrested person before the Supreme Court, judicial magistrate, or metropolitan magistrate within 24 hours of arrest. Within 24 hours of arrest, they have to send it to the court. So these are the obligations which arresting authority has after the arrest. Clear regarding the arrest? That is section 18. Sorry, section 19. Now coming to section 21, retention of records. Can they retain the records after the search and seizure or survey? Procedures and conditions under which records seized or frozen during the investigation can be retained. Yes, the records can be retained. But for how much time, and what are the conditions for retaining? Conditions for retention of records. If records have been seized under section 17, section 18, search through a search, seizure, or through survey. If any records have been found out, frozen under section 17, if the investigation officer or any officer authorized by director has reason to believe that these records are needed for inquiry, if through any of the reasons they have bought the records, such records can be retained for up to 180 days from the date of seizure or seizing. Rights of the person. There are some rights of the person, like if the person to whom that records belong to want to take a copy of that record, they can take copy of that record. Or they want to take xerox of that record, they can take xerox of that record also. The person from whom the records were seized or frozen is entitled to obtain the copies of retained orders. If they want, they can take copies of that. So that they will not be telling like you have changed or you have manipulated it My records were actually proper. You have changed my records. So not to tell like that, they can also keep records of it. That own person can also keep records of it. After 180 days, what will happen after 180 days? After 180 days, the records must be returned to the person unless otherwise they granted the permission from the adjudicating authority. If after if completion of 180 days also, the deputy director or the director who is investigating has not come with the evidence regarding the records, but they have still the suspicion that this records are holding something, then they can go to adjudicating authority and get the permission for extra 180 days to do the investigation by giving the reasons regarding why till now it hasn't been found and what is the reason that they believe that within 180 days they will be able to find it out. They have to give the proper details regarding that and can get the permission from the adjudicating authority for additional 180 days. The records must be returned to the person unless the adjudicating authority grants permission to retain or continue freezing the records beyond 180 days period. Before extending the retention or freezing period, the adjudicating authority must be satisfied that the records are prima facie involved in the money laundering. That these are the reason for money laundering. If it is so, then they can give the permission for retaining it. The records are necessary for adjudication under Section 8 of PMLA. To find out regarding PMLA or money laundering, these are the main records. These are the main proofs. In that case, they can give the permission additional to the 180 days. Now, getting into next concept, Section 23, interconnected transactions. When money laundering involves two or more transactions and one or more of these transactions is proven to involve money laundering. See, one person has involved in two transactions at the same time. One is the transaction with illegal money. One is the transaction with legal money. Now, what the authorities will think is, the authorities will presume that both the transactions are of money laundering. Unless otherwise that particular individual proves that this transaction is not involved into money laundering. Only that this transaction is involved into money laundering. If he is able to prove that, then that particular transaction will be taken out from the money laundering. But he is unable to prove it, then both the transactions will be considered as money laundering, even if the other transaction is not involved into money laundering. Clear? So that is interconnected transaction. When money laundering involves two or more transactions and one or more of these transactions is proven to involve money laundering, then for the purpose of this adjudication or confiscation under Section 8 or the trial of offence for the money laundering, it will be presumed that the remaining transactions are also part of interconnected transactions related to money laundering unless proven otherwise. Meaning, if one transaction in a series of related transactions is proven to be linked to money laundering, the law assumes that the other transactions are also involved unless evidence is provided to disprove their connection. Clear? Now, Section 24, presumption and onus of proof. This is also same regarding interconnected transactions only. The onus of proof shifts to the accused in the money laundering cases. Now we have told that he have to prove himself. What is the onus of proof? The responsibility of proving that under whom is there? The accused person. He himself has to prove that he is not involved in money laundering. If his friend is coming and proving that he is not involved in money laundering, that will not be taken. Okay? He himself has to be the onus of proof. Presumption of guilt. If a person is accused of money laundering, it is presumed that the proceeds of crime were involved in money laundering unless accused proves otherwise. If any person or that individual is proven as money laundered, like he is involved in any cases of money laundering, then whatever things that he holds, the property which is having, the gold which is having, the money which is having, everyone will think that all the properties, all the money which he is holding is from money laundering. No one will think that half of the money is from truthful and half of the money is from illegal. Everyone will think that all the properties holding his is money laundering. This provision makes it easier for the prosecution by shifting the burden of proof to the accused. So, the authority who's having the power of investigating that particular person, what they can think that everything is money laundered. I don't have to think what is legal and illegal. I am thinking that everything is illegal. If you want, you can prove it. If it is not illegal, you prove it yourself. So the responsibility or the burden of proof showing is on your side, not on my side. I'll not investigate what is legal and illegal. I'll think that everything is illegal. If you want, you can prove it. Who must prove their innocence and the property in question is not linked to money laundering. So the onus of proof, the responsibility of getting the proof, the burden of proving it is on the accused person, not on the authority. No one can come and question why you have not investigated the entire thing. Like no one will come and ask. Even if this property is involved in money laundering, not other properties are involved. You should have investigated each and everything in detail and accused only that person for this property. No one can ask the authority like that. If authority has reason to believe one property is involved in money laundering, he can take entirely all the properties, he can seize that person and get that person into arrest. So that is regarding concept 14. Here. Now, sections are completed. Now getting into legal and regulatory framework on India. Like who will be the authorities who are working for this prevention of money laundering. Clear till now? Having any doubts with sections? No? Remembering section number, section name and concepts of sections are important. Okay? Now, legal and regulatory framework in India. First getting into financial intelligence. Financial Intelligence Unit of India established by Government of India on November 18th of 2004 is a national agency responsible for dealing with suspect financial transactions. So what they will do? They will deal with the financial transactions which are of suspicion and which has been introduced or established by whom? Government of India has established on November 18th, 2004. Financial Intelligence Unit of India, FIUIND is Financial Intelligence Unit of India, okay? Coordinates with the national and international intelligence. It is based on both international standards and national standards. Investigation and enforcement agencies to combat money laundering and related crimes. So what they will work on for preventing this money laundering and any crimes related to money laundering. They'll basically work on that. It reports directly to the Economic Intelligence Council headed by the Finance Minister of India, to whom they have to report. Financial Intelligence Unit officers have to report directly to Economic Intelligence Council. Who will be the head of this Economic Intelligence Council? Finance Minister of India. So these are the workers who are working under the government. Clear till now? Now, what are the functions of Financial Intelligence Unit of India? Collection of information. They have to collect the information regarding cash transactions report, non-profit organizations, like if there are any funds which are transferred, like in lump sum payments to that NPOs or not. They have to get the information like that. Transaction reports from non-residents. If there are any non-resident lump sum payment transactions, regarding the transactions report have to be bought. Cross-border wire transfer reports. If there are any cross-border transactions regarding that report. Purchase or sale of immovable property reports. Suspicious transactions report. All these reports have to be obtained by whom? Financial Intelligence Unit, through banks, through financial institutions, through insurance agencies, or through any other of organizations. Now, analyze the information. Information is gathered. Now they have to analyze the information on having a suspicion that everything is related to money laundering. They should have a suspicion and review and analyze regarding it. Financial Intelligence Unit of India analyzes the information to uncover patterns of suspicious transactions that may indicate money laundering and other financial crimes. So, on what basis they will do the analysis? To get any information regarding the money laundering. Sharing of information. The agency shares valuable financial intelligence information with national law enforcement intelligence agencies, regulatory authorities, foreign financial intelligence units. So So with all these, they'll try to share the information. Combinedly all together will fight against the prevention of money laundering. Central Repository. Financial Intelligence Unit of India acts as a national database for reports received from various entities. So if any of the other countries want to know about the database of money laundering, just by looking into this Financial Intelligence Unit reports, they'll get to know about the India's money laundering cases. Coordination. It enhances the coordination of financial intelligence collection and sharing, both domestically and internationally, to fight money laundering. If any international companies also want to get the information from financial intelligence unit, they can get that information regarding money laundering. Research and analysis. Financial Intelligence Unit of India identifies money laundering trends and developments and conducts research in this particular area. They'll do the research to how to get to know more effectively what are new techniques which can be brought in the organizations, banks or institutions, so that if any money laundering or lump sum payments are brought into the business, they'll know right after. So these are the functions of financial intelligence unit. Clear regarding FIU? So this is thing which you have to write if any financial intelligence question has been asked in your examination. Now coming to the second legal authority or legal regulatory, who is called as Enforcement Director. The Enforcement Director is responsible for enforcing the PMLA by conducting investigations to trace assets derived from the proceeds of crime and ensuring their attachment. So what will these work for? FIUs will try to uncover the evidence for money laundering. They'll try to collect the information, analyze the information whether the money laundering is there or not. Now, Enforcement Director will investigate regarding the trace of assets. Like what are the assets related to this money laundering? They'll do the investigation directly. ED role includes prosecuting offenders, like arresting them, prosecuting them, seeking confiscation of the property. They can directly get into the investigation, like doing the CBI thing. They'll not go into like police stations or something like that. They don't have to go to court for getting the confiscation. They can directly bring that person into their own control and do the interview regarding it. Involved in money laundering by the special court. They can take the permission from the special court and seek the confiscation of the property from that particular person. Powers of ED. What are the powers of Enforcement Director? Imposing penalties for non-compliance with PMLA. Directly, Enforcement Director can impose the penalties on that particular person. Powers also include provisional attachment of property. They can attach that property as a money laundered property. Survey operations. They can survey regarding the operations. Search and seizure of assets. Arrest person. Retention of property and records. They can retain the property and records. These are the powers which ED has. Clear? So that is regarding Financial Intelligence Unit and Enforcement Directorate. Now, the third legal authority is Reserve Bank of India. As Indian Central Bank, the RBI plays a significant role in shaping and enforcing financial regulations under the PML. How RBI is related to this legal regulatory? Like Enforcement Director will do the investigation. Financial Intelligence Unit will collect the information from banks. Like how RBI is related? Because RBI is controlling all the banks which are there. So if any suspicious transaction is getting, who is the main responsibility to get that suspicious transaction? RBI has that responsibility. It issues guidelines for the customer due diligence, enhanced due diligence, and transaction monitoring to ensure compliance with anti-money laundering laws. So RBI will give the guidelines for all the banks under it to follow CDD and EDD. So they have to follow customer due diligence. Every customer is truthful to us. Every customer is giving all the information regarding us in a truthful manner. They have to maintain a trust with the customers. Also, enhanced due diligence. They also be truthful to the customers and to have a transaction monitoring from time to time. These guidelines will be given to all the banks from the RBI. So that is the work which will be done by the RBI. Now SEBI. What will SEBI do if there are any shares which has purchased from any illegal money or not, if there are any lump sum amount directly invested into stock market, if there are any bonds or documents which have been purchased through illegal money or not, that will be checked by SEBI. SEBI regulates the securities market in India and enforces PMLA guidelines for securities transaction. It will give the guidelines regarding to know about the information of illegal securities transaction. It ensures that securities related activities follow anti-money laundering rules. Now, other regulatory authorities like insurance regulators, pension regulators, various sector specific authorities help implement PMLA guidelines with their own domains. If insurance companies are there, whether the insurance paying amount is proper or not, whether that is through legal sources or not, that will be checked by those. So this is regarding the legal and regulatory framework in India. FIU, Enforcement Directorate, RBI, SEBI and other regulatory authorities. These are the 5 legal authorities framework which we have. Clear? Now getting into concept 15, reporting entity. This has been asked as your question in the previous term. Who will be a reporting entity and what are the records which has to be maintained by the reporting entity? The law PMLA 2002 defines a reporting entity as who can be a reporting entity? Banks, financial institutions, those operating games of chance for reward, casinos, real estate agents, precious metal dealers, persons carrying on a designated business or profession. All these are classified as reporting entities. Every reporting entity is required to verify the identity of their clients. They have to get all details regarding that particular client. What is the name, what is the address, what is the phone number, their Aadhaar, their PAN, regarding every details they have to collect. And the beneficial owner, if there is any beneficial owner for that particular client, their details also should be bought. Maintain records of all transactions and documents evidencing the identity. They have to maintain the Xerox copies of that particular document. If it's submitting as Aadhaar card, the Xerox of Aadhaar card should be with their records of its clients and as well as beneficial owner. Of client and beneficial owner, both records should be there. And periodical furnishing of information related to certain transactions. Not only keeping the record is important, periodically reporting it is also important. The records maintained must contain information including the nature of transaction, what is the nature of transaction of that particular business or that particular individual, the amount of transaction, currency in which it was denominated, the date on which transaction was conducted, and the parties to the transaction to enable the reporting entity to reconstruct individual transaction. Who are the parties involved in it so that the reporting entity is suspecting that particular transaction. These are the records which have to be maintained by collecting the information. The information relating to the transaction must be maintained for 5 years from the date of transaction between the client and the reporting entity. Even if there is no connection between the client and reporting entity now, till 5 years they have to maintain the records of that particular client. The records relating to the identity of clients and beneficial owner as well as the account files and business coordinates must be maintained for 5 years after the business relationship between the client and reporting entity has ended or the account has been closed, whichever is stated. Okay, clear? So this is the reporting entity. If reporting entity question has been asked in your examination, first you have to write what is reporting entity, what is the duty of reporting entity, What are the records to be maintained and how much is the period of maintaining those records? 4 points. Clear? So now getting into concept 16, which is our last concept in anti-money laundering. Financial Action Task Force recommendations for accountants. In first introduction itself, we have seen what is Financial Action Task Force, when it has been established and all. Now, this Financial Action Task Force has given some recommendations for the accountants. What are the recommendations which are given by the Financial Action Task Force to the accountants? Designated non-financial business and professions, specifically focusing on accountants. This overview includes key concepts and actions that accounting professionals should take in relation to anti-money laundering. So these are the key concepts and procedures which have recommended by the Financial Action Task Force to the accountants. What are those? Why it is given? For anti-money laundering and countering of financing of terrorism. Now, applicable situations for accountants. In which situations they have to comply with this recommendations? Buying and selling of real estate. When accountants are buying and selling any real estate property, they have to know whether this real estate business is involved into money laundering or not. Because we have that idea regarding, or we are learning regarding anti-money laundering concepts. So we have to analyze regarding it so that we are also not indirectly getting into money laundering. So because we have knowledge regarding it, so if any person who is not legitimate enough, if he will have a access or analysis to understand whether this real estate property is involved in money laundering or not. But we can analyze and review regarding that because we have learning it. Because we are learning it. So when buying and selling of real estate, accountants have to understand regarding anti-money laundering concepts. Managing clients' money, securities and other assets. When we are dealing with securities or managing client funds, we have to know it. Management of bank savings or securities account. Organizing contributions for company creation, operation or management. If we are actually giving any lump sum payment for company creations or something, we have to have a valid proof. If any person or any authority is coming to us and asking regarding information, we should show them a valid proof that even if 10 crores has been given by us to any company creation, that company is not a bogus company. That company is a valid company and the 10 crores is through a legal money. We should have a valid creation, operation or management of legal entities or arranging regarding those legal entities. Buying and selling of business entities. If we are buying any whole business, then we have to understand that that business is not related to any anti-money laundering. That business is not funding to any terrorism. In such a case, we can buy that business. Financial transactions for clients regarding to other activities. If we are providing any financial services to any clients, so that client is also not illegal. The business which is done by that particular client is also legal. Under all these three situations, we have to follow the recommendations which are given by the financial action. Now, objective. What is the objective of Financial Action Task Force for recommending this? Ensure that accountants uphold the ethical standards by not facilitating criminal activities directly or indirectly, knowingly or without knowing. You should not be involved in any criminal activity. For that purpose, Financial Action Task Force is saying like, Cornella, don't go into this. Be aware of this. If you are getting into it, you will be in trouble. So, for safeguarding us, Financial Action Task Force gave some recommendations. Risk-based approach for accounting profession. What is the risk-based approach? What is the meaning of risk-based approach? The likelihood of adverse events occurring and their potential consequences. The illegal events, how they can come to us, and what are the consequences which we face due to those adverse events. Those are nothing but risk-based approaches. Requires identification. We have to identify such risk-based approaches. We have to assess them and manage the risk related to money laundering and terrorism financing. First, we have to identify whether it is a risk-based breach or not. If we are getting into any activity which is given here, if you are getting into any activity, whether it is having any risk regarding anti-money laundering or terrorism or financing, we have to identify and assess it. Risk identification and assessment. How will identify the risk? Establish controls before engaging with clients or address potential risk. We have to make clear that only till here I'll be assisting. If it is beyond this, I'm not going into it. If you are giving any money legally to me with invoices and if we both are entering into transaction, there needs to be invoice billing into it. If you are not giving any invoices, I'm not getting into any transaction with you. So we have to make ourselves sure with controlling ourselves. We have to be controls of ourselves properly to that particular client. Conduct AML or CFT and know your customer assessment to determine the overall money laundering or terrorism financing risk. We have anti-money laundering cases. We have terrorism financing cases. We have to assess, we have to know our customer and we have to identify and assess that particular risk. Risk factors include customers' background checks, anti-money laundering checks, politically exposed person. If we are getting into client or if we are getting into business transaction with a particular person, if that person is related to any political involved or not, if he is politically exposed person or not, beneficial ownership, or if he is dealing in a binomial property of political ownership or not. We have to know everything regarding that customer. Country, what is the country of his residence? Incorporation, if he is holding any business, if it is incorporated in India or outside India, whether his incorporation is in legal terms or not. Sanctions, if you are getting any sanctions from the government, if he is using for the main objective of that particular sanction or not. If he is using it for own businesses, if he is using it for own benefits or not, that has to be checked. Terrorism support, if he is directly or indirectly supporting any terrorism groups or not. Everything has to assist by whom? The accountants have to think and assess regarding it. Transaction or service, nature of financial, tax advice, property transactions and company formation, whether he is paying taxes properly or not, whether he is doing any tax evasion, whether he is having any financial misstatements or anything, whether the company formation is illegal or is it a bogus company, everything has to be assessed. The risk assessment influences the level of customer due diligence. If we have most of trust with our customer, we'll not get into more details. But if we are not trusting him, we'll get into more details. Normal, simplified and enhanced. If we are just doing normal verification, if you are doing any simplified verification, if you are getting into in-depth details of that particular customer, that is based on customer due diligence. How we are trusting him, how we are being truthful to each other. Risk mitigation, how we can reduce the risk by having a customer due diligence, background checks and claims to assess their risk levels. Enhanced due diligence, more detailed scrutiny for high risk clients, especially politically exposed parties. Update CDD information, which is customer due diligence information based on significant changes in client circumstances or activities. If suddenly there are any changes in the behavior of the client activities, then we can update the customer due diligence into enhanced due diligence also. So these are the risk mitigation steps we can take. Now, additional requirements for accounting professionals. What do we have additional requirements? Maintaining records, assess new products or practices which are taken by that particular customer, rely on third parties for customer due diligence. We can directly go to third parties and interview regarding the customer. Report suspicious transactions. Implement internal control system and compliance management system with a designated compliance officer. We can get into touch with designated compliance officer and we can bring more internal control systems into our business. Reporting of suspicious transaction. We have seen reporting of suspicious transaction by financial institutions or banks. Now these are the reporting of transactions by accountants. Okay. Identify and report suspicious activities to the Financial Intelligence Unit. Appoint a money laundering reporting officer responsible for reporting. Examples of suspicious activities like clients unconcerned about losses or low profit. Even if you are saying that if you enter into any of this kind of businesses, you will get a loss. And client is saying that I'm not concerned with any of the losses. I have to get into this business at early cost. In that case, that could lead to investigate more about that client. Even if you're saying it is losses, he is unconcerned about his losses. What is the reason behind it? You can analyze it and make a report of it. Explained high volumes of transaction. Even if it's not competent enough to get into transaction, it's getting into a transaction like a high volume. Unjustified deposits or cash receipts. If you are asking about any cash receipts or deposits of cash in lump sum payments, there is no justification from that client. All these activities will be led to suspicion, through which you can appoint a money laundering reporting officer. If you have any suspicious transaction report, then you can submit it to Financial Intelligence Unit. Now, the accountants should not get into this monitoring process only once a while. Like when you are getting into transaction only, no need to do it. It is an ongoing monitoring process. Regularly review clients' activities and assess whether they align with initial risk settings or not. At starting, we have done the risk assessment. We have done everything. We have analyzed there are no any risks regarding that. He is not involved into any money laundering. But if we end there itself, we could miss any chances of money laundering in the future. So there should be a regular reviewing and monitoring of the client's performance. Ensure that client document is up to date and relevant. Whether is giving any up to date relevant documents or not. That also has to be analyzed. Internal controls and compliance. Establish policies and procedures guidelines by senior management. Provide training for employees on AML or CFT practices. Regulatory review, risk assessment and management processes. Designate a compliance officer, money laundering reporting officer, and implement a compliance program. These are the internal controls which we have to do if we are getting into any business. So these are the recommendations which are given by Financial Action Task Force to us. Clear? So mainly what you have to focus is mainly focus on sections and reporting entity concept. Okay. And regarding this Financial Action Task Force and regarding Financial Intelligence Unit, Enforcement Director, we have legal authorities and we have this Financial Action Task Force. Just revise it. Okay. See what is that. If even 7 marks question has been asked in your examination, you will be in a state to answer it. But mainly focus on the sections. As it is a new syllabus involved concept, we can't skip any concept. There could be any question from any concept. So you have to be thorough with both money laundering and forensic audit. Get section D, all concepts clear. Okay. That is regarding section D. Our section D is also completed. Till now, how much syllabus is completed? 60 plus marks plus 70 to 80 plus. Okay. So your exemption is clear. Now we are going into more detail, 20 marks of internal control. Okay. Yes. Now we are going to start with our section C, internal control, internal audit, operational audit and other related issues. Now, we have 3 units in it: internal control and internal audit, operational audit, internal audit under Companies Act 2013 and audit of different service organizations. How much weightage does this section has? It has around 20 to 25 marks weightage, combining with both the descriptive questions and MCQs. Okay. So yes, what we are going to see under this section. What is internal control? what are the objectives of internal control, what is the scope of internal control, what are advantages, what are limitations, regarding entire details of internal control. Why we have to learn this internal control? Till now we have seen that management have to prepare the financial statements, they have to do the financial records or cost records, cost statements. This has to be done by the management. They have to avoid the misstatements in financial records and cost records by having some internal controls. We have discussed this word internal controls many of these times, but now we are going to see what is this internal controls which management have to see to not to have any misstatements in financials, or not to have any non-compliance under them, or not to having against any regulatory rules or principles. They should have internal controls. So now we are going to learn what is internal control, what are the objectives of internal control, what are the benefits of it, what is the scope of it, what are the limitations of it, everything regarding internal control. Next, we are going to see what is internal audit. What is internal audit? What are its objectives? What are its scope? And what is adequacy of internal control and internal audit? The difference between internal control and internal audit. Everything we are going to see in Unit 1. Now, coming to Unit 2, we are going to see operational audit. What is operational audit? What are its objectives? What are its scope? Regarding entire information regarding objective audit, we are going to see in Unit 2. And also, we are going to see regarding internal audit under Companies Act 2013. What does that mean? Under Companies Act 2013, who can be appointed as an internal auditor? Which companies have to appoint internal auditor based on turnover and net worth criteria? What is that criteria limits? And who can be appointed as internal auditor? What is his qualities? What are his qualifications? What are his disqualifications? Everything regarding internal auditor under Companies Act 2013 we are going to see in Unit 2. And coming to Unit 3, audit of different service organization. If you remember correctly in CMA Inter in your financial accounts, in auditing, you'll write audit of hospitals, audit of hotels, audit of educational institutions. You used to write auditor has to analyze the books, auditor has to analyze the records, MOA, AOA, everything. But in detail, in CMA final perspective, what are the different service organizations? The similar audit of hotels, audit of hospitals, audit of educational institutions, audit of cooperative societies. What all different kinds of audits we have for service organizations? We are going to cover them in Unit 3. So that is the overview of Section C. This is what we are going to say in Section C. Clear? Now, getting into our Unit 1, internal control and internal audit. First, we are going to see entire concepts of internal control, and we are going to move on to internal audit. Clear? Now, introduction of internal control. What is internal control? Internal controls are systematic and procedural steps adopted by the organization. Why they are adopting these procedures or processes? To mitigate the risk, especially in financial accounting and reporting, operational processes, and compliance with the laws and regulations. So there are certain principles and procedures which will be followed by the organization, so that there won't be any risk in it, so that all will have comply with the laws and regulations. They have proper operational processes, and they have proper reporting standards. To ensure all these, there are certain systematic and procedural steps. These are called as internal controls. Now, what is the purpose of these internal controls? These controls are primarily risk mitigation steps that aim to strengthen the organization systems and processes and prevent and detect the errors and irregularities. So, if any organization is having internal controls properly, then the risk can be lower, there won't be any errors, the financial statements will be true and fair, and the financial statements prepared will be complying with all the rules and regulations. These are the things which will internal control have. Control activities. These are specific steps taken to mitigate risk. What are control activities? Reviewing them, getting the approval from approval authorities, physical counting by doing the physical verification of everything, segregation of duties, that these are the duties will be done by the directors, these are the duties which will be done by the shareholders, by the management, by the employees. By properly segregating the duties, each work will be done by each and every individual in an effective manner, which will not only impact on the work done by them, will impact on the entire organization. So that is called as internal control. Clear? Now, what are the objectives of internal control? I have given you 5 objectives, with our authorization, compliance, ensuring transactions are executed according to management authorization and policies. There are certain management policies in the organization that every transaction has to be only within this limits. If management gives any policies like that, that have to be followed. And also, if for every transaction, the authorization from the management should be taken. So authorization compliance is the main objective of internal control. Why they have to take authorization? Because management will be involved in the decision making. If any transaction is being entered, they will keep in mind regarding the decision taking, and they will take the decision regarding approving the transaction or disapproving the transaction. Proper accounting. Verify the transactions are recorded in appropriate accounting period. The transactions which are entered in this accounting period should be accounted in this particular year's records only. Asset protection. Safeguarding assets from unauthorized access or use. Asset verification, regularly comparing recorded assets with actual assets and taking corrective actions when there are differences found between booking assets and actual assets. Performance evaluation, assessing the efficiency of business operations and identifying any weaknesses are there. So all these are nothing but objectives of internal control, that every transaction should be taken by the management approval. There should be a proper accounting for everything. The assets should be safeguarded, regular comparing between the recorded assets and the actual assets, and properly efficiency analyzing whether there are any weaknesses in the business controls. To find all these is the objective of internal control. Now, we have certain types of internal controls. What are the types of internal controls? We have internal financial controls, operational controls, manual controls, IT general controls, and application controls. These are the types of internal controls which we have. First, internal financial controls. From the name itself, we can tell it is controls that mitigate risk related to financial exposure. If anything is related to financial terms, that risk is mitigated by following this internal financial controls. Operational controls, any risk related to operations will be mitigated if we follow operational controls. Manual controls, if there are any human intervention to detect whether there are any errors performed by that human intervention or not. To know that, we can follow the manual controls. IT general controls, if there are any automated data systems, or if there are all the records are being in a data format, electronic format, to mitigate the risk of errors being placed in that particular data information system, we can follow IT general controls. Application controls, checking the transaction processing are on application level, that every transaction is recorded with that particular sequence numbering invoice or not. So all these are nothing but types of internal controls which every organization can have. Why? To mitigate the risk from any of these things. Now, we have levels of internal control. One is entity level, the other is process level controls. Entity level controls are nothing but to control the entire environment of that particular entity. Broad-based controls that apply the entire organization, such as code of conduct, which has to be followed by everyone under that particular organization. It could be directors, managers, it could be any of the person like employees or under the employees also. Everyone has to follow those controls. If it is entity level, control. Process level control. Control focused on specific process or areas like order processing or payroll. These are only related to department wise controls, only related to that process. Under that process only those controls will be taken up. So these are the two levels of internal controls which we have. Next, internal controls framework. What is internal controls framework? This is a predefined benchmark used to assess the design, adequacy, operating efficiency of internal control system. Before understanding and putting internal control system, we need certain benchmark for it. We need any guidance of making this particular internal controls. That guidance we can get it from internal control framework. That could be used as a benchmark for updating or designing any internal controls for that particular organization. It serves as a reference for the management or auditors when evaluating the system's effectiveness. So this is a reference or a benchmark which is used by the management or auditors while implementing the internal controls into that particular entity or organization. Clear till now? Till now we have seen what is the internal control, what are the objectives, what are the types of internal controls, what are the levels of internal controls, and what is the internal control framework. Clear with the 5 concepts? Now getting into concept 6, responsibilities of internal control. Now internal controls has been bought in the company. Now what is the responsibility of this internal control? Who will do this internal control? Board of directors or management will bring this internal controls. As per Companies Act 2013, the board of directors in a limited company is responsible for ensuring that appropriate internal controls are in place. Why they have certain responsibility? Because they have to be accountable to shareholders. They have to be responsible for the shareholders. If shareholders are getting any loss, they will question the board of directors for their loss incurred. The board acts as an agent for the shareholders and is accountable to them for ensuring proper internal controls. If there is any risk for shareholders, they will come and question the management. Why internal controls are not proper? You have to take steps for mitigating this risk. I am investing, believing you, I am being reliable on you. Then you have to take steps. You have to do the workings to mitigate my risk. Establish internal control function. Directors may establish a dedicated internal control function depending on the cost benefit analysis, like which is a benefit for that particular entity. Under that basis they can do the internal control implementation. Focus on control environment. Directors may ensure that an appropriate control environment is created within the organization. Why? A strong control environment is necessary for the effectiveness of internal controls. Not only implementation of internal control is important, that everyone has to comply with it. Everyone has to follow those internal controls. Fostering a culture of commitment to robust controls across the organization. Everyone should have a commitment to follow those internal controls. So these are the responsibilities of internal controls. Now, internal controls have been implemented in that particular organization. Is the management work done? No, they have to review those internal controls timely basis. If internal controls are not proper enough to reduce the risk, they have to review again. They have to change the internal controls again. We have certain review methods for reviewing those internal controls. What are the review methods which management can follow while reviewing the internal controls? We have 4 review methods. One is narrative records. Documenting the control system in a detailed written format. If I have this material in front of me, if I am reading this entire material, I'll get to know what is the mistake here. Okay? I don't know if you have noted or not, but there is a mistake in this particular material which I have to rectify it. So, by just seeing this material, I got to know what is the mistake of mine which I have made it. To be more clear for you all, open forensic audit. Seen? So that is a mistake which I have got to know by seeing this material. If I have not having any written document, will I be able to find the difference? No. So management should have a written document of all the internal controls to know regarding the what are the mistakes in that particular internal control, the management should have a written document with it. Checklist, they have to follow certain checklist using a structured list of control points to verify the compliance. Questionnaires, whether there are any question raised by any management or the employee, whether they are not understanding regarding the internal controls to implement them properly. If everyone are understanding and implementing it currently, the organization will run good. But if they are not able to understand it and they are implementing those controls wrongly, then what will happen? Management will be failure in making that internal controls. The organization will not run properly. So questionnaires, if asking a series of questions to gather information on the control system, whether everyone are understanding it or not, whether the proper implementation of internal controls are being made in the organization or not. Flowcharts, diagrammatically representing the control process to visualize the flow and identify the weaknesses. Remembering all the internal controls by the employees or by the workers is not so easy. So what they have to do, they have to make a flow chart of it. So this is the process of all internal controls. Everyone have to comply with these rules. If there are certain rules and regulations in that particular organization, then everyone will know about it. Then everyone will easily remember about it. So by doing a diagrammatical representation of all the control processes, they can visualize the flow and identify the weakness if there are any in the organization. So these are the 4 review methods which management can follow while reviewing the internal controls. Now, what are internal control procedures that we have? Physical control over assets, ensuring that all the assets are safeguarded by having a physical control over those assets to prevent loss or theft of that asset. Authorization and approval, requiring a proper authorization and approval for transactions and processes. For all transaction events, a proper approval should be taken by the management. Without approval, no one should enter into any kind of transaction in the entire organization. Segregation of duties, dividing tasks among different employees to prevent fraud and errors. If one employee is given 10 different types of work, will he can do effective work on it? No. He'll do half work in all and tell the management that I have completed my work. So I think you're being able to relate it because you're working. So what will be a effective working condition when one person is allocated with one work? He will do that in an effective manner. He will give his 100% with his work. And management design of controls. All controls should be designed by management themselves. Designing effective control system and procedures by management to address what are those key points. If I am designing this material, I will know where I have done the mistake. If someone is designing it and I am looking into this material, will I know about the mistakes? No, because I haven't done it. I will think that everything is correct in this material. I'll not be able to find any mistakes. But if management themselves are preparing the internal controls, then they will know what is the error in doing that internal controls. Effective operational controls, implementing controls to ensure efficient and effective operation processes. The controls should be in such a way the operations are made in an effective and efficient manner. Whatever operations are going in that particular business, they should be in a way that they are giving in an efficient and effective processes. So these are the procedures of internal control. Physical control over assets, authorization and approvals, segregation of duties, management design of controls, and effective operational control. So these are the internal control procedures which we have. Clear? Now, getting into the scope of internal control. What is the main scope under which things we can have these internal controls? What are the main duties of these internal controls? The scope of internal control extends beyond traditional accounting controls and includes various operational and administrative controls that contribute to the organization success. These internal controls are not only regarding to the financials, not only regarding the records, but also regarding the administration and operations also. Operations, which is running day-to-day activities. Administration only regarding to general purpose activities. So internal controls are regarding financials, are regarding costings, are regarding productions, process, operations, administration. Regarding everything, internal controls will be there. We have four main categories of internal controls. Internal controls can be classified into four main categories. What are those four main? Administrative controls, operational controls, financial and accounting controls, compliance controls. We have four kinds of internal controls. What are administrative controls? These related to decision making process within the management. So what are the administrative relating controls which we have to adopt so that the decision making is a proper, it is way more effective, which is helping the organization to get the benefit. Example, maintaining records of customer interactions by sales staff. What are the customer reviews that should be obtained from the sales staff? Like how sales staff are behaving with the customers. Are customers liking the products or not? Are there any defects with the products or not? Regarding that information is collected by the management. Then management can use that information from the decision making part. Operational controls implemented through management accounting techniques such as budgetary controls, standard costing to ensure operations effectively. If management is having a proper internal controls, they will set certain budgets, they will set certain standards that operations should work until this only. Only under those circumstances the work will be done in an effective manner. Financial and accounting controls concerned with safeguarding assets, preventing and detecting the fraud, ensuring there is a accuracy and completeness of accounting records, preparing reliable financial reports in on time. So these are nothing but financial and accounting controls, everything related to accounting and financing. Now, compliance control, nothing but complying with all laws and regulations. So these are the four categories of internal controls which we have. Clear till now? Now, structure of internal control. What should be the structure of internal control? The structure of internal control will basically depend on the size and type of business. If business is very huge, internal controls will be higher. If business is smaller, internal controls can be lesser. Available infrastructure, if there are more infrastructure, internal controls will be more. If infrastructure is less, internal controls need not be more. Human resource potential, how many employees are working? If only 10 employees are working, then internal controls need not be more stringent. But if 10,000 employees are working, then each an employee should have a proper segregation of work. Each employee should be given the access, limited access, that only up to this level you are accessible. So to know what are the duties of that particular employees, there needs to be a internal controls. Key elements and factors to consider when designing a successful internal control system. So these are the all elements which should be considered. First, segregation of duties. No single person should be allocated with the multiple works. Rotation of duties, always there should be rotation of duties. Regular rotating staff duties helps in early detection of errors and frauds. Now, if one employee is coming into a machinery and he is doing a product, next shift is rotated, there is an other employee coming. Now he will see the products which has been done by that particular employee. Now he will know what is the error with that. If only one employee is working, he will not at all check that product because he will be very sure enough that I have done that work perfectly. So he will not check it. So rotation of duties are very important. Competence and integrity. Control enforcement requires skill and trustworthy personnel. One, he should be expertise enough, and next thing, he should be trustworthy personnel. Appropriate levels of authority. Authority shall be given granted on a need to know basis. That no one should tell that I have no need to know about it. Everyone in the organization have a need to know about the internal controls. Accountability. Whatever error done by them, they have to take the responsibility for the liability. They should be accountable for that particular work done by. Strict actions must be taken when discrepancies are noticed. Adequate resources. Sufficient resources are essential for effective controls. So there are certain resources which are to be used to get these internal controls properly. Supervision and periodic updates. Everything should be reviewed again and again, and periodic updates should be given it from timely basis. So these are the elements which we considered while preparing a structure internal control. Clear till now? Clear? Types we have already seen regarding the types, but those types can also be classified into three. One is a preventive control, the second is a detective control, and the third is a input control. Preventive control, even before finding errors itself, they are trying to correct it. So they are trying to prevent whether there should be no errors and frauds. Detective, after getting into know it, they are detecting it and they are trying to rectify it. Input controls ensure accuracy and validity of data, to understand regarding the accuracy and validity of that particular data. So these are also sub parts or subtypes of controls. So if internal controls question is given, types of internal controls question is given, main answer should be your first answer, that those types which we have discussed, and you have to write the further types are divided into preventive, detective and input controls. Okay. Now, what are the benefits of internal control? Now we have known about the objective, scope, what are the types, what are different internal control structures, everything has known. Now what is the benefit of having this internal control? We can directly say we can detect it earlyly. Whatever the errors are there, whatever frauds are there, we can detect it earlyly. It is nothing but a early warning signal. Identifies problems earlyly. Fraud prevention, we can prevent it from fraud. Multiple checks reduce the fraud risk. Avoid external audit findings. No one need to come from the outside like statutory auditor and internal auditor and come to us and inform that your internal controls are not proper. We can take these steps to rectify it. No one will be able to come and question us that these are not proper enough. Internal detection helps avoid external penalties. So these are the benefits of internal control. Now, if there are advantages, there will be disadvantages also. What are the limitations of internal control? Human judgment. Human are inbuilt judgment mentalities. Human have inbuilt judgment mentalities. So controls may be influenced by subjective decisions made under pressure. So even management are humans. When they find any defect with their products, they can take the decisions in a very in a state of mind that they have to they have to correct it immediately. They'll not think about it. They'll try to rectify it immediately without knowing about the decision's consequences or something. So human judgment can go wrong. Breakdowns, controls can fail due to misunderstandings or mistakes. Internal controls will be implemented, but if the internal controls are not properly understood by the employees, they will take it in a wrong way. They will misunderstand it and implement it. Management override. High personnel may bypass controls for personal gain. They will only implement the internal controls, but they will only not follow it due to for having personal gains. Collusion. Employees may collude to circumvent controls, which means one employee will be more egoistic, the other employee will follow the internal controls. So there will be a collusion between the employees. Why I have to follow it? Why you will not follow it? When we all have the same rules, the rule should be applicable to you also. Why you are not following it? They will ask. So there will be a collusion between the employees. Cost versus benefit. If better implementation of internal controls have to be happen, the cost should be higher. If cost is higher, the benefit also should be higher. If cost is higher and benefit is lower, will any management will get into that? No. If cost is lower, benefit is higher, they'll get into that particular procedure. If cost is higher and benefit is lower, they'll not get into it. So always analyzing regarding the cost versus benefit analysis is important. The cost of implementing controls must not exceed the potential benefits. Inefficiencies, overly complex controls can slow down the processes. If there are more mathematical processes, everything are involved in it, no one will understand it. So processes should be in such a way that it is understandable by everyone, and they have to process it fastly. If there are many difficult processes, the process will be slowed down. Process should be very fast enough to get the profits early. So these are the limitations of internal controls. Now, this is regarding evaluation of internal controls, like how internal controls has been bought and like from caro 2020 and through Companies Act 2013. These have bought that management should form some internal controls and should be implemented in the organization. This is not so important. You can just see it, like how internal controls are bought in. Now, this question has been asked. Method of internal control evaluation. There is one method of internal control evaluation which is called as internal control questionnaire. So, which means they should have certain checklists and that checklist has to be followed, and regarding that, the internal control is a yes or no. Is it applicable or not applicable? Based on that, they have to take the decision. So, regarding that, a question has been asked. Now, concept 15, adequacy of internal controls. Very, very, very important question has been asked 3 to 4 times in the past exams. Okay. Adequacy of internal controls. The auditor should obtain an understanding of the accounting system sufficient to identify and understand the major classes of transactions, manner of initiation of transaction, significant accounting records, supporting documents. So, to get into understanding of all these, the auditor have to understand regarding the accounting system. Before getting into internal auditing, the internal auditor should understand regarding the transactions which are being happening in that particular entity, what are the manner of initiation of the transaction, what are the significant accounting records related to that particular transaction, what are the supporting documents. Everything has to be analyzed by whom? Auditor. Internal control, so far as financial and accounting aspects are concerned, aims at the following. So what is the aim of internal control? Is nothing but adequacy of internal control. So these are the aims of internal control. To provide a flow of work through various stages. So what is the flow of work? This is the first step. This is the last step. There should be a proper segregation of personal duties so that no single person can be in a position to handle whole of the work from beginning to the end. Segregation of duties should be there. We have seen it. Adequate documentation should be made at each stage of work. The transactions are recorded with appropriate amounts and in timely manner, that too as per the applicable accounting policies and practices. Everything should be recorded and should be recorded with appropriate amounts and not timely basis. The assets should be properly safeguarded. The access of assets should be restricted to only authorized persons. Unauthorized access should not be given. Building up of system to locate the deviations or departures from the prescribed procedures and to detect the frauds and errors automatically without much loss of time. As we have seen in forensic auditing, the fraud has been committed and come to knowledge of the management after 10 years. What will happen? Internal controls are in failure for almost 10 years. So, there should be techniques in such a way that even if fraud has been committed, even if error has been committed, that should be in the management in the management control right after the error and fraud has been committed. There should be an effective management information system. Minimization of loss and wastages. Employees should be encouraged to do good work and comply with the procedures. How will employees do good work? If they are rewarded properly, if they are appreciated for their work, they'll give the good work to the organization. Special attention should be given to the disgruntled employees, which means which are actually complying with the internal controls. The special attention should be given to them. If anyone are not properly following the internal controls, for them also special attention should be given. So these are the aims of doing the internal controls. This is nothing but adequacy of internal controls. Clear? So that is very, very important question asked for 3 times. Okay. Now, this COSO report is also not so important. You can just go through with this, like what are the interrelated components of internal controls. We have seen like control environment, risk assessment will be done, control activities are there, like getting the approvals or authorizations from the management, performance reviews can be done, reconciliations will be done, information and communication, everything has to be communicated to the management. Monitoring, it should be timely reviewed and monitored. So you can just look after this COSO report and internal controls. Okay. Now, getting into internal audit. Till now clear regarding internal control. In internal control, you should have mainly see the concepts which we have discussed. Okay. What is internal control? What are its objectives? What are its limitations, benefits? What are the steps in internal control? And at last, adequacy of internal control is very, very important. Okay. So that is regarding internal control. Now, internal control is there. We have certain reviewing methods also, but internal audit should be done by a independent auditor who will be appointed as an internal auditor. Now we are going to learn about internal audit. Internal audit is responsible for assessing internal controls to ensure compliance with predetermined standards. So why we are doing internal audit? To check that internal controls are proper or not, whether they are being following with the standards or not. It provides independent assurance on the effectiveness of internal controls and risk management processes. It will give us an independent assurance that internal controls are proper, that risk management processes are proper. Improving governance and helping organization to achieve their objectives. By doing the internal controls, they'll check for the internal, by doing the internal audit, they'll check whether the internal control is proper or not, which will help in improving the governance and which will help the organization to achieve their objectives. That is nothing but internal audit. Now, concept 18, internal audit process. What is internal audit process? First, internal auditor will be appointed. The internal auditor is appointed by the company's management or board of directors. For a listed entities, the internal audit head is appointed by the audit committee and reports to the audit committee. There will be internal auditors team. The team will be appointed by whom? Management or board of directors. The head of that internal control team, who will be the main internal auditor who will work on internal audit, will be appointed by audit committee. Now, what are those listed entities who have to appoint internal auditor? We'll see in unit 2. Now, second process is, first internal auditor is appointed. The internal auditor will review the internal control and provides the report with the recommendation whether the internal controls are proper or not. If there are any changes should be made or any suggestions which internal auditor has, then he can give us suggestions or opinion on the internal controls to the management for feedback and necessary actions. This review helps ensure the internal controls are effective, aligned with the organization goal. So this is the process of internal audit. Not so important, you can easily write it. Internal auditor should be appointed, he should review, assess, and after that he have to give us opinion and suggestions. Those 3 points enough. Now, what are the objectives of internal audit? Now, internal audit is being done. What are the main objectives? To check the accuracy of records, to see whether it is complying with accounting standards or not, to detect if there is any fraud and prevent such fraud. 2. See if all the transactions are being approved by the management or not. 2. Check whether there are any liabilities for solely for business purposes, whether internal controls review is being done by the management from timely or not. These are all the objectives of internal audit. Checking all this is internal audit. Examining everything is internal audit. Clear? Now, as we have internal control procedures, we have internal audit procedures also. What are the internal audit procedures? Proposal from the company and acceptance from the internal auditor. Now, there will be a proposal from the company that you have to come to our company for an internal audit. You will be appointed as an internal auditor for our company, and this is your scope of work. These are your objectives. This should be work done by you, and you have to submit your report based on this opinion and suggestions. That will be accepted by internal auditor. Then there will be a fixation of area, the scope of work which has to be done by that particular internal auditor. There will be internal audit assignment, as we have seen, assignment, audit assignment. There will be internal audit assignment. What is the remuneration duly approved by the board or audit committee? Everything will be settled. And after that, internal audit plan and internal audit strategy will be prepared by the internal auditor. We have seen what is an audit plan, audit strategy. Internal audit plan and internal audit strategy will be prepared by the internal auditor. Then execution of plan and strategy will be done. Escalate the matter of unnecessary interference in the internal audit work and non-operations by the auditee staff. What internal auditor will do? He'll not only check on the management thing, but there is no unnecessary access for the internal auditee staff also into the certain works. So what is the work assigned to them only have to be done by them. Preparation of preliminary report with observations, findings, recommendation of the internal auditor. This is not the final report. Preliminary report have to be prepared first. Internal auditor should report significant observations, suggestions, recommendations based on the policies, process, risk control and transaction processing. He have to submit this preliminary report to the management saying that this is my opinion regarding it. These are my suggestions. Did I understood regarding internal controls properly or not? If you have any changes, tell me. We'll change the matters of report. Management comments and action taken report. What are the management justifications regarding it? If any actions are taken right after the report, that could be also changed. Submission of final report for the consideration from the audit committee. So audit committee will be the head of internal auditor. They will submit the report to the audit committee or board of directors or managing director. If audit committee is not there, to directly board of directors they will submit it. So this is the process of internal audit. Now there will be a chief internal auditor who will be the head of internal auditor. Okay, what is the responsibility of chief internal auditor? The chief internal auditor or a designated person oversees the internal audit function, and these are the responsibilities of that particular auditor. What are the responsibilities? Define overall plan. He have to make a proper plan. Establish a plan, scope and methodology for internal audit on a periodic basis. Monitor and oversee the audit assignment. Plan and execute the audit assignment. Report findings. Recommend actions to address what are the risks and concerns. And ensure that the report's observations are closure, which means it should not give a conclusive evidence. It should not be in a wrong state also. So they have to say that internal controls are not proper, but this is not a final suggestion. They will only give the suggestion, not the conclusion. Okay. Staff performance and development. What is the staff performance? How they are doing it? Whether the training is given properly or not? Whether the development of internal audit staff resources are being taken by the management or not? External expertise. Engage and manage external experts and technical solutions if required. If they are required, then they can take the technical support also. Stakeholder communication. Communicate with the stakeholders regarding the internal controls and operations in the organization. So these are the responsibilities of whom? Chief Internal Auditor. Now getting into responsibilities of internal auditor. Now planning, strategy making, monitoring, everything is done by Chief Internal Auditor. What internal auditor will do? Access internal controls. He'll check whether the internal controls are proper or not. Evaluate design, proper implementation, operating effectiveness of internal controls. Whether internal controls are designed properly or not. Whether they are implemented properly or not. Identify shortcomings. Where deficiencies exist, recommend improvement to enhance the efficiency and effectiveness of controls. Whether internal controls in the books and internal controls in the implementation are same or not, whether there are any differences or not. Provide independent assurance. When required, provide an independent opinion in the presence, design, implementation and operating efficiency of internal controls. The opinion which is given by the internal auditor should be independent when it is coming to design and implementation of internal controls. So these are the responsibilities of internal auditor regarding planning, strategy making, monitoring, regarding employees' performance. Everything will be checked by whom? Chief Internal Auditor. This Chief Internal Auditor will be appointed by Audit Committee. This internal auditor will be appointed by Board of Directors if there is an audit committee. Okay. So these are regarding the responsibilities of internal auditor. Now, what are the key risks? Internal auditor must review internal controls concerning the key risk. He have to mainly assess regarding these two risks. Risk management, review. Test whether internal controls effectively manage the risks if they materialize. Are internal controls in such a way that if any risk regarding anything is coming, are they being able to detect it? Are they being able to prevent it? The audit report should enable management to reconsider, modify or redesign controls based on risk assessment and audit findings. So the report should be in such a way that management will come to know whether there are any inefficiencies in that particular internal control, and they will be in a position to change the internal controls if it is being benefitable to the company. So these are the two risks which has to be assessed by the internal auditor. Now, at last I have given you necessity of internal audit. This is nothing but what we have seen till now. So I have given it in last. If you are seeing it, if you are not seeing it, you will be able to write it. Improving internal controls, detecting errors or frauds, resource misuse prevention, reliance by external auditor, ongoing vigilance, ongoing monitoring and reviewing, independent review. These are the necessities of internal auditor or internal audit, which are nothing but the repeated points which we have. So I have given you as a last concept. Okay. Clear till now? Understood regarding the internal control and internal audit? Clear? Everything is clear? Now, coming into the difference between internal control and internal audit. Now we have understood regarding the internal control. We have understood regarding the internal audit. What is internal control and internal audit? Internal control is nothing but methods and procedures to control operations and meet the organization goal. So, the controls are the systematic procedures, practices which are given by the management. Why? To be able, so that, just a moment, yeah. So that those internal controls will be effective to meet the organization goals. Coming to internal audit, reviewing the effectiveness of internal controls and suggesting the improvement in internal control is nothing but internal audit. Rule combines internal check, internal audits designed and maintained by the organization. So internal control is nothing but internal checking and internal auditing. Established by the governance to monitor and check the activities which are done by the internal control. Timing of checks. checks are done simultaneously with the work being performed. So internal controls will be checked when the process are being performed. After entire completion, internal audit will be done. Works is reviewed and checked after the work is completed. Ensure compliance with management policies, focuses on detecting and preventing the fraud. So internal control is management policies implementation. Internal audit is done to detect and prevent it from fraud. Scope comparison. Internal control has a broader scope. Includes internal audit also. Internal control is involved with internal audit. But internal audit is a scope of internal control, is a part of internal control. Narrower scope, part of internal control framework. So internal control is head. Internal audit is nothing but doing the or verifying the internal control. So that is the difference between internal control and internal audit, can be asked as a question. Okay. So this is in our unit 2, but I have given you much before, because when you are learning about internal auditor itself, if you are running this will be helpful. So I have given you here. So this concept 26 is nothing but in unit 2 we have seen internal audit under Companies Act 2013. That I have given you here. Okay. Now next, this we'll see when we are done with unit 2. Yes. Now, we are going to start with our unit 2 in section C, which deals with operational audit and internal audit under Companies Act 2013. As we have completed what is internal control, what is internal audit, now we are going to start with internal audit under Companies Act 2013, and after that we are coming under operational audit, because this is a whole different concept. Now we have got to understand regarding the concept of internal control and internal audit. So we'll directly skip into the concept of internal audit under Companies Act 2013, which is in our first unit, concept 26. So open your concept 26. Now, internal audit under Companies Act 2013. First, the concept of internal audit was first introduced in Companies Act 1956 under section 581 ZF for producer companies. So only producer companies were first into the compliance of internal audit. Mandatory requirement. Internal audit was first made mandatory for certain companies under Manufacturing and Other Companies Audit Report Order 1975, which is caro. Okay, we have now caro, Companies Audit Reports Order. Before we used to have a Manufacturing and Other Companies Order 1975, in which internal audit is a mandatory requirement has been brought in 1975. This caro 1988 replaced the earlier order by Companies Auditors Report Order 2003, Companies Auditors Report Order 2016, and Companies Auditors Report Order 2020. So now we are following this caro 2020. Okay, so this is the one which we are following, but the previous one for this is caro, which amended the 2016 version. In your law, you are learning this caro 2020. So, section 138 of Companies Act 2013, this section provides a legal framework for the appointment of internal auditors. So, section 138 of Companies Act 2013 talks about appointment of internal auditors. The central government has the power to prescribe class of companies where appointing an internal auditor is mandatory. What are those class of companies? Now we are going to see. So till now understood how this internal auditing has been brought as a mandatory requirement. First, it has been brought for only producer companies in section 558 ZF. After that, caro 1975 has been introduced internal audit as a mandatory requirement. It has been again revised, and now we have caro 2020. Companies required to appoint internal auditor. What are the companies which are mandatorily have to appoint appoint internal auditor. Section 138 read with Rule 13 of Companies Rules 2014. The following classes of companies must appoint an internal auditor or a firm of internal auditors. So, individual can also be appointed as an internal auditor, or a firm of internal auditors can also be appointed as an internal auditor. What are the companies which has to comply with internal auditors appointment? Listed company. All listed companies have to appoint internal auditors. Unlisted public company, listed private or public, unlisted public companies meeting one of the following criteria. Remember like this: accepted deposit 25 crores or more at the time during the preceding financial year, paid up share capital 50 crores or more during the preceding financial year, outstanding loans or borrowings from banks or public financial institutions exceeding 100 crores or more at any time during the preceding financial year. This is at any time. Even in the middle of the year, if it is exceeding, it should be complying with. Turnover of 200 crores or more during the preceding financial year. So, deposits, paid up share capital, outstanding loans and borrowings, and turnover. DPOT. Okay? DPOT. Remember it as DPOT. Deposits should be 25 crores, paid up share capital should be 50 crores, outstanding loans and deposits should be 100 crores, and turnover should be 200 crores. This is for unlisted public companies, it is DPOT. Now coming to private companies, it is OT. If you are working professionals, remember it as overtime. Okay? Companies meeting either of the following criteria: outstanding loans or borrowings exceeding 100 crores at any time during the preceding financial year, turnover of 200 crores or more during the preceding financial year. So, unlisted listed companies will have every listed companies. Unlisted public companies should follow DPOT, and private companies should follow OT. Clear? Under any of this turnover, outstanding criteria they are into, they have to appoint internal auditors. Now, key rules and provisions related to internal auditor. Internal auditor may or may not be an employee of a company. Even an employee in a company can be appointed as an internal auditor, or not an employee, an independent person can also be appointed as an internal auditor. The internal auditor may be a chartered accountant, cost accountant, or any other professional as deemed to be fit by the board. Whoever the board of directors can be appointed by, that person or individual can be an internal auditor. The scope, functioning, periodicity, and methodology of internal audit are to be formulated in consultation with the internal auditor by the audit committee or the board. So, the scope, functioning, and the periodicity, like from which period to which period they will be acting as an internal auditor, or what are the methods which will be followed by the internal auditor, everything will be decided by whom? Audit committee or board of directors. So, this is regarding appointment of internal auditors. Now, filing of Form MGT 14. Like we have known, if cost auditor is being appointed, they have to file a form of CRA 3, CRA 4. Like that, we have appointment of internal auditor. Companies are required to file Form MGT 14 with ROC. That forms are with central government. These forms with ROC within 30 days of board's resolution. So, who will appoint internal auditors? Board will appoint through a board's resolution. When that board's resolution has been passed in that board meeting, within 30 days from the board meeting, they have to file a form which is called as Form MGT 14 to the ROC, Register of Companies, not central government. However, private companies are exempted from this requirement as per notification number GSR 464E dated 5th of June 2015. So, do we have to remember this notification date? No. Just remember, private companies are exempted to give this Form MGT 14 to the ROC. Now, statutory auditors versus internal auditors. Can statutory auditor be an internal auditor? No. Statutory auditor will be appointed by the statute. Internal auditor are appointed by the board of directors. Statutory auditor cannot be appointed as an internal auditor, as those roles have distinct duties and obligations. Both duties are very different. So both cannot be a same person. Eligibility for appointment as an internal auditor. Who can be appointed as an internal auditor? For producer companies, only chartered accountants can be appointed as internal auditors. Section, you don't have to remember it. Okay. For producer companies, only CAs can be appointed. For other companies, CA as well as CMA both can be appointed as an, or any other professional appointed by board also can be appointed as an internal auditor. What are the internal audit policy and appointment procedures? What are the procedures to be followed? As we already know, the audit committee or the board shall formulate the scope, methodology of internal audit after consulting with the internal auditor. What is the work to be done by them? What is the scope? What is the periodicity of their work? What is the methodology of their work? Everything will be decided by audit committee and board of directors. After that, obtain a written consent from the internal auditor. As we have seen the same process which is seen in the cost auditor, the same here also, have to obtain a written consent from the internal auditor. Call a board meeting, issuing a 7-day notice. For any board meeting, prior to the board meeting, 7 days notice should be given to all the board directors who are being in that particular board meeting. Pass a board's resolution for the appointment. File form MGT 14 with ROC if applicable. Notify the internal auditor about their appointment. So this is the process of appointing the internal auditor. If any of the board of directors or audit committee or internal auditor, he himself is not complying with any of the provisions of section 138, then there will be penalty. Although section 138 does not specify penalties for non-compliance, section 450 applies, under which a company may be fined 10,000 rupees for non-compliance. If the non-compliance continues, additional fine will be 1,000 per day, may be imposed up to 2 lakhs for companies and 50,000 for officers in default. So the minimum payment will be 10,000 rupees. If it is continuing, will be 1,000 per day. This 1,000 per day can extend to 2 lakhs for companies or 50,000 for officer. This 2 lakhs and 50,000 is for 1,000 per day. Okay. Keynotes regarding internal auditor. Internal auditor cannot be appointed by passing a resolution by circulation. So it should be board's resolution where all the board members are present in that particular board meeting. By passing a circulation resolution, they cannot appoint internal auditor. A statutory auditor and a cost auditor cannot serve as an internal auditor for the same, because the duties of all the three are different. Companies must comply with internal audit requirements within 6 months from the commencement. This is when this internal auditing principles have been bought. Like Companies Act 2013 has bought, and all the provisions has become applicable after that. So if companies before that are not following any internal auditing procedures, now if they are becoming applicable into these internal audit procedures from 2014, within 6 months they have to comply with that. This is old provision. Now it is 2024. We don't have to remember it. But if any companies till now, before coming into commencement of this particular act, if any company has not following it, but they are under the compliance of following it, then within 6 months they have to comply with the requirements of appointing an internal auditor. Clear till now? You majorly have to remember the applicability of internal audit. Okay. In one examination paper, exactly don't remember the paper number or the paper year, but this question has been asked as a practical problem. Okay. They have given in a table, like what are the unlisted, like what is outstanding loans, what are deposits, or what are paid up share capital amounts has been given, and asked you to analyze whether the internal audit should be appointed for that particular company or not. So like that a question has been asked. Direct question also has been asked. State the provisions regarding applicability of internal auditor in as per Companies Act 2013. That question also has been asked in 2 attempts. So this internal audit under Companies Act 2013 question is important for your examination. You have to remember it. Okay. Now, next, internal audit and caro. Now we have seen from caro the internal auditing has bought. Now we are going to see internal auditing with caro. The caro 2020 was introduced by MCA, Ministry of Corporate Affairs, with the objective of improving transparency in the financial reporting of the company. So everyone have to report regarding the financial statements or everything that has been bought by which caro 2020, which has been introduced by MCA. This order mandates that auditors provide specific statements on company operations, which are nothing but the reports which are given by those auditors. Financial transactions and compliance with statutory requirements are not. In the report prepared by any auditor, the major objective will be to state about the operations happening in that particular business, whether the financial transactions are true and fair or not, whether they are complying with statutory requirements or not. Regarding all these, a formal statement will be given by the auditor. The mandatory requirement of giving the report has been brought up in caro 2020. Caro 2020, effective from April 1st, 2021, replaced earlier orders, which is Ma Caro, and after then revised 1999 Caro, revised 2016 Caro, and revised 2020 Caro. Contains several key provisions and requirements for auditors as outlined below. What are the key legislative developments? Internal audit system was first introduced by the Companies Act 1956 under section 227(4)(a), later transitioning to 143(11) of Companies Act 2013. Evolution of caro, first it was this, then this, then this, then this, at last it was caro 2020. We have seen regarding this. The amendments have progressively focused on ensuring better corporate governance. Caro 2020, issued on 25th February of 2020, its applicability was deferred to financial year starting from 2021 April to impact of COVID-19. Okay. It was first bought in February, but from March we got COVID, so it was implemented from 1st of April 2021. Now, internal audit reporting under caro 2020. The company's internal audit system must be commensurate with the size and nature of business. As I've already discussed, internal audit, how the scope of internal audit will be on the basis of size and complexity of the business. This ensures that internal control mechanisms are in place to monitor operations effectively. See, for example, if the company is huge and the internal audit scope is less, or the internal audit process is minimal, will they be able to find out the entire operations about that particular company? No. But if company is small and the internal audit process is huge, what will they do? Only time waste. So the internal audit process should be in line with the operations of that particular entity. The statutory auditor should verify if internal audit reports were taken into account when finalizing the audit. While conducting statutory auditor, what he have to do? He have to check whether the internal auditor have complied with all the regulations or not, whether internal audit report has been taken into account when finalizing the entire audit or not. This promotes better coordination between internal and external auditors. So this is the internal audit reporting under caro. So caro first has bought to have the internal audit system in that particular organization, and when internal auditor has given the internal audit report, that should be included in all audits and given to the statutory auditor. This has been brought in caro 2020. And regarding applicability of caro 2020, I hope you already know it because you will see in law. OPC, caro is applicable for all companies except OPC, small companies, banking companies, insurance companies, charitable organizations, Section 8 companies, certain private companies that do not meet a specified threshold limit for turnover, borrowings, share capital. So regarding caro, everything you can see in your law. Okay, don't skip it. See the caro, question can be asked from cost audit also. Okay, so that is regarding internal audit under Companies Act 2013. Is it clear? Now, getting into operational audit. What is operational audit and auditing of operations? An operational audit, often referred to as value for money audit. It is called as value for money audit. Is an organized approach to improve the organization efficiencies and effectiveness, which means how the operations are being happened in that particular entity. If operations are not proper, they have to take proper steps to improve the operations happening in that particular entity, so that will improve the organization efficiency and effectiveness of working. Okay. It focuses on whether the organization is operating optimally in terms of resource use, production, decision making process. Whether the operations related to production, process, decision making, resource utilization, whether all the operations are being done in an effective way or not. Regarding that examination is nothing but called as operational audit. Unlike financial audits, which focus on verifying the accuracy of financial statements, operational audit are concerned with why the business is performing the way it is and how it can be improved. So, whatever the work done, they'll prepare a report of it, which is called as financial reports of financial statements. Analyzing the financial statements is financial audit. But why that particular operation has been done, why that activity has been taken place, did that activity gives any impact into the profit or not? By conducting that particular operation, is there any benefit for the organization or not? Whether the operations have been complied with laws and regulations or not. All these are under operational audit. Operational audit is a management service evaluating the 4 primary functions of management. What are the main functions of management which will be analyzed in operation audit? Planning, organizing, directing, controlling. Whether management is doing all these 4 or not will be checked in operational audit. The planning of operations, the organizing of operations, the direction of operations, and controlling of operations. All these are the work of management. Is management is doing that work properly or not will be checked in operational audit. Clear? Now, what is the main objective of operational audit? For that we have deeming. The acronym is deeming. Okay. The objective of operational audit can be encapsulated, which means detailedly analyzed. Capsuled means closed. Encapsulated means opened. In an acronym, deeming, reflecting the principle of WE deeming, a pioneer in the total quality management. What is deeming? D is detailed understanding, E is eliminate, M is merge, I is improve, N is new methods, techniques and devices, E is to govern. What of detailed understanding? Detailed understanding of what is existing process, how to improve it. Eliminate if there is any waste or duplication of work. Merge the operations processes to reduce the time which is allotted, improve quality, volume and revenue for that particular organization. New methods, techniques and devices should be implemented for better results and better understanding. Govern the 4 M's: man, machine, method, money. So all the 4 M's should be governed. This is nothing but the main objective of operational audit. Okay. Clear regarding operational audit? Operational audit is nothing but auditing of operations, how they are being happening in that particular entity. Now, what are the advantages of operational audit? Provide unbiased insight about the operations, like how operations are being conducted, if they are truth or not, if they are fair enough or not, if the products are being qualitatively given to the public or not, whether customers are being deceived or anything, everything will be checked. Then operational audit. Increased efficiency identifies inefficiencies and areas for improvement, leading to quicker production and reduced TAT. TAT is nothing but turnover around time. Turn around time. Okay, that is turn around time. So whether there are any inefficiencies in the operations, that will be known. Whether there are any areas for improvement, that will be known, leading to quicker production and reducing of time. Cost rationalization helps in identifying and reducing unnecessary cost. If there are any unnecessary cost, that will be reduced. Operational excellence encourage a culture of continuous improvement. To know regarding operations, to know if there are any areas of improvement, to identify risk, to reduce the cost, to encourage a culture of improvement, that is also continuous improvement. These are the advantages of operational audit. Clear? Now, if advantages are there, we'll have disadvantages. Disadvantages: resistance to change. Organization culture may resist operational changes, creating challenges in implementation. So majorly, if there is any change in operation, still now they are following a certain operation, a certain process. Now, they found out that there is certain inefficiency in that particular process. They are wanting to shift the operation. Now, if they are entirely changing the operations, the employees may not be so used of, they will be so used of that particular past operations. They will not be able to convert themselves from the past operations to the present operations. Resistance to change. That is concept 4. Now, in operational audit, we have 2 approaches for dealing it. One is active approach, one is passive approach. Active approach is nothing but focusing on preventing the wasteful activities, reducing the leakage, revenue leakage or cost cutouts, enhances business performance through proactive measures. So taking the measures to improve the business performance. All these are called as active approach. Reducing the waste, preventing wastage, revenue leakages, cutout costs and enhancing the business performance. These are active approaches. Coming to passive approach, typically aligns with compliance and risk-based audits, like everything is complying with laws and regulations or not, are operations complying with the management opinions or not, whether there are any risk involved in it. That is nothing but passive approach. May not provide a comprehensive view of operational risk. Passive approach will not give a entire overview of operational audit, but it will only be focused on risk based approach or compliance approach, which will only focus on one particular thing, not on entire operations of the entity. Often limited to assessing risk without integrating operational improvements. So passive approach will not focus on improving the operations. It will focus on finding out whether there is compliance or whether there is risk-based audit or not. So that is active approach and passive approach. Key steps in conducting operational audit. What are the steps which will be taken by the auditors while doing the operational audit? First, they'll decide about the scope of audit work, like what they want to find out in that particular audit. Whether they are going for operational audit to find out whether the operations are working or not, whether the processes are working or not, whether the production is in line or not. What is the major goal of that particular audit? Understanding the business and processes. Formulate a audit program based on this understanding. First, understand the entire regarding the business, its environment. After that, prepare a audit strategy. Evaluation of accounting and internal control systems in the auditing enterprise. To check whether the internal control systems in the auditing enterprise are proper or not. Determine the nature, timing, extent of audit procedures. What is the nature, till when it can be started and when it will be ended, and what is the extent of audit procedures. Document everything. Prepare audit notebook, audit working papers, everything for what? Reference. Analyze findings and develop conclusions. Provide a comprehensive report based on audit findings. At last, prepare a report on the audit findings. So these are the steps. First step is to create a goal. Second step, understand regarding the business. Third step, evaluate whether the internal controls are proper in that particular entity or not. Fourth step, decide nature, timing, and what is the extent of the procedures. Fifth is to document it. Sixth is to give an opinion regarding it. Seventh is to finally prepare a report. So these are the steps which will be followed in the operational audit. Clear? Now, what are the techniques for collecting evidence in the operational audit? What techniques which can be followed? Electronic data processing, if everything is in electronic format. If all the record statements are in electronic format, they can go for electronic data processing. Utilize technology to identify gaps in operations. Process flow charting, visual representation of process to identify inefficiencies. Visually go and check the operations which are happening in that. Go to the production unit, go to the process unit and verify it yourself. Discussion for clarity. Engage with the stakeholders, engage with the employees who are working. Go directly and get the clarity regarding the procedures and process. So these are three techniques which can be followed for collecting the evidence regarding operational audit. Now, till now we have understood regarding the operational audit. What is operational audit? What are its objectives? What are approaches? What are advantages, disadvantages? And finally, what are the steps of operational audit? These are the concepts which we have seen till now. Now, we have seen what is internal audit. Difference between internal audit and operational audit. Internal audit and operational audit differences. Internal audit majorly focuses on complying with rules and policies. It will check whether the internal controls are proper or not. Internal controls are nothing but rules and policies implemented by the management. So checking the rules and policies implemented by the management are proper or not is nothing but internal audit. Now, focus on risk identification and proceed improvement. Whether in operations, whether there are any risks involved. If it is involved, improve the operations. That is nothing but operational audit. Primarily concerned with financial accounts. So, internal audit is majorly done in financial accounts, but operational audit is done for business operations. Internal audit is done to review the transactions and whether they are following the standards or not. Operational audit is reviewing the process to know whether it is effective or not. Internal audit examples are cost center for budget monitoring. Operational audit holds departments accountable for performance improvement. So, how the cost center is doing the work based on the budget, that is internal auditing. How cost center is working under its operations is operational audit. Okay. So regarding performance improvement is operational audit. Regarding cost or budgeting monitoring is internal audit. So this is the difference between internal audit and operational audit. Is it clear? Now, we have risk based audit. Now operational audit is also a risk assessment. assessing the risk in the operations. We have risk-based audit and operational audit. What is the difference between risk-based audit and operational audit? Risk-based audit is nothing but prioritizes operational risk but often fails to cover all operational aspects. So, regarding one particular operational, it will take one particular operation, and in that operation whether there are any risk-based or not. That is the auditing of risk-based audit. But operational audit is a review of all activities related to operations to achieve a defined objective, to define whether the risk is involved into entire operations related to entities. Operational audit. Only regarding to one process of operation is risk-based audit. Clear? Internal audit, operational audit, risk-based audit, operational audit. Clear? Now, coming into our next concepts. From here we are going to see regarding audit program, audit documentation, what is continual audit, what is final audit, what is audit working papers, audit notebook, audit engagement letter. So everything, so operational audit part is this much. Now, we are going to see regarding entire audit from here. These concepts which we are going to discuss is regarding audit. It could be related to cost audit, financial audit, internal audit, statutory audit. For all audits, these are same. Okay. Now, audit program. What is audit program? A audit program is a detailed plan outlining the auditing work to be performed. Whatever the work is going to be performed in the entire auditing process or planning, everything is nothing but a audit program. It specifies the procedures to be followed for verifying each item in the financial statements. So audit program is a procedure which is followed to verify whether the each item in the financial statements are proper or not. The estimated time required for each procedure. So the procedure what to be followed and the time for that procedure completion. Everything will be there in audit program. Essentially, it serves as a written plan or memorandum for the audit work to be done by that particular auditor during an audit, guiding the audit process and checking against potential omissions. So, it is nothing but a written document for an auditor or his audit team in which they can go and verify it whenever they want. When creating an audit plan, what are the factors to be considered? We already know the auditor have to go to the previous auditor who have worked and collect the information regarding the previous audit. Checklist, he have to prepare a checklist from the previous auditor. Changes in the commercial laws, whether there is any changes in the law when that particular audit has been done, and now when we are doing the audit, whether there are any amendments or not, that have to be checked. Special areas or investigation. What is a special area in which that particular auditor has to focus on? These are the 4 factors should be considered when creating an audit program. Components of internal audit program. This is only related to internal audit program. Objectives should have a clear objectives for each area of audit, because we are doing the audit of what? Operations, about the internal departments. So regarding each area of audit, there should be a clear objective. And then assignment of staff responsibilities for carrying out specific activities. As we have seen in internal auditing, there should be separation of duties. So responsibilities also should be assigned to different staffs. Estimated time allocated to each activity. Detailed guidance for staff on how to execute the audit procedures. So these are the factors to be considered in internal audit program. Now, advantages of audit program. What are the advantages of having this detailed plan for audit? Why we have to have this internal audit? Why we have to have this audit program in any organization? First, we'll have checklist. Checklist is nothing but we are preparing a questionnaires of 10 and we will go on check each and everything. Serves as a ready checklist of audit procedures to be performed. Work allocation. Every work will be allocated to proper persons, facilitates proper allocation of audit work among assistants or clerks. Progress monitoring allows auditors to track the extent of work done at any time, enhancing the supervision and control. So whenever the auditor wants, he can come and check how much the work has been done in that particular organization. Uniformity ensures consistency in the audit process across different periods. So when a same audit program has been followed throughout the audit engagement, whenever there is any change in the audit, if they want to understand regarding that particular audit, they can just go to the audit program and check the audit program, and they'll understand what the work is being happened in that particular audit engagement. Ensures consistency in the audit process across different periods, even this particular accounting period or the next accounting period. If the audit program is same for both the accounting periods, then even if the different periods are there, it will be followed consistently. Evidence of diligence can be used by auditors as evidence for their diligence and care in the case of disputes. So audit program also will act as a evidence for the auditor. So whatever work done by the auditor, he can show the audit program as a proof. If management is saying like you have not checked regarding the materials or inventory, then he can show the audit program. No, I have prepared the checklist and this is the opinion on that particular checklist. I have prepared the I have already analyzed regarding that particular raw materials allocation. So these are the advantages of audit program. Now, disadvantages: mechanical approach. The task may be mechanical, leading auditors to lose interest and initiative. It will be majorly focused on the operations of that particular business. So always the auditing process will be same, which will the auditors will lose the interest. What we have to do, we have to go and check the same records. Why we have to go there? So they can lose the interest in doing that particular audit. Incapability for small concerns. The audit cannot be done for small concerns. May be unnecessary for smaller businesses. There won't be any much crimes or frauds involved in that particular company. Defense for inefficiencies. Inefficient staff might use the audit program as a defense against accountability by claiming omissions were not included. They can see if they know regarding the audit program, like what is the detailed plan which the auditor is going to analyze. They can become aware of the fraud and they can try to cover up the fraud which has done by them. Rigidity. A rigid program may not suit every type of business or situation. If a audit program is to detect any fraud or something, will that be applicable to any business who doesn't have any fraud in that particular entity? No. So audit program should be designed in such a way regarding to the business operations. A same audit program cannot be applicable for two different businesses. So these are the advantages and disadvantages of audit program. Clear regarding audit program? Now, getting into concept 11. Continuous audit and final audit. What is continuous audit and what is final audit? Continuous audit is an ongoing examination of all transactions by the auditor throughout the financial year at regular intervals like monthly, weekly or fortnight. 15 days he is doing the examination of all the transactions and preparing a report, doing the audit. That is a continuous audit conducted continuously before the end of financial year. So before the end of financial year, whenever the transactions are being happening, he'll do the audit. Involves constant pressure of the auditor staff because every time they have to work. Unlike the final audit or unlike the other auditor staff, they'll only be doing work when everything is done. Like when all the operations are done, they'll conduct the audit. But this continuous audit is done whenever is happening. Transactions will happen daily in that particular business. So they have to do auditing also daily. At the client's office during the review period. Suitable for which organization's continuous audit will be suitable? When the final accounts need to be presented soon after the financial year, just after the end of financial year, within 30 days they have to give the uh, report or final accounts. In that case, they have to be sure that nothing wrong has been done, nothing information has been omitted, no fraud has been committed. For that, continuous audit can be done in that particular organization. In scenarios with high volume of transactions where the internal control systems are weak, in that case, continuous audit can be done. Now, what are the benefits? It provides real-time insights into financial transactions, like timely how the financial transactions are happening. Helps to identify errors and frauds promptly. Facilitates timely preparation of financial statements. So these are the benefits of going for continuous audit. The same opposite is final audit, which is done after completion of everything. Okay. Also known as completed audit or periodical audit, is performed after the financial year has closed, specifically after the books of accounts have been finalized and the financial statements are prepared. So continuous audit is done before preparation of financial statements, but final audit is done after completion of financial statements. Conducted after the financial year ends, once the accounts are closed. The client handovers complete set of books to the auditor and asks him to do the audit. The auditor performs routine checking and audit procedures only after receiving the books. Suitable for organizations with straightforward transactions. No complicated transaction. Straightforward transactions are there. Situations where volume of transactions are manageable, like for small entities, they can go for final audit. Audits where internal controls are very much stronger. Benefits. What are the benefits of going for final audit? Provides a comprehensive overview of financial position. Unlike the continuous audit, it will not give the analysis regarding all the financial transactions which are happening on timely basis. It can just only give a overview of financial position, whether there is a profit or loss. It will not check into deep for each and every transaction. Ensures compliance with accounting standards and regulations, whether all transactions are complied with standards or not, regulations or not. Helps in assessing the effectiveness of internal controls post fiscal year. After completion of financial year, how the internal controls, whether they are effective or not. So that is the difference between continuous audit and final audit. Clear? Yes. Now starting with our concept 12, audit working papers. Before, when discussing the cost audit, we have discussed what is audit working papers. Now we are going to see in detail about audit working papers. So yes, what are audit working papers? Audit working papers is a document or a record which will be prepared by the auditor, like how they are doing his work, how the process is going, what are all evidence which is collected in that particular audit. Everything will be documented and recorded in a format which is called as audit working papers. Audit working papers, often simply referred as a working papers, are formal documents and records that auditors prepare and maintain during the audit process. So whatever documents, records are there, everything are maintained in a proper document which is called as audit working papers. They serve as a comprehensive documentation of audit procedures performed, evidence obtained, conclusions reached by the auditor. So regarding evidence obtained, what are the conclusions and what is the audit procedure? Everything will be there in what? Audit working papers. Now, what is the purpose of doing this audit working papers? So that it will be as a evidence for the work done by the cost auditor. It will act as a proof or supportive document for the procedures. To support and document audit procedures, to provide evidence of the work performed and conclusions reached by the auditor, to demonstrate compliance with auditing standards. So what is the purpose of making this audit working papers? One, to support that all the audit procedures are documented. to act as a evidence of the work done by the auditor, and all the work done is in compliance with the accounting standards. To know all these three is the purpose of audit working papers. Now, what are the contents of audit working papers? Trial balance, supportive schedules, testing documentation, analytical procedures, any other relevant information that provides evidence of audit work performed. All the related information, trial balance, P&L account, balance sheet, everything. If it is a financial audit, everything will be recorded in what? Audit working papers. Confidentiality and access, we already know, no unauthorized access should be allowed to audit working papers. The information in the audit working papers should be maintained in a confidential manner. Working papers are formal documents meant for retention in audit file. As I've already told you, audit working papers, audit notebooks, everything combinedly, all the collective of records is nothing but audit file. So audit working papers should be in audit file. They may be reviewed by external parties such as regulatory authorities or other auditors. Other auditors, regulatory authorities can come and check the audit working papers, but not then, other than them, no one can go for accessing auditing working papers. Structure and format of audit working papers. Follow standardized formats as prescribed by auditing standards. So how these working papers will be prepared? By following auditing standards. Auditing standards are for whom? Auditors. Auditors have to comply with audit working papers while conducting the audit. So everything which is complied with audit working papers or audit proceedings, those will be there in auditing standards. Regarding that, they have to mention it in audit working papers. Organized for easy review and understanding by others. So when audit report is given, that report will only be given to authorities. But if anyone wants to come and check about the audit in between the audit, like auditing is going on and suddenly one authority is coming and asking what is the procedures which happened till now, then they can show the audit working papers that these are the steps which are taken till now, these are the procedures followed, and this is the up-to-date work. Organized for easy review and understanding by others, including auditors who were not directly involved in the audit field work. So any other competent person, if he is coming and checking the audit working papers, he will be able to understand how much the audit work has been done. Timeline, when this audit working papers will be prepared? After completion of audit? No. When it is prepared prepared as audit progress. So whenever the audit is going on, they'll prepare the audit working papers, and finalized at the conclusion of audit field work. So whenever the work is being done, they will record it. Final audit working papers will be done after the completion of audit work. Providing a snapshot of the audit at the specific point of time. Till now, what is the audit? A snapshot of it, the overview of it. Till now, what is the audit? Overview of that particular audit. So these are the information regarding audit working papers. Clear? So this is the concept of audit working papers. Now, we have types of working papers: permanent audit files and current audit files. Working papers can be of two: permanent working papers, current working papers. Permanent audit files. These files are updated with information on continual improvement or importance, include legal and organizational structure of the entity like MOA, AOA. These are permanently should be preserved. Those documents will be there in permanent audit files. Extract or copies of legal documents, legal agreements. If that company is getting into new contract, new project, or getting into any merger, or introducing any new product, or getting into agreements with other companies, agreement with the auditor, agreement with director, agreement with manager, shareholders agreement, the MOA, AOA, or the consent letters which has been received by auditors, these should be stored in permanent audit file. A record of internal control evaluation, like what are the internal controls taken by the management, timely that should be updated. Copies of previous year's audited financial statements, notes on significant accounting policies, these are all should be preserved as a permanent audit file. Current audit file. What are current audit file? Which are only related to current year period. Those are not so important for the next year period. Those are only relevant for current year period. Like important matters of board meeting or general meeting. Board meeting and general meeting, only discussions of current year period will be discussed. Management letters, analysis of transactions and balances, communication with other auditors or experts, conclusion reached on significant aspects of audit. These are related to current status. So whatever information is related to current status, that will be recorded in current audit file. But regarding MOA, AOA or agreements or contracts or any kind of internal auditing done, the report of that, or any notes of policies, internal controls, these are permanent audit files. Clear with the types of working papers? Now, do preservation of audit working papers necessary? We are going to see it. That will be based on this. All these categories or all these elements will influence the preservation or retention of audit working papers. Client agreement according to terms of client. If clients want audit working papers to be preserved till the next auditing period, he will preserve it. If he don't want it, he'll not do it. Terms specified in the agreement with the client. Firm's policies. According to policies, each and every work which is done should be documented. Then audit working papers will be documented. If not, it need not to be documented. Policies established by auditing firms regarding documentation retention. If in that particular policy it is there like each document should be retained for 5 years after the completion of that particular period. Till 5 years it should be retained. After that it can be removed. Nature of engagement. If it is more complex, like if they have found out anything important factor of that particular entity, if it is majorly important for that particular business, then that can be stored. If it is normal audit which is done, regular audit which is done, it need not be stored. Significance may impact retention. Legal considerations, compliance with legal requirements. If court is saying like you have to retain this audit working papers for this much period, then they have to follow with legal requirements. Litigation. If in that particular audit, did they have any litigation or what? If they had litigation, they have to store it till the litigation is resolved in the court of law. After litigation is resolved, they can remove it. When the litigation is actually going in the court of law, they have to retain it. Retaining papers beyond legal requirements if litigation is ongoing. After litigation is completed, they can remove it. So, preservation of audit working papers will be based on all these factors. What are the advantages of audit working papers? As we already know, it will serve as the evidence of the work done by the auditor. It is a reference for the future audits. It is legal compliance, that all the audit work is done under the legal and regulatory compliance. Training tools, serves as example for training new auditors who are coming, or to transfer the knowledge of previous auditor to the new auditor, they can see this audit working papers. Record of adjustments and reconciliations. Document any adjustments proposed by the auditor, enhancing reliability of financial statements. So, if new auditor is coming and they want to know about the reconciliations which has been done in the previous auditor, they can check regarding the adjustments and reconciliations. So, these are the advantages of audit working papers. Clear regarding audit working papers? Now, audit notebook. What is audit notebook? Audit working papers are the process which is done in the particular audit that will be recorded. But in audit notebook, it is only for particular auditor. What are his observations? What are his information? What he want to record? It is like a rough book. Okay, audit notebook is like a rough book but in a formal way, not like we are drawing something faces. We are writing our crush's name and that, doing flames and all. Not like that. Okay. Audit notebook is a tool used by the auditor to record and organize their thoughts. It is not finalized. What are their thoughts till now? They'll record their thoughts, observations, key information throughout the audit process. It serves as a permanent record of the auditor's findings and is usually maintained separately for each audit engagement. The notes should be clear, complete, and systematically organized. So, in this, everything will be recorded. The process, procedures which are recorded in audit working papers are also recorded. But what are his observations? What are his thoughts regarding that particular audit? That will be recorded in audit notebook. Now, what are the contents of audit notebook? Name of the organization, organizational structure, important provisions of MOA and AOA. Whenever the auditor want to go through with it, he can just run the audit notebook. Communication with the previous auditor, list of books of accounts, accounting methods which are followed by that particular entity, internal controls, key managerial person who are working in that particular entity, errors and frauds discovered, matters relating to explanation. Regarding all these, he can write in audit notebook. Is this for reference for audit work? No, it is for reference of auditor himself. If he want to know about any information from the MOA or AOA, he will refer audit notebook. If he want to know about the explanation regarding anything, he will open the audit notebook. If you want to know what did he talk with the previous auditor regarding anything, he will open the audit notebook. This will act as a reference for the auditor to conduct the audit work. Same like audit working papers, preservation of audit notebook also on the same factors. Regarding client agreement, firm policies, nature of engagement, legal considerations, litigation. On all these factors, preservation will be based on. What are the advantages of audit notebook? Personal reference, as I have told you, it acts as a reference for personal himself to conduct the audit. Acts as a personal reference for the auditors, tracking progress and outstanding issues, brainstorming and idea generation. If he is struck at some point, he don't know what to do with the next point. So what he'll do, he'll open the audit notebook. He'll refer what are the interviews which he has conducted. He'll check all the interviews. He'll go on with the previous auditor's interaction. He'll go on with the MOA, AOA. After that, he'll get the idea. Yes, I have missed this point. I have to recheck it. I have missed this point. I have to re-verify it. He can go on with that. So, it can be used as a brainstorming or idea generation. He can be creative and critical thinking can be analyzed by checking the audit notebook. Risk identification aids in identifying and documenting potential risk and control the weakness. If he is being influenced in any of the cases, he can write that in audit notebook. This decision is being influenced, and if he is not satisfied with after some time, if he is actually implemented in a correct way, it will work. But if it's not implemented, he can go and check in the audit notebook. Yes, this is an influence decision. I have to change it. He can change his decisions. Preparation of audit working papers. Information in notebook serves as the foundation for audit working papers because the basic information regarding audit will be recorded in audit notebook. But after that, regarding procedures, process, everything will be recorded in audit working papers. Training and knowledge transfer. To train himself regarding the company's operations, regarding company basic details, he can go on with the audit notebook. So first audit notebook, then audit working papers. Clear now? Now, getting into our concept 14, audit engagement letter. This is nothing but an agreement between auditor and company. Like company is giving a company and auditor are both getting into an agreement that there will be audit between the company and auditor. That is nothing but audit engagement letter. An audit engagement letter is a formal document that outlines the scope, terms, Conditions of the audit engagement between the auditing firm and the client, between the auditor and that client, that business or anything. The formal agreement between both this thing, both the parties, regarding what will be the work, what will be the nature of work, what will be the scope of work, and what are the conditions of work. That is nothing but audit engagement letter. The written communication is crucial for establishing clear expectations and minimizing misunderstanding regarding the audit process. So, when audit engagement letter is used, that audit engagement letter will be a written communication which is crucial to understand regarding the expectation of the management. Like, for what reason they want to conduct the audit, what is the main goal of that particular audit. To have the clear understanding, this audit engagement letter will be helpful. This is nothing but a when one employee is getting into a organization, they'll give a offer letter, and that offer letter regarding all terms, his scope of work, which till what he will be accessible, what will be his play, everything will be given. That is nothing but audit engagement letter. It is nothing like an offer letter to the auditor. Okay. What is the purpose? It acts as a clear expectation, like clearly defines the responsibilities of both auditor and the client. What client will do, like they will pay the fees, they will give all the documents, they will give all the records, everything from the business. This will be the thing. And what auditor have to do? He have to give the independent examination and opinion of that particular thing. Everything will be clearly recorded in what? Audit engagement letter. Preventing misunderstanding. No misunderstanding will be there because everything will be in a written document. Helps to avoid any potential confusion about the scope and terms of engagement. Formalizing agreement serves as a record of agreement between the auditor and client. So that is nothing but an audit engagement letter. What are the contents of audit engagement letter? Introduction, name and address of client and auditing firm. Objective of audit, the specific goal of audit, such as reliability, integrity of financial and operational information, compliance with laws, regulations and contracts. For what audit is being conducted? Is it for a reliability and integrity of financial statements? Is it to find out whether they are complying with laws and regulations? Is it to find out periodical physical verification of inventory? Is it to find out, is it to safeguard the assets? Follow up on recommendations from prior auditor report. Now, there is a previous audit report. What is the new audit report? We want new audit report because till now we are taking the decisions according to previous audit report. But we want new audit report. For that, we want audit to be conducted. So, what is the major goal for which audit is being conducted? That will be the objective of audit. Next, timetable. This timetable will be prepared as a scheduled outlining from time to time. In quarter 1, this will be the timetable. In quarter 2, this will be the project. In quarter 3, this will be the thing. In quarter 4, this will be the thing. From one quarter to other quarter, what will be the work done by them? That should be there in the proposed timetable. like I have told you, like for day 1, this will be the class. Day 2, this will be the class. Day 3, this will be the class. As like quarter 1, quarter 2, quarter 3, quarter 4. What will be the audit procedures which will be followed in that particular audit? Audit team composition. Who are the team members? What are the names of them? What are the addresses of them? Name of manager 1, name of staff auditor 1, name of staff auditor 2. Likewise, they have to give the information regarding audit team. Initial meeting, an invitation to meeting, discuss audit objectives and solicit input from the management. Between the management and the auditors, what is the first meeting which is being conducted? Regarding minutes of meeting, regarding the discussions held, and regarding the discussions of objectives with that particular audit team members. Everything should be there in initial meeting. And documentation requirement. Request for the relevant staff to provide necessary documents related to their departments in the specified quarters. Like what is the audit report for that particular quarter? That should be documented. Draft observations circulations. Draft observations. Like what is the observations till now? Draft, not final conclusions, but draft observations should be given from time to time. At the conclusion of audit, draft observations will be circulated to all functional head of departments for their comments and proposed actions. Before giving final audit, any auditor will give draft report and ask regarding any changes. If you want to give explanations, you can give any explanations. If he is satisfied enough, he will drop the issue. If he is not satisfied enough, he will take up the issue and give it in the report. Discussions of draft observation. First, he will give draft observations and ask to give the justification or explanations. He will discuss it with the department heads, and after that he will give the final audit report. Observations for which satisfactory answers or action plans are reviewed will be dropped from the final audit report. Remaining observations which are not satisfactory enough will be included in the final audit report for discussions with the management. Mission statement. The auditor goal to achieve the department's objective by providing information on internal controls and recommending improvements. At last, he will give his conclusions and opinion regarding the audit. So, this is the contents of audit engagement letter. All will be there in what? Audit engagement letter. From start to end, everything will be there in audit engagement letter. So, that is regarding our unit 2. Operational audit and internal audit under Companies Act 2013. Clear? Having any doubts? What did we discuss in this unit? Operational audit, audit working papers, audit notebook, audit engagement letter, final audit, continuous audit, and internal audit under Companies Act 2013. Clear with all the concepts? Yes. Now we are going to start with our unit 3 in section C, which deals with audit of different service organizations. Like we have different service organizations like hospitals, hotels, educational institutions, like how the audit will be done for that particular organizations. That we are going to discuss in this particular unit of audit of different service organizations. Is this unit important for examination? Very, very, very important. One question will be asked compulsorily. Okay. So, the basic introduction regarding internal audit and service organizations. The internal audit function can be conducted specifically in service organization to ensure that there is a quality, that there is a compliance and risk mitigation. Any audit is done only for these three things. To check whether they are complying or not, to check whether the quality is there or not, and to check whether there is risk mitigation steps or not. For this, all the audits will be done. Now, we are going for our concept 2 audit of hospitals. What we have to, or what the cost auditor have to do regarding the audit of hospitals when he is doing the audit of hospitals. First, review the letter of appointment to understand the auditor's duties. First, you have to receive the letter of appointment to know what is the scope of audit. Next, ownership and control. Assess the ownership structure and control mechanism of the hospital. Who is the dean of that particular hospital? Who, under whose ownership the hospital is being run? That is the ownership and control. Processes and control. Examine key process like admission, discharge, outpatient services, tests and operations, ensuring proper control over revenue generation. Whether admissions, discharge, all are recorded in books or not. And whether each and everything which is recorded in books is reflecting into revenue generation or not. That has to be done. Income verification. Validate the donations, grants, interest, dividend income, all the incomes which the hospital can derive. Have to audit on all these things. Through supporting documents, cross-checking with the investment register. Incomes, what are the investments, what are the expenditure. They have to cross-check both. Purposive funds. Ensure that donations and grants are used for their designated purposes. Capital versus revenue. Differentiate between capital expenditure and revenue expenditure. Standard operating procedures. Check that standard operating procedures for both capital and operating expenditures are done or not. Is it related to capital? If it is standardly following or not. If it is for operation, it is following for standard or not. Internal control on purchases. Verify the internal controls over purchases and issuing of stores, medicines and medical equipment. They have to maintain a proper register for all the medicines, for the medical equipment. That has to be revised again and again. The medical equipments have to be done the repairs and they should be updated from time to time. Staffing and payments. Validate the appointment of staff, doctors, salary payments for accurate expense booking. In my book, I have simplified the points in one point, like regarding staffs is 1 point, regarding doctors is 1 point, regarding salary payments is 1 point. I have compiled it as a 1 point. When you are writing it, you have to split and you have to write it. Okay? Then you will get more points. You can easily remember 5 points and convert it into 10 points in your answer. Okay? Asset verification, physically verify investments, fixed assets, inventories. Capitalization and depreciation. Check the appropriate asset capitalization is done. Appropriate depreciation methods are followed. If methods are followed, that method should be followed in a consistent basis. Rates, what are the rates which are followed and the reflection in the books, how they are affecting the books. This is regarding the audit of hospitals. Clear? And you have to additionally write regarding the register of books like admissions, donations, discharges, proper staffing has to be done. You can write it in your own words. Okay? Regarding that is regarding audit of hospitals. Clear concept 2? Now concept 3, audit of hotels. For hotels, how the auditor should audit. The points stated below are to be considered for conducting audit of, sorry, this is not hospital, this is hotel. Okay? Check the letter of appointment to ascertain the scope of responsibilities. What are the letter of appointment should be taken? Study the charter or trust deed. This is for hospital. Why is hospital is here? I think hotel is shifted to hospital and hospital is shifted to hotel. Ah, yes. I think I have cross shifted that. So yes, there is a small mistake on this book. This is also audit for hospitals. Okay. So the audit of hotels has been replaced by audit of hospitals. Then what is regarding audit of hotels? This is audit of hotels. I'll send this as a screenshot to you all. Try to revise this. Okay. Try to take a printout of this and put it in your book. Now, audit of hotels. Ensure controls are in place to prevent revenue leakage and pilferage. First, they have to have a proper internal controls regarding revenue leakage issues. Check effectiveness of cash handling, purchasing, billing, inventory control for item like food, beverages and assets like linens, utensils, whatever the assets will be there in that particular hotel, they have to properly maintain records for that. Validate compliance with licenses, if whether it is related to bar or restaurant, the proper license should be obtained for that particular hotel. Room sales and cash collections. Verify room sales, billing for services like laundry, mini bar or any kind of inbuilt restaurants are there, and regarding that the cash collection should be recorded according to that separate head. Ensure room rates and sales from various points like restaurant, bars match the recorded sales, whether the actual sales are recording with the book sales or not. Validate payments by cash, card and foreign exchange for accuracy. What is the payment made through cash, what is the payment made through card, and what is the payment made through foreign exchange like other currencies, foreign currencies. Stock management. Regularly verify stocks like food, beverages and hotel supplies. Ensure proper documentation for stock movement. Validate against kitchen orders and guest orders. What are the regular orders, what are special orders and what are guest orders? The separation should be there, because All will not be in same rates. Everything will be in different rates. So everything should be documented properly, and the stock movement also should be documented properly. Physical stock verification with surprise checks is crucial. What is the actual stock in personal, and what is the stock which is there in books? The auditor have to go and check regarding that. Fixed assets and depreciation. Maintain a proper fixed assets register, noting details like installation date, cost, and depreciation. Ensure depreciation is calculated and recorded accurately. Regarding all the machinery and equipment with that particular hotel has, the depreciation is proper or not. That has to be checked. Labor cost and casual labor. Check records and payment accuracy for casual labor and regular staff wages. Who are regular staff? Who are only for that particular casual labors. Ensure proper attendance system are in place or not. Conduct facility wise, like if there are any swimming pools in that particular hotel, if there is any spa for that particular hotel, comparison of cost versus revenue to monitor. What is the cost which is being incurred for that particular elements like spa or any kind of swimming pools or any games, gym? Every hotel will have these. So is the cost which is invested on that particular elements, is the benefit is being received or not? That should be verified. If that's not giving the cost benefit analysis, then suggest for the improvement. Compliance. Verify compliance with statutory provisions and foreign exchange regulations, whether there are proper compliance there or not. Review contracts and payments related to foreign collaborations, agency commissions, and booking arrangements. Regarding all these, they have to do the review. Auditor's task. Ensure customer bills matches the consumption record. These have to be compulsorily be checked by the whom? Auditor. Ensure customer bills match the consumption records. Review occupancy rates and benchmark them against the similar hotels. Like what are the hotels which are running on the similar basis? That should be kept as the benchmark, and well, which our profits are matching with them or not, that should be verified. Validate special receipts for events and facilities. Whether any functions are being conducted in that particular hotel, like grand celebrations are being handled, then that should be recorded in a separate register, like weddings and banquets. Cross check wages, salaries with the number of employees to avoid fictitious employee or payroll fraud. Booking and travel agent payments. Ensure travel agents' commission are paid as per agreements, and payments for agents are recovered with credit terms. If there are any agency dealings, then the payment for that agent should be paid based on the agreement which we have between the agent and principal. And if there are any agents who has given the early money, then that should be received from them back. Taxes and charges. Confirm that all the applicable taxes are included in the client bills and paid accurately. So the GST system, on the billing rate, there will be a tax for that will be collected by the customer, and that has to be paid to the government. Whether all these are complying by that particular hotel or not, that has to be verified by the auditor. I'm really sorry, there was a mistake in the book which I have given. This is actually the audit of hotels. I'll share you the screenshot of this. Try to take a print and include in your book. Okay, now this is also audit of hospitals. You can see any of the one. Now, concept 4, audit of educational institutions. This is a important question, has been asked in examination for 2 to 3 times. And in one attempt, this question has been asked in a split off point. Like how you will examine the constitution of institution and how will you examine regarding the relating to students. A split off has been asked regarding educational institution and regarding the students. So in our material, everything will be given combinedly. So I have split it into point wise. Now, audit of educational institution. Examination of basic constitution of institution. Like what are to be done when auditing regarding the institution. Review of formation and governance. Examine documents related to institution formation, affiliation, and management structure. whether the proper licensing has been taken for that particular education institution or not. Who is the ownership? What is the ownership for that particular institution? What is the management structure? Everything has to be taken care of. Review trust deed, regulations or university acts for compliance with fund monitoring, donations and expenditure approvals. First, trust deed has to be checked and verified, and after that regulations or university, if that in educational institution is coming under the university, then is it complying with the fund monitoring which is approved by the university? Is the donations given are properly utilized or not? Whether the expenditure approvals are properly taken or not? That has to be reviewed by auditor. Approving authority and governance. Check the minutes of governing body meetings for resolutions affecting the financial matters related to educational institution coming under the government. So there will be government meetings which will be conducted regarding that the financial matters are being affected or not. That has to be verified, including bank account operations and expense approvals. If educational institution is coming under the government, all the expenditure approvals has to be get by the government. Government will give the approval regarding the bank account operations and expenditures. Grant management. Confirm the grant receipts with the necessary documentation. If educational institution is receiving any grant from authority or any government, then that has to be documented and ensure the compliance with the current accounting for grant usage. Whether the grant is using for that particular purpose or not, that has to be verified. Review financial statements. Ensure completeness of accuracy in the receipts and payments and verify fund and bank balance. And at last, statutory compliance. Verify compliance with the statutory deposits like PF, taxes, affiliation fees, whether all these are done properly by that educational institution or not. And filing requirements, whether proper tax filing is being done or not. These are the examinations or verifications which cost auditor have to do regarding the educational institution. Now coming to relating to students. Students register has to be maintained. Fee collection. Verify the students register. What will be there in the students register? Name of the student, addresses, Aadhaar card, fee structure, etc. Everything will be there. And match with bank statements to ensure accuracy of fee collection. Whether the fee collection which is recorded in the books is matching with the bank account or not. Reconcile fees collected with counterfoil receipts and follow up on unpaid fees. Till now, what is the fees has been paid? Like education institutions will have a term fees calculation, isn't it? So, whether till now whatever fees has been paid, what is it? Is it in our bank account or not? Is it invested in anything or not? Is it utilized for educational purposes or what? And what is the unpaid fees which is yet to be received? Regarding everything, a detailed documentation should be maintained by the educational institution that should be verified by the auditor whether all are readily available or not. Student updates. Ensure timely updates to the student register for dropouts, transfers or discontinuation. So whether any student is dropout, that should be recorded, or whether any new admission is coming, that should be recorded. If any discontinuation is there, that should be recorded. So student register should be updated on timely manner. Fee condonation and adjustments. If any fee condonation is given to any student, if they are coming and asking to reduce the fees, then fee adjustments will be made. Verify fee condonation approvals and reconcile receivables with the received fees. Admission and other fees. Track and categorize other collections like admission fees. Admission fees will be different from the actual educational fees. So, regarding that admission fees, late fees, transfer charges under appropriate account heads. For everything, a register has to be maintained. A separate register. For admission fees, separate register. For late fees, separate register. And everything has to be documented accordingly. And auditor have to check the amounts with which are there in that particular register. Is it matching with the bank balance or not? hostel dues and refunds. If there are any hostel facilities for that particular students, whether the student register for that particular hostel is maintaining or not should be verified, and what are the dues which are yet to be paid, what is the amount paid till now, and if any student has been vacated from the hostel, did his name also taken out from the register or not, and if any refund has to be given for that particular hostel due, that also have to be recorded. Ensure hostel dues are settled before closing students' accounts and caution deposits are adjusted or refunded. Other sources of income like bank interest income, rental income, fixed deposits income, that also should be recorded, and that has to be verified whether these are recorded properly or not by the auditor. This is regarding the educational institution. Clear? Understood? Regarding hospitals, first we have discussed, next hotels, next educational institutions. Now, coming to audit of cooperative societies. This question also asked in our examination regarding audit of cooperative societies. Now, the audit of cooperative societies involve a unique consideration as outlined in the Cooperative Societies Act 1912. So, on the what basis this corporate societies audit is being done? On the basis of the act which we have. Below are the key aspects to keep in mind during the audit process. What are the audit process? In the audit process, what the auditor have to keep in his mind? Examination of overdue debts. Classify overdue debts into categories like 6 months to 5 months or over 5 months. That has to be categorized. Report on the classification, assessing whether provisions for doubtful debts are adequate or not. Analyze trends in overdue debts in relation to working capital and loans. Like what is the working capital over debts and what is the loan debts, that has to be classified separately. Evaluate actions taken for recovery and status of legal proceedings. If any cooperative society is involved into legal proceedings, then what are the recovery actions or what is the status of that particular legal proceedings also should be documented. Overdue interest. Exclude overdue interest from calculations of outstanding interest. If any overdue interest is there, that should be eliminated from the outstanding interest. While determining profit, overdue interest pertains to amount where the principal is overdue. If principal is also overdue, if interest is also overdue, then that should be eliminated from the outstanding interest when we are calculating the profit. Certification of bad debts. Bad debts must be certified as irrecoverable by the auditor. They themselves should not be give certification that these are bad debts and these are irrecoverable. Auditor have to verify regarding the bad debts and he have to tell whether the bad debts are irrecoverable or not before they can be written off against bad debt funds or reserve funds. The managing committee must authorize write-offs where no legal requirements exist. Even after the certification of bad debts as given by the auditor, the management can write off the bad debts which they have. Valuation of assets and liabilities. Follow general accounting and auditing principles for asset valuation. Verify existence, ownership, valuation of assets, ensuring fixed assets are valued at cost minus adequate depreciation. So how these assets and liabilities are bought into that particular cooperative society? Is it due to any donation or they have purchased these assets on their own money or not? That has to be verified, and they have to follow everything is accounting and audited principles or not. And regarding the existence of assets has to be verified. Regarding the ownership of assets has to be verified. How the valuation of assets is being done. We have valuation principles for assets, isn't it? Revaluation of assets, assets valuation. Like those principles are being followed or not. Ensuring fixed assets are valued at cost minus depreciation. Whether the depreciation is being followed in the books of accounts or not. Record liabilities accurately, ensuring all known liabilities are accounted for. Whether all liabilities are recorded in the books or not, that has to be verified. That is regarding assets and liabilities. Whether cooperative principles are being followed or not. It says how well the cooperative society has met its objectives. when the trust deed for that cooperative societies is bought, the main objective of that cooperative society will be given in that particular trust deed. Now, whether the operations which are going on now on that particular cooperative society, is it complying with that objectives or not? Is it misleading with those objectives or what? That has to be verified by the auditor. Ensure expenditures are justified. There is no wastage of funds. Avoid middlemen by ensuring direct purchases from the wholesalers when possible. So all the expenditures must be justified. No unnecessary funds has to be taken out from the cooperative society. Compliance with acts and rules. Identify any differences, infringements, differences of cooperative societies act, whether it is actually following the rules and regulations which are given in the act or not. Verification of members register and passbook. Examine entries in members passbook for loan transactions and repayments. If it is giving loans to the employees, then the loans register has been properly maintained or not. Whether the repayments from that particular individual is recorded in the books or not. Confirm loan balances personally to ensure accuracy and prevent manipulation. Personally, they have to evaluate regarding the loan and balances. Special reports to be registered. What are the special reports which are to be registered? Personal profiteering by managing committee members. If any managing committee members are taking profits for their own personal, how the profit has been divided between those members, that has to be taken. If percentage is higher or lower. Fraud related to expenses, purchases or properties. If for any purchases or buying any properties, is there any fraud involved? Is it under the name of cooperative societies or under the name of members who are working under the cooperative societies? If any property has been bought, that has to be registered under the name of cooperative society, not under the name of members working it. So all the expenses, purchases should be done under the name of cooperative society, not under the name of member. If it is done under the name of member, the expenses and purchases will be treated as members' expenditure. That should not be recorded in the cooperative society's books. Mismanagement that contradicts cooperative principles. If management itself is misleading or what? Inappropriate lending practices to related parties. Is any transactions is made with related parties or what? Even if related party transactions are being made, that should be made in arm's length basis. So all these have to be maintained as a special reports as a registered. Audit classification of society. Classify the society based on performance criteria set by the registered. So for each and everything, separate registers have to be maintained for the society. Management can appeal the classification if dissatisfied, prompting a review. If management is not satisfied with the registers maintained by that particular entity, or if the auditor is not satisfied, then they can ask for review, or if they are not satisfied, they can ask for suggestions from the auditor. Now, this is regarding formation of cooperative society, like how the cooperative societies will be formed. 10 competent individuals can apply to register to form a cooperative society as per Section 6 of Cooperative Societies Act. So, 10 individuals combinedly coming into a group can apply for the formation of cooperative societies. Bylaws must be created and registered with changes needing registrar approval. So if there are any changes, or if there are any any registration process has to be done for that cooperative societies, that has to be taken the approval of ROC. ROC have to approve if there are any changes with the formation or anything. There are two types of societies: limited liability society and unlimited liability society. No member can owe more than 20% of shares. Members can have shares in that particular cooperative society, but only up to 20%. So this is regarding cooperative societies. What? Yeah, formation of cooperative society. Okay. Now, rights and duties of auditor when doing the audit of cooperative society. Access to all society books. The right of the auditor is to have the access for all society books, accounts and documents, ensure the balance sheet presents a true and fair view of the business. These two are the rights of the auditor when doing the audit of cooperative societies. And what are the duties? Be knowledgeable about the Cooperative Societies Act and bylaws. Without knowing the act, he cannot go and verify the books. Identify and report any irregularities. Verify shareholding and members' eligibility, whether they are holding 20% share or higher shares. Review loan agreements and ensure compliance with limits, whether the loans given for the members or outside parties are within the limits or not. Physically examine society assets, whether the assets are under the name of cooperative society or under the name of members. Follow the prescribed format for financial statements, the format which will be given in act itself. So there will be a separate format for doing the financial statements for cooperative societies. Whether these prescribed formats are followed or not, that has to be seen. So these are the rights and duties of auditor while doing the audit of cooperative society. Now, what are the books and records required to be maintained by cooperative society? Cash book, general ledger, stock register, personal ledger, register of members, register of shares and debentures, minutes of meetings, property register, loan application register, audit objection register. These are the different types of register have to be maintained, and for each and everything separate register have to be maintained by the cooperative societies. Clear? So this is regarding cooperative societies. This has been asked as an in examination. So try to see this. Okay, clear? Clear regarding cooperative societies? So now, concept 6. Now, concept 6, audit of self-help groups. This is also been asked in the examination. So, now how the audit has to be done for self-help groups? The self-help group movement in India has emerged as a pivotal strategy for empowering the rural communities. So, why this self-help group strategy has brought to empower rural communities, especially poor women and marginalized groups. So, this is majorly based on poor women and those groups who are under these rural communities. Here is an overview of key elements, benefits and auditing approach for the self-help groups. What are the key features of SHG movement? Financial intermediation. SHGs serve as a unique model that combines self-management with access to affordable financial services. So, there will be self-management and there will be also financial services requirement also. The focus is both on social and economical development for women members. At the same time, they will concentrate on the self-management of the woman. Also, they will try to guide regarding the financial matters for the woman. So, both regarding social and environmental development for women members is given as given. So, that is the main feature of SHG movement. Formation and facilitation. SHGs are formed with the support of government initiatives or non-government organizations, both by government or NGOs. The SHGs are formed. They connect not only with banks but also with a broader development programs to enhance their impacts. So they connect with banks and also with different development programs to empower the women development. What are the benefits of SHGs? SHGs offer significant economic benefits. And what are those benefits? Give credit access, give savings benefit, income generating activities, like they will give work to the women and they will help for income generating. They foster social empowerment by promoting collective decision making. They involve women members into decision making part, enhancing the social status of women. So these all are the benefits of SHGs which are only related to women development. Okay. Now, applying the field balance sheet approach to the audit. This is the question which has been asked. We have seen in the paper regarding self-help groups. field balance sheet. Separate question has been asked. Applying the field balance sheet approach to the audit. The field balance sheet approach involves 5 steps, several key steps during the audit process for SHGs. What are those steps? We have 5 steps. What are those steps? We'll see now. First is doing a background review. Conduct a preliminary examination of group level records, including the cash book. Review member passbook to verify the accuracy of data entries and posting. So what they have to do? They have to do the preliminary examination for records which are all there in that particular SHG. What are the group level records which are there? Everything has to be verified. After that, they have to include the cash book, whether the cash book and the records are showing equal amounts or not. And after, the cash book has to be reconciled with passbook, whether both having reconciliation, whether there are any differences, that also have to be verified. Verify regarding the data entries and posting, whether entries are proper, whether the posting has been done properly or not. Regarding all these, background review has to be made. After that, prepare a field balance sheet. So this is the format for field balance sheet. Same assets, liabilities, they have to prepare a balance sheet. The auditor prepares a field balance sheet based on SHG's internal records, based on the financials which the SHG is having. Okay. Okay, based on the field balance sheet, this is the format for it, and based on that, the internal auditor or the auditor of that SHG have to prepare this particular balance sheet aimed at assessing retained earnings. So a student of mine has rectified my mistake. This side it will be liabilities and this side will be assets. A basic common mistake. I'm sorry for it. This is very basic mistake. Okay. Now, coming into the third step, private meetings with members. The auditor conducts private interviews with 25% of total members to validate the information and understand decision-making patterns within the group. So, private meetings within the group meetings have to be made to rectify the mistakes and to understand regarding the decision-making. The auditor conducts private interviews with 25% of total members to validate the information and understand the decision making patterns within that self-help groups. Meeting with SHG groups. If serious issues are identified during the audit, the auditor holds a meeting with the entire group for further discussions. First, with only 25% of members, the discussions will be held. But if that because of that meeting, a serious issue has been identified by the auditor, then he can call for all members and conduct a meeting. Reporting. Upon completion of audit, the auditor summarizes any weak practices that could jeopardize, which means if he could rectify those mistakes, if he could suggest for improvement for the weaknesses. Savings or effect. Record reliability. If any record is not in a state of relying regarding the information which is there in the record, he should have to make a suggestions regarding it. He have to report it to the management. Recommendations for better practices are provided. The auditor submits the field balance sheet and the summary report to the microfinance institution, which is called as MFI or bank, and all group members, adding comments to assist in the credit provision decision. So this is nothing but self-help group. First we have seen what is regarding the self-help group movement, and after that we have seen how the auditor have to work on that particular auditing. So that is regarding audit of cooperative societies and audit of SHGs. Now coming into concept 7, audit of NGO, non-government organizations, how they have to conduct their audit. What is NGO? NGOs are defined as non-profit organization. You already know that raise funds from the members, donors, contributors, and they often receive donations in various forms to achieve their social objectives. So what they will say, they will try to make the investment from the members, and from those funds they will run the NGOs. The legal framework of NGO. NGO in India are typically incorporate under various acts, including Societies Regulation Act 1860, Indian Trust Act 1882, Companies Act 2013, Section 8 for not-for-profit companies. So under all these acts, NGOs are governed by. Now getting into audit plan. When planning the audit of NGOs, the auditor should focus on the following aspects. What are those aspects which the auditor have to keep his view on while doing the planning of audit? What are those? He have to understand regarding the NGO. He should have the complete knowledge regarding that particular organization, NGO's mission, vision, operational areas, and the environment in which it operates. He have to review the legal documentation, like legal form of NGO, including its MOA, AOA, and rules and regulations. Everything has to be verified and reviewed by whom? Auditor. Organizational structure. Examine the NGO's organizational structure, like what are the basic objectives of that particular NGO. Financial and administrative manuals, project or program guidelines, and any requirements from funding agencies. Whether the funding agencies are giving the funding on the basis of you have to work only on this particular thing. If the funding is based on only one project, that funding should be utilized only for that project. So what are the requirements from funding agencies? Everything has to be examined. Board meetings, review the minutes of meetings from the board, management committee, governing body to understand decisions that impact the financial statements or financial records. Now, assess the existing accounting system, procedures, internal controls, and internal checks for their applicability and effectiveness. Entirely all the aspects have to be considered in planning the audit. First, he have to get the knowledge of business. Then he have to analyze the MOA and AOA and rules and regulations of NGO. Then he have to get to the knowledge about the financial and administrative manuals, what are the project programs, everything regarding the operations done in that particular NGO. Then regarding the minutes of meeting with the board of directors or any management or any government bodies, whatever meeting could be, the minutes of meeting should be there. At last, he have to assess regarding the existing accounting system in that particular NGO. These are the planning of audit and NGO. Clear? Now, audit program. We have seen what is audit program. The same thing is here also, but it is related to NGO. The audit program should systematically address all the aspects of NGO's financial position, including its assets, liabilities, income, expenditure. Everything has to be considered in its audit program. What are the key areas which has to be focused on? Corpus fund. Corpus fund is nothing but a fund which is given, which should be utilized only for that particular purpose. That is called as corpus fund. Reserves, if there are any reserves. Earmarked funds, which means utilized after the particular period, like the funds which will be given for this particular period, but that will be safeguarded and will be utilized for the future periods. Earmarked funds, project or agency balances, loans, fixed assets, investment, cash in hand, bank balance, stock in hand. These are the major focus which the auditor should have while preparing the audit program. Now, income receipt verification. Now, NGOs will get the investment from the members. They will get the income from the members or the public, not from the public, but from members, donors, or contributors. Now, how they are getting the receipt and how they are utilizing it, that has to be verified by the auditor. For that, he have to follow these. The receipt of income for NGOs can be checked using the following lines. How the receipt has been come, he can check like this. Contributions and grants for project. Verify agreements and grant letters to ensure proper accounting for funds received or not. If there is any agreement between the donor and NGO, whether the agreement is proper or not. In agreement, it is only up to 10 lakh rupees. But in the books of account, they have written it as 100 lakhs, saying that he is the particular donor he have given us. They have to verify it. Ensure foreign contributions are deposited in the designated foreign contribution bank accounts under the Foreign Contribution Regulation Acts 1976. Fundraising programs assess the internal control system for fund collection, ensuring daily deposits of collected fund. How the fund is being raised. What are the programs which are being conducted in that particular NGO for fundraising? Whether day-to-day fundraising is being updated in the register or not. That has to be verified. Membership fees. Check fees against the membership register and ensure correct classification of fees received or not. Subscription. Whether anyone are taking subscription. Reconcile subscriptions with the correspond magazine or circular distributions and check receipts against subscription rates. What are those subscription rates? Regarding that also they have to check. Interest and dividends. Verify interest and dividends received or receivable with the investment held during the year. If any funds are bought in or any income has been received and this income has been used for investment, whether they are getting any interest from that investment, that also have to be recorded. And if it is recorded properly or not should be verified by the auditor. This is regarding NGO. Clear? What we have seen in NGOs, first we have seen what is the legal framework, and we have seen audit planning, audit program, and what are the elements which the auditor have to consider in the income receipt verification. Clear? That is regarding NGOs. Now, concept 8, audit of local bodies. How the audit of local bodies has to be done. What local bodies will do? They'll do the local planning and development. Like what is the local areas, what is the planning and development, they will do it. Execution of various government initiatives, ensuring that community needs are met effectively. So the local bodies majorly work on what? Community development. There are different classifications of local bodies. Rural local bodies, urban local bodies. Rural local bodies are nothing but panchayats. Urban local bodies are municipalities. Now, salient features of financial administration of local bodies. What are the features for financial administration of local bodies? Budgetary procedures. Ensure financial accountability and controls expenditure. Whether the proper local bodies are ensuring financial accountability are there or not. Whether the expenditure controls are there or not. That has to be verified. So budgetary procedure, the main objective of this budgetary procedure is for financial accountability and controlling the expenditure. Why budgets are prepared? To control the expenditure. So that is nothing but budgetary procedure. What are the components? Involves determining taxation levels. What are the fees, rates, while laying down expenditure ceilings under the revenue and capital heads. So expenditures will be divided into revenue expenditure and capital expenditure. Under that head, what is the taxation level, what is the fee, and what are the rates for it. Everything will be checked. Legislative oversight. Funds must be raised and spent according to rules and authorizations by the legislature or council. Only regarding those authorizations which they have to utilize or raise the funds accordingly. Now, expenditure control. First we have seen budgetary procedure. Now it is expenditure control. At higher levels of government, there is a clear distinction between legislative and executive powers. In local bodies, legislative powers resides in the council and executive powers are delegated to officers like commissioners. So, when local bodies are, when we are doing the audit of local bodies, the major power will be with the council and the executive power will be with the commissioners. Regular revenue and expenditures are generally managed by the executive one. So who will do the regular expenditure and income details? The commissioners will work on that. So regarding commissioners, they have to do the investigation. But legislative sanctions is needed for the special cases like property tax reduction or security deposits funds. Only in these two cases they need permission from the council. Other than that, everything will be handled by the executive wing itself. Now, accounting system. Municipal accounting has historically used the cash system. So, local bodies usually use what? Cash based accounting. So, if they receive the cash, they'll record it. If they didn't receive the cash, they'll not record it. But all the financials by the companies are done in accrual basis of accounting. Transition to accrual system. At start, the municipal accounting used to be done in cash system, but after that, recent efforts are aimed at adopting the accrual accounting system for better financial reporting. First, they used to do cash reporting. Now they are doing the accrual system of reporting. What are the key features of this particular accounting system? Use of subsidiary and statistical registers for taxes, assets and checks. So for everything a separate register will be maintained. For assets separately, for taxes separately, for checks separately. Separate vouchers for each transaction type. Mandatory monthly bank reconciliation. Monthly cash book and bank book will be reconciled. Periodic submission of summary reports to regional and state authorities. Not only doing the auditing and recording everything, that has to be sent to whom? The reports has to be sent to regional and state authorities. Now, we have discussed regarding the features of local bodies, which are budgetary procedures, expenditure control and accounting system. Now, objectives of local bodies audit. Why we are doing audit for local bodies? So that to know the true and fair presentation, ensuring that financial statements accurately reflect the financial position of the local body or not. Detection and prevention of misuse, identifying and preventing errors, frauds and misuse of funds. Value for money, assessing whether the funds spent has yielded full value or not, which means whatever value has been put on, the benefit has been derived by the local body or not. Compliance, ensuring that all the legal and administrative requirements are complied or not. To check all these, the local bodies audit are being conducted. Clear? Now, audit program for local bodies. What is the audit program for local bodies? Verify that all expenditures have been sanctioned by the competent authority. Ensure that expenditures align with provisions, regulations established by the competent authority, whether the expenditures are in line with the provisions and regulations which are given by the regulatory authority or not. Evaluate whether various schemes, programs, projects are being run economically and whether their objectives are being met or not. The schemes which are taken by them, the programs which are taken by them, whether they are properly being conducted or not. So that is regarding the local bodies. In local bodies, we have seen the salient features, we have seen the advantages or the objectives of local bodies audit, and we have seen regarding the audit program for local bodies. Clear? Understood? Now, audit of government expenditure hasn't been asked till now. Okay? Audit of government expenditure, proprietary audit in the context of government audit, audit of commercial accounts. Concept 9, 10, 11 not asked. Frequently asked questions are audit of educational institution, audit of self-help groups, audit of local bodies, audit of hotels, audit of hospital. These are the 5 audits which are frequently been asked in the examination. But concept 9, 10, 11 hasn't been asked in the examination. Try to revise it, like what is there in that particular audit, what is the main audit, what is the information which I have given you in this particular thing. And coming to this proprietary audit, this concept we also have in the management audit also. In management audit, we have a separate concept called proprietary audit. So, this question will not be asked from here. it will directly be asked in the proprietary audit from management audit side. So you can directly refer there. And audit of commercial accounts, this is just regarding the department enterprise, like how the commercial accounts have to be maintained for government companies, for statutory corporations, for department enterprises. This is regarding audit of commercial enterprise. This is regarding audit of government expenditure. Who will do the audit for governments? CNAG. So what are the roles of that particular CNAG? What are the standards which has to be followed for doing the government expenditure audit? Like they have to have the sanction for audit, all rules and orders should be followed, provision for funds should be created, and proprietary audit should be done, performance audit should be done, everything for government audits. Role of CNAG and powers of CNAG. Okay, so this is regarding government expenditure audit. These are not asked but can be asked. Try to refer it. Don't skip the concepts, okay? Because this unit is very, very important. One question is compulsory. Whatever question can be asked. We only have 11 concepts from it. Remove the first concept because it is just the introduction. So we have 10 audits. Refer all the 10 audits. Keep a note of it and write 10 points for each audit. Write one line point for each audit. If 7 marks question has been asked, you can attempt it very easily. Okay. So that is regarding our entire section C, internal control, internal audit, operational audit, and audit of different service organizations. Clear? Having any doubt in the entire section C? No? Okay.
Yes. Now we are going to start with our section B, which is management audit. This section is around 25 to 30 marks. The weightage of this section is around 25 to 30 marks in our examination. Is this important? Yes, this is important. And what we are going to see in this section B? In this section B, we have around 5 units. Unit 1, basics of management audit. Unit 2, management reporting issues and analysis. Unit 3, management audit in different functions. Unit 4, evaluation of corporate image. And Unit 5, information system security audit. What we are going to learn in this particular units? In Unit 1, basics of management audit, we are going to see what is management audit, why management audit is important for any of the company or organization, how management audit is different from other audits, what are its benefits, what is the main objective of management audit, and what is its nature, scope, and all those things, which we are going to see in management audit basics. That is our first unit. And coming to Unit 2. In Unit 2, we are going to see management reporting issues and analysis. When management audit is there, that audit has to be done by an auditor who will be called as management auditor. Who is qualified to be a management auditor? Who can do management audit? If any person or individual is doing management audit, at last we have to give management audit report. Regarding that, we are going to see in Unit 2, management reporting. What is management reporting? How management audit report will be prepared? What are issues related to this management reporting? And some kind of analysis. We have different kind of analysis which we include in this management audit, like productivity analysis, efficiency analysis, energy analysis, utilities analysis, and many other kind of analysis. We have different kind of analysis which we do when we are conducting this management audit in any of the organization. Regarding those analysis which will be done by auditor, what are those and how that is related to this management audit. Regarding that details, we are going to see in our Unit 2. And coming to Unit 3, management audit in different functions. In any organization, there will be many kind of functions. Different functions will be taking place in the organization. For every different function, audit has to be done, and that has to be included combinedly in what? Management audit. What are different kind of audits which we have in this particular unit which we are going to see? We have many kinds of audit, like CSR audit, corporates CSR audit, social cost benefit analysis audit, and we have proprietary audit, energy audit, utility audit, consumer service audit, corporate service audit, corporate development audit. We have many different kinds of audits which we do for different kind of functions in an organization, and all that audits will be combined and will be taken into management audit. The analysis of this all audits will be done by the auditor, and a finalized report will be given as management audit report. Regarding that, different kinds of audits and different functions we are going to see in our unit 3. And coming to unit 4, evaluation of corporate image. What is corporate image? Brand value, goodwill. We have some brand, we have some goodwill, we have corporate image, business image. What is corporate image? Why we are learning regarding that in management audit. How corporate image is evaluated, like how we are going to do the evaluation of corporate image, how we will measure corporate image, what are advantages of measuring corporate image in any organization, why in any organization corporate image has to be taken into consideration. Regarding that details we are going to see in our unit 4, evaluation of corporate image. And coming to our last unit, in 5th unit, information system security audit. In this, we are going to see regarding what, as it is in the name already, IT security audit. What is information system security audit? What are its advantages? What are its objectives? Regarding every details of information system security audit, we are going to see in our unit 5. And at last, we are going to see regarding cybersecurity and computer forensics, which are very closely related to this IT system security. So regarding that also we are going to see in this last and 5th unit, information system security audit. All these combinedly will be called as management audit. So that is what we are going to see in this section B. Starting with our first unit, basics of management audit. I hope you have understood what we are going to learn in this particular management audit section B. Just have a basic idea regarding every details we'll discuss in today's class. Okay. Now, basics of management audit. Here I have handwritten notes. This will also be included in the notes which I've already given. Yeah. Section B, management audit. Unit 1, basics of management audit. First, if you're going to discuss regarding any audit, that could be cost audit, financial audit, environmental audit, any audit. First, we want to know what that audit means, isn't it? So now, what is management audit? That we have to know, isn't it? Let's see. What is management audit? Any audit is an independent audit. You know that even if it is a cost audit, that is done on the basis of independence. Financial audit done by cost accountants on the basis of independence. Similarly, management audit is also independent work which is done by auditor. For what? For what they are doing this independent work? To review, analyze and assess what they are doing the review of. Competencies and capabilities of company's management, not company's management. How management is doing their work, how much capability is there for the management in doing this work. In carrying out corporate objectives, in any company, there will be objective, vision, mission. That has to be taken care of by whom? By management. Management will do the work in the organization. That will help for the company to obtain that particular objective, isn't it? Now, how management are doing their work in order to meet these objectives? Are they doing their work properly or not? Whether the capabilities of the management are being met or not? That regarding every details of the management, whether they are doing their work in order to meet the objectives of the company or not. Regarding that, reviewing, analyzing and assessing by an individual in an independent basis is called as management audit. Management audit in a single word is nothing but to evaluate individual performance to evaluate management team's performance, not individual performance. Because management audit is done as an audit of management, like how the work of management is being done. Regarding that, any audit, any reviewing, any analysis is done, that is called as management audit. So management audit is not done to evaluate individual performance. That is not done to know about one individual performance, but to evaluate management team performance, how they are effectively doing their work. To evaluate management team's effectiveness towards work in interest of stakeholders. Who are stakeholders? Consumers, customers, they are stakeholders. Maintain good relationship with employees, whether management is maintaining good relationship with employees or not. Uphold reputational standards, whether they are doing the work in order to increase the reputation or decrease the reputation, whether they are following with all the rules and regulations or not, whether they are meeting proper documentation for everything or not, whether management approval is given for good reasons or bad reasons. Regarding all these, doing reviewing of or analyzing of is called as management audit. Management audit is a process of what? Of appraising. What they are appraising? Performance of whom? Of directors and managers. Who are these directors and managers? Nothing but management. So, appraising management performance. The process of doing this is called as management audit. Why management audit is done? To detect and diagnose the problem and suggest various means to avoid and resolve the problem. So what are the problems in the management issues? Whether management is doing the work properly or not. Whether there are any problems in management while conducting their work or not. Whether the company's objectives are being met or not. Regarding all these problems, detection, for that we need management audit. Not only for that, management auditor has to find out whether there is a problem or not, and also he has to give certain recommendations and suggestions for the company to not to have this failure again, to not to have this problem again. He has to give certain recommendations, suggestions to improve the effectiveness of the company's operations, and he should help to resolve these problems. For all these, we are doing management audit. Clear? Now, what is management audit? Nothing but evaluating or doing the analysis for what? Management performance. In simple words, evaluating management performance is called as management audit. I hope that's clear. What is management audit? I hope that's clear. Now, when management audit is conducted? When cost audit is conducted after completion of cost statements. When financial audit is conducted after completion of financial statements. Now, when management audit will be conducted, like we are doing the work of management, we are not doing the audit for any statements. We are not doing the audit for any files, for any documents, but for performance. To evaluate the performance of management, we are doing management audit. So, we are going to check the work and the performance done by the managers and directors. Now, when does management audit have to be conducted? It will be conducted before merger. When there is merger between two companies, management audit will be conducted. When there is business restructuring, management audit will be conducted. When company is into bankruptcy, before that, management audit will be conducted. Succession planning. What is succession planning? Like when owner is father and he is trying to transfer the ownership of the entire company to his succession, to his son. In that case, management audit will be done. Why in these four cases management audit is conducted? To identify whether there are any weaknesses in the management. See, for example, if there is merger is taking place and management audit is conducted. And they have found out that there is a problem in the management. Management are not doing their work properly. Now what will happen? Merger will not take place, or before getting into merger itself, they'll try to resolve the problem which is there with the management. After that, merger will take place. Now, when after resolving the problem, if merger took place, then merger will be successful. Both the companies will have profits, isn't it? If problem isn't resolved and merger has taken place, then what will happen? The merger will be in losses. No one will get money. No one will get shares, isn't it? So, before getting into any of these four, management audit will be conducted to identify whether there are any weaknesses in the management or not, and helps to strengthen internal controls. Internal controls will be framed by whom? Management. Now, if management is correct, internal controls will be proper. If management is not correct, internal controls will not be proper. Now, if there is any weakness in the management, that will affect what? Internal controls also. If we have identified the weakness, we can easily correct the wrong which is there in this internal controls, which will help to tighten, to stringent, to strengthen this internal controls. For that, what we have to do? We have to conduct management audit. Is it clear till now? That's clear till now. Now, the same thing I have given here. A management audit is an independent review, analysis, and assessment of what? Of companies' management competencies and capabilities in achieving corporate objectives. Unlike an appraisal of individual executives, the focus is on effectiveness of management team. Management audit is not done to evaluate individual performance, but to evaluate the performance of management team. Serving all stakeholders, whether they are serving stakeholders properly or not, maintaining employees' relations, upholding the company's reputation. We will check all these things in where? In management audit. Now, it evaluates overall management performance covering areas like, when conducting this management audit, it will cover everything: planning, organizing, coordination, process, and control. All these are part of management audit. How management audit will be done? Planning it, organizing it, coordinating it, processing it, and taking control of it. Everything is included in what? In management audit. Situations for conducting a management audit. When management audit will be conducted? Before merger or restructuring, during bankruptcy or succession planning. Why it is done? To identify whether there are any weakness in the management and to strengthen the internal controls. This is nothing but introduction of management audit. I hope concept 1 is clear to you. Now getting into our concept 2. Now, before getting into objectives of management audit, we'll see why management audit is necessary for an organization. Now we have seen management audit is nothing but evaluating the performance of management. Why performance of management has to be evaluated? That is a question. We have to answer it. Now, why management audit is necessary for an organization? What is the main objective of an organization? To minimize the cost and to maximize the profit. Isn't it? This is the main prime objective of any organization. If it is a profit oriented, then maximizing the profit and minimizing the cost will be the main and prime objective of any organization. So, management audit is done for what? To improve efficiency and profitability for the organization. Management audit is done to increase the profitability of organization. Okay, but how? By identifying loopholes in the management practices. Now, who will do the work in the organization? Management. They will check regarding the production process. They will check whether the inputs are properly met with the outputs or not. They will recruit the employees. They will check whether the employees' work is proper or not. All the work in the organization is done by whom? Done by management. Now, if there are any loopholes in the management practices, will that not affect the operations of the business? That will automatically affect the operations of the business. If there is any effect on the operations, profit will reduce, isn't it? Now, if we identify that there is a loophole in the management practices and we have removed that loophole, now there is no loophole in the management practices. No one will be able to do any fraudulent activity in this management practices now. Now, management practices are very proper. Profit will also be proper. There will be improvement in profitability, isn't it? So, management audit is done to improve efficiency and profitability of organization. By how? By identifying the loopholes in the management practices. What kind of loopholes will be there in management practices? Inefficiencies in organization structure. There is many inefficiencies in organization structure. That could be a loophole. Outdated methods and practices. If management is following methods and practices which are very outdated, which are not at all related to current period, they are following methods which they used to use in 1950s or something. Will that match to today's production period? No. Will that satisfy customers today's period? No. Always there is a trend changing. Always the trends are changing. Always the models, methods, practices are being changed. So if any production process method which used by the organization is outdated, what will happen? Products will not be sold in the market. Unnecessary process or steps. If there are unnecessary process or steps, what will happen? Production period will increase. Production period increases means what? Output which we are getting will be delayed, which means in market there will be late, which means profit will also be late. Under or overutilization of resources. Whatever resources are there, they should utilize the resources in optimal manner, which means how much resources are required, that has to be there. That should not be underly utilized or overly utilized. All these are nothing but what? Loopholes in management practices. Identifying this and correcting this in order to improve the profitability is nothing but management audit. I hope that's clear. What will happen if these loopholes are not at all identified? What will happen? Resources will be utilized in a wasteful manner. Profit will reduce. There will be losses. These three will happen if loopholes in the management practices are not identified. So, why we are doing the management audit? To find out whether there are any loopholes in the management practices or not. Clear till now? What is management audit? Clear. Why management audit is needed? Clear. When management audit will be done? Clear. We have answered three questions. What, why and when. Clear till now? Now, who? Who will do this management audit? Management audit is conducted by independent person. That should be conducted by whom? By an independent person. Sometimes internal employee, even if it is an internal employee, that employee should have a neutral perspective, which means he shouldn't be on any of the side. He shouldn't be on company side. He shouldn't be on employee side. He shouldn't be on management side. The perspective of that employee, internal employee, who is going to do the management audit should be neutral. He should not take side of any of the parties. Because it allows him to evaluate management practices without any bias. Why independent person will be taken for any of the audit? Because the audit should be done in unbiased basis. To analyze about business structure and be appointed to necessary actions to be taken in the organization. So, for this management audit will be done by whom? By an independent person. Now, is management audit mandatory for all organizations? The answer is no. It is not mandatory. Management audit is not compulsory under any law. No specific qualifications are prescribed for management auditor. Like only this person, if he is qualified, that will be management auditor. Such kind of law is not specified in regard to management audit, and management audit is not mandatorily required for all organizations. Now, who is qualified to conduct management audit? Cost accountants. He could be internal or external. Decided by whom? Will be decided by company. Now, who can do the management audit? Nothing but we, cost accountants. We can do the management audit. Or first, internal or external cost accountant can do the management audit if it is decided by whom? If it is decided by company. Or there is another way of doing the management audit. Company can form an audit team. They could follow audit team approach. A proper team will be formulated for conducting the management audit. Who will be there in that particular team? Cost accountants, industrial or production engineer, or social scientist, or an economist. All these people will be combined or grouped into a team, and that team will conduct the management audit. If it is decided by whom? If it is decided by company. Finally, for conducting management audit, whoever will be appointed, the appointment of that particular management auditor will be decided by whom? Will be decided by company. So, our fourth question, who, is also completed. What, why, when, and who will do the management audit? I hope that's clear till now. Now, coming to objectives of management audit. What are objectives of management audit? Why management audit is done? What is the major objective? Helps in decision making. First point is what helps in decision making. Now, how it is helping in decision making? Why management audit is done? To check whether there are any weakness in the performance of the management. Now, if there are any weakness in the process or weakness in the management, that will be known by which? By conducting management audit. Now, if management audit is conducted and weaknesses are identified and they have rectified the weakness, will that not help in decision making part? Yes, that will help in decision making part. Not directly but indirectly management audit is helping in decision making part. Give suggestions for management to get desired results. Now, why management audit is done? So that all the evaluation, analysis, everything is done. At last, audit report will be prepared, and what recommendations and suggestions for the management will be given by the auditor, so that they will help, so that recommendation or suggestion will help the management to comply with the objective of the company. Reveals if there are any defects or irregularities in the process of management. So it will tell if there are any defects or irregularities are there in the management or not. That will be told by what? Management audit. Helps management to effectively discharge duties and responsibilities. What are the duties and responsibilities of management? Will be dealt by management audit. So, if management audit is done, management will also conduct their work in responsible manner. Suggest appropriate cost effective implications of plans. So, how plans should be implemented in such a way that will minimize the cost. That is nothing but the main objective of management audit. So, these are the 5 objectives of management audit. 1, it will help in decision making. 2, it will give suggestions to the management so that they will take the proper objective, so that they will meet the objective of the company. That is our second objective. Third objective, if there are any defects regarding that defects in the process, suggestions will be given by the auditor if management audit is done. Fourth, it helps management to discharge the duties and responsibilities correctly. Fifth, suggestions for cost effectiveness is given by the management audit. If management audit is conducted, auditor will suggest the plans in such a way that will minimize the cost for entire organization. So these are the 5 main objectives of management audit. I hope that's clear why management audit is done. Objectives of management audit: support decision making, identify issues, improve responsibilities, strengthen controls, and enhance efficiency. So these are the 5 main objectives of management audit. I hope concept 2 is also clear to you. Now coming to concept 3, nature and scope. Now, what is scope of management audit? What is scope means? Where management audit will be done? Why management audit will be done? That is nothing but scope, isn't it? Now, scope. In scope and nature, what we are going to see? Management audit evaluates whether current structure aligns with organization goals or not. Management will prepare certain internal controls. A proper structure will be prepared by management. Whether that structure which is prepared by management is meeting with the organization goals or not. That evaluation is done in management audit. It will develop interdepartmental coordination to achieve management objectives. Like how one department and other department are doing their work in coordination or not. Regarding that, and developing the coordination is also done in management audit. Evaluating that is done in management audit. Okay. Suggest a structure for risk management, whether there are any risk in the management, whether management is doing the work properly or not. Regarding that, suggestions are also given through management audit. Evaluates projects and budgets and fixes appropriate methodologies. So, how projects are being taken by the management, whether the projects are actually meeting the objectives of the organization or not. Are budgets prepared properly or not? Fixes appropriate methodologies. What are proper methodologies which has to be taken by the management in preparing the structure for the organization? Regarding all these things, we see in where scope. Scope is nothing but management audit. Management audit covers everything. First, it will evaluate whether the structure is meeting the organization goal or not. Now, if there are any inefficiencies in this particular structure, that will also be suggested by the management audit. It will give suggestions for improving the structure. Whether there are any risk in the management in related to the structure. Regarding this risk management is also dealt in management audit. And third point, it will develop the coordination between interdepartments that will help to achieve the management objectives. It will review regarding the management interactions with stakeholders and customers, whether the interaction of management with the customers, stakeholders, employees, is it proper or not. And projects which are undertaken by the organization, are they aligned with the laws or not, whether the budgets are maintaining properly or not, whether actuals are meeting with the budget or not, and proper methodologies for preparing the structure. Regarding all these things, we do in where management audit. That is nothing but scope of management audit. I hope that's clear now. The same thing is there here also. Appropriateness of organization structure evaluates whether the current structure reporting lines support the company's goals or not. Assess interdepartmental coordination in achieving management objectives. Suggest a robust structure for what? For risk management. Reviews how management interacts with stakeholders, customers and employees. Includes assessing growth, budgets and appropriate methodologies. All these are nothing but what? Scope of management audit. Now, this we have already seen. Who is qualified to be conducted a management audit? Cost accountant. It could be internal or external cost accountant, or audit team approach can also be followed. Who will be included in audit team? Cost accountant. He could be internal or external cost accountant, industrial or production engineer, a social scientist and an economist. All these four combinedly will be brought in a group. That group will be called as audit team. They can do the management audit. Now, we have seen till now what is management audit, why management audit is important, who will do the management audit, what are its objectives, what are its scope. Till now, everything is clear. Now, if management audit is done by management auditor, there are certain qualities which are to be inbuilt there in the particular auditor. What are the qualities which are to be there in the management auditor? That we are going to see. Qualities of management auditor. When any individual is coming as a cost accountant, will cost accountant is sufficient for management audit? No. If cost accountant is having all these qualities, then that particular individual or cost accountant can become management auditor. Now, what are those kind of qualities we are going to see now? He should have a good knowledge and experience of managerial functions. Regarding all managerial functions, a good knowledge and experience should be there for that individual person. Not only that, he should have knowledge in all these things: financials, cost statement, regarding analysis, certain techniques of management, certain economics, business laws. Regarding all these, knowledge should be there for that particular individual, and also should have understanding and know about what about organization structure. He should understand the business or the organization in which he is going to work as management auditor. He should have the understanding about the business, decisions taken by management, how decisions are being taken by the management. Regarding that, knowledge also should be there for that particular individual. Organization problems and workings. What are the risk related matters for that particular organization? What are problems being faced? Who are competitors? What are workings done in that particular organization? Regarding all these should be known by whom? The individual who is going to work as a management auditor. All process and controls. Objectives of the organization, planning, budget, rules, procedures, with whatever there in that particular organization. Regarding all understanding and knowledge should be there for whom? For individual. Entire production process. And also have knowledge and experience to understand the reason behind lack of coordination between departments. Now, in scope, we have seen one point. Management audit will help in developing interdepartmental coordination. We have seen this point, isn't it? Now, if any individual is coming to do management audit, he should have a quality of understanding. If there is no coordination between interdepartmental, then what is the reason for coordination missing? Lack of coordination between departments. He should have understanding and knowledge and experience to tackle the reason behind lack of coordination. All these are nothing but qualities which are to be there for management auditor. I hope that's clear. Try to remember few points. Now, qualities of good management auditor. Comprehensive knowledge, deep understanding of managerial functions, financial, cost analysis, techniques, have familiarity with economics, business laws, organization structure, strong grasp of process, control aspects and organizational goals, thorough knowledge of how management decisions are made and their impact, awareness of planning, budgets and applicable laws. You can think that whatever there in this 5 points is also there in this, but this is quite different from that. This is for understanding purpose. Okay. So, to make you easily understand what are the qualities exactly, I have given you in this way. If you want, you can take this. If you want, you can take that. That is simple. That is enough for your examination. For understanding, that is not sufficient. If I am just going on with these lines and trying to make you understand, it will not understand. You will not understand it easily. So, I have given in this way in handwritten notes. Okay. So, in this way, you will understand it. After getting understanding, if you learn or read these 5 points, you'll understand what the actual content is there, isn't it? So that's what I have differentiated some points in concept book and handwritten notes. Don't think that handwritten notes is way different from concept book. Whatever there in concept book is given in handwritten notes in much simpler way to make you understand easily. That's it. Okay. Now, coming to concept 6. Need for management audit and reporting. What is the need for management audit and reporting? Management audit reports are crucial for what? Assessing and improving the effectiveness and efficiency of management. This we already know. This is the definition of management audit. These audits provide valuable advice. We have already seen some recommendations, suggestions, advice, all are similar on performance of various functions and the organization as a whole. Why management audit is done? So that the auditor, he will give certain suggestions, recommendations and advice in regard to the functions in the organization as a whole, ultimately helping management to improve their decision making and overall performance. So this is what we have learned till now regarding management audit. I hope this is clear. Now, legal status of management audit. What is legal status of management audit? Management audits are not mandated by any law. It is not mandatorily complied by all the organizations. If they want, they can go for management audit. If they don't want, they need not go for management audit. There are no formal qualifications required for someone to act as a management auditor. Did we see the qualifications for management auditor? Like we have seen for cost auditor, qualifications, disqualifications we have seen, isn't it? Did we see anything like that? No. We have seen who can become management auditor. That is not qualification. And we have seen certain qualities which have to be there for management auditor. But there are no formal qualifications and disqualifications for any individual who is going to act as a management auditor. These 2 points, try to remember it. Management audit is not mandated by any law and there are no formal qualifications required for any individual who is going to act as a management auditor. That is need for management audit and reporting, concept 6. I hope that's clear. Coming to concept 7. What are advantages of management audit? These are the advantages of management audit. Helps management to make plans, policies with more objectivity. Now, if management audit is done, what they will review? They will review whether plans, policies which are taken by the management, is it meeting with the objectives of company or not? Now, if management audit is not at all done, will management have any fear that someone will come and review our plans and policies? No. So what they will do? They will take plans and policies as they wish. Now, if there is a management audit, they will have certain fear. Now, we have to comply with something. So, they will make plans and policies in regard to the objectives of company. So, for that management audit has to be done. So, that is the main advantage of management audit. Management will make plans and policies with more objectivity. Aligns efforts for achieving objectives of management. Not only they will make plans and policies, also they will try to implement it in such a way that will meet the objectives of management, like objectives of company. Helps management by providing inputs on process gaps and way forward to improve and evaluate performance of management. This is nothing but we have seen already. If management audit is conducted, it will help to identify whether there are any loopholes in the management practices. So that are nothing but gaps. Gaps are nothing but loopholes or any wrongdoings. It will provide inputs regarding process gaps and way forward to improve and evaluate the performance of management. If you have identified what loopholes are there, then we will try to improve it, isn't it? So that is an advantage of management audit. Helpful to utilize resources effectively and improve planning. Optimal utilization of resources can be done. Planning can be improved. So these are the 4 main advantages of management audit. I hope that's clear. Objective planning and policy making provides management with more objectivity insights for effective planning and policy creation. Helps in aligning efforts to meet the set objectives of the organization. Assist in identifying process gaps and offering guidance on improving management overall performance. Provide provide strategic inputs on how to utilize resources effectively and plan for continuous improvement. So these are 4 main advantages of management audit. What are it? Try to repeat it and try to understand it easily. First, helps management. First, it helps in such a way that management will make plans and policies that will help the overall objective of the company. So management will make plans and policies in effective manner. That is the first advantage of management audit. Second, they will not only make plans but try to implement it in such a way that will meet the organization goals and objectives. That is second point. Third point, now planning is done. If management audit is conducted, it will help to identify whether there are any process gaps, and it will not only identify it, give suggestions to improve it and try to rectify the problem. That is the third advantage. Fourth advantage, it will give inputs in such a way that optimum utilization of resources can be done, and continuous improvement planning also can be done by using management audit. So these are the 4 advantages of management audit. I hope that's clear. That is our concept 7. Now, what is the functions of management audit? Auditors must carefully identify the roles to perform while dealing with top management. What are the major functions of management audit? Management audit will be done by management auditor. Now, when any auditor is there, he has to comply with what? These things. He has to identify what is the work to be done by that particular auditor. Now, auditor is there. Before auditor or ahead of auditor, there will be management. Management or the company will appoint auditor. To whom this auditor has to report? He has to report to the company. Now, whatever work which is assigned to that auditor, that has to be taken care of by him. Carefully identify the roles to perform the audit. Now, what is the main goal of that audit? That has to be identified by the auditor. Identify areas for review and assist in linking performance standards with responsibilities. What are the areas that he have to take care? He have to review. He have to analyze. What are the things in that particular company? That has to be identified by whom? By auditor himself. After proper evaluation, give valuable suggestions. First, he has to identify what is the role of him. What is the main goal or what is the role which has to be done by him. That has to be identified by auditor himself. And after identifying, he has to identify the areas in which he has to work. What is the risk area? What is the improvement area? What these things which has to be reviewed by him, these things which has to be analyzed by him. Everything has to be identified and kept in a proper manner. Now he will do the audit of everything. After completion, he will prepare the audit report, and at last he have to give certain suggestions for improving the organization overall. So these are the functions of management audit. Management audit appraises. Appraises means increases functions, departments, activity, including but not limited to marketing, manufacturing, project management, finance and personnel management. So management audit will include all these things, but is not limited to only these, but it includes everything. Management audit includes marketing, manufacturing, project planning, finance and performance, personnel management. All these combinedly is called as management audit. So reviewing and analyzing all these is nothing but function of management audit. I hope that's clear. Management audit involves various complex tasks, including clear role identification. The auditor must carefully define the role, especially when dealing with top management. Examine scope of work, identify areas for review and assist in linking performance standards with the responsibility ownerships. What are the areas which has to be reviewed, and what is the performance standard which has to be set by that particular auditor? That has to be identified by whom? By himself. Offer valuable and well evaluated suggestions for improvement. These are the functions of management audit. Now, what are the areas for evaluation? We have seen areas for review and assist. Now, what are the areas for evaluation? Management audit appraises a whole wide range of functions and departments, including but not limited to. So, when doing the analysis, reviewing, evaluation, these are the areas to be taken into consideration by management auditor while doing management audit. What are the areas? Marketing. Marketing is nothing but selling and distribution. Manufacturing, capacity utilization, maintenance, project management, timely cost-effective implementation, finance, arranging capital for operations and projects, personal management, recruitment, training, motivation. Doing the review of all these things is nothing but function of management audit. Is it clear till now? I hope that's clear. Now, periodicity of management audit. When this management audit can be done? When it will be done, we have seen. How frequently it has to be done. It could be done in annual basis, long-term basis, or follow-up audit. We have three kind of periodicities for audit. Annual audit, long-term audit, follow-up audit. What is annual audit? Management audit aligns with annual financial or cost audit. Like when financial audit is done, when cost audit is done, management audit will also be done. In that way, annual audit can be done. Long-term audit, about 3 to 5 years period, policies, practices, all documents will be combined, and regarding that management performance, management audit will be done. That is a long-term audit for about 3 to 5 years period. Follow-up audit, yearly follow-up to monitor the process. Yearly at the year end, to monitor whatever process has been done in that particular year, follow-up audit can be done. So, these are the three kinds of management audit periodicities. Annual audit, long-term audit, follow-up audit. So, this is regarding periodicity of management audit or concept 9. Annual audit, long-term focus, follow-up audit. Now, our next concept is steps in management audit. Now, when management auditor is doing management audit, this is the process which he will take. That is our concept and steps in management audit. What are the steps we have? 6 steps in it. First step, understanding objective and scope. Now, what is the work to be done by him? What is the main objective of the company? What is the main objective of the management? What is management structure? Regarding understanding of everything is the first step. Document collection. And after that, what I have to do? He have to gather document and data to apprise management about whether there are any weaknesses in the management practices, whether there are any gaps, whether he have to recommend anything. Regarding those, he have to collect the documents. That is a step 2. Coming to step 3, performance evaluation. Determine if actual meets with the standard or not. In this third step, there will be 2 questions which will be taken care by the auditor. What are those 2 questions? Is target too ambitious? Whether the target which is given by the management to meet the company's objective, is it too ambitious? Is it practical? Will that be actually maintained by the employees or not? Will failure from target cost the organization? Regarding these 2 questions, determination is done third step by the auditor, which is called as performance evaluation. Fourth step, assessment of achievement. What is assessment of achievement? Review actions taken to meet the standard and target. What are the actions which are taken by the management so that they will be able to meet the standard? Regarding that, reviewing, assessing is done in fourth step. Assessing the achievement of the management, that is fourth step. Fifth step, detailed investigation. collect evidence as a audit findings. Whatever done in that particular audit, whatever findings have done, whatever they have found, whatever information is collected, whatever data is collected regarding everything, evidence is collected, everything, detailed investigation will be done as a throughout audit process. At last, reporting findings, prepare report of findings and give recommendations for improvement. So these are the 6 steps in management audit. First is understanding the objective and scope. Second, document collection. Third, performance evaluation. Fourth, assessment of what achievement. Fifth, detailed investigation. And sixth is nothing but preparing a report and giving suggestions by the auditor. These are the 6 steps which we have in management audit. I hope that's clear. That is our concept 10. This is what I have given here also. Understanding objective and scope, document collection, performance evaluation, and in this 2 questions will be taken care. Assessment of achievements, what is planning, what is operations, how execution is done, performance measurement and control, detailed investigation, and at last reporting findings. These are the 6-step process in audit management. In management audit. Okay, clear? Now, concept 11. Management audit program. What is management audit program? Management audit program is nothing but planning, pre-planning of outcomes for whole process and procedures from beginning to end. From start of management audit to the end of management audit, a detailed planning which is done before getting into audit itself. Not after getting into audit, doing planning of audit. Not that. Before entering into audit itself, pre-planning of outcomes from starting to ending of whole process and procedures is nothing but management audit program. It is a plan of action drawn in advance of starting actual audit. Before getting into audit itself, pre-planning of action is done in management audit program. Why it has to be done? It helps the auditor to focus on entire organization or specific area in if there is any risk areas. For that risk area, he can be attentive. If there are any process which is not actually meeting the organization goal, for that he can be attentive. So if any auditor has to focus on entire organization, he can go with management audit program. Or if you want to focus on any one specific process, program, or any one specific department, anything it could be, he can go with management audit program. That will help auditor to mainly focus on the risk areas. Now, I hope you have understood what is management audit program. A pre-planning of management audit. Okay. Now, what is the structure of management audit program? Similar to steps which we have. Understand organization setup and functions. Review organization objectives. Discuss plans with senior management. Evaluate policies to achieve objectives. Review current operations. Review areas needing improvement. Discuss areas needing improvement. Give suggestions for improvement in operations and decision making process. This is the entire structure of management audit program. What is it? First, he will understand regarding the organization functions. Next, he will do the review of organization objectives. Like what is the organization objective? He will do the review regarding it. Next, whatever plan which he got in his mind, that will be discussed by whom? With whom? Will be discussed with senior management. If they are okay with it, he will go with that plan. If they are not okay, he will revise the plan. Next, fourth, evaluate policies to achieve the objective. What objective? This plan which is created, regarding that policies he will evaluate. What are the current operations that will be reviewed? What are the improvement areas needed? That will be discussed with whom? Discussed with senior management, and after that finally he will give the suggestions for improvement in operations and decision making process. This is the entire structure of management audit program. This is what I have given. A management audit program is a pre-planned course of action outlining the areas to be covered in the audit. It helps auditors to focus on either entire organization or a specific area. The management audit program refers to planning and outlining the entire audit process from start to finish. This is the management audit program structure. Study organization structure, discuss objectives with top management, study current policies, review operations, and at last provide recommendations. These 5 points are enough for a structure understanding. Okay. Now, factors for framing efficient management audit program. When management audit program is being made or being started, prepared, what are the factors to be taken into consideration? That we are going to see now. These are the factors which are to be taken into consideration when any management auditor is doing this management audit program. Name and address of company, operations, whether unit wise or section wise operations. What are the operations? Dates or duration of audit. What is the actual planned date of starting of the audit? What is the actual date of starting the audit? What is the date they have planned to end the audit? What is the actual date of ending the audit? Plan, revised if any, actual. All these have to be recorded. Names of auditors. Who are the first auditors appointed? Who are the revised auditors? Like after auditors, if they are replaced, then regarding that, revised and planned. The name of auditors. Discussed with. Like whatever this management audit program, whatever suggestions there, whatever plan is there, that will be discussed by the senior management. Who did they discuss with? Regarding their names and details. Planned, actual. At last, reviewed by. Discussion is done with these members, but reviewed by these members. That planned and actual. Regarding all these will be considered while doing what? Management audit program. Key factors for creating an effective management audit program include company details, audit dates, audit team, discussion participants, reviewers. Clear till now? I hope that's clear. Now, concept 12. Techniques for identifying problem areas. Till now what we have discussed? We have discussed what is management audit, what are its nature, scope, objectives, what is the steps in management audit, and after we have discussed management audit program. Now, different concept. Management audit is done to identify a problem, to identify whether there are any weakness or not. Now, there are certain techniques for identifying these problems. What are the techniques? Techniques for identifying problem areas. How management auditor will identify whether there is any problem or not. Identify operations that are difficult to control. This operation is not at all will be detected by the internal controls. Will be very difficult to control. Identify those kind of operations because that operations will affect the entire operation structure of the company. So, identify that operation first. Analyze MIS report, Management Information System report, and Management Generated report. These two reports will be given by management that will be analyzed by whom? By auditor to find whether there is any problem or not. Use previous internal audit findings. Evaluate previous auditor's report and identify what are the findings. If there are any problems related to that, we can take reference from that particular audit findings. Test a sample of transactions. Take few transactions, like 4 to 5 transactions, analyze it, take sample of transactions and try to evaluate to ensure adherence to prescribed rules, whether transactions are entered in the books as per proper rules or not. Gather information through conversation with responsible individuals. If auditor has found that there is any problem, then try to go directly to that person and ask regarding the justification. If any one person of the management, if any director is involved, and if any problem has been arised by that particular director, go to the director directly and try to ask the justification regarding it. If justification is satisfied, he will drop that particular case. If it is not satisfied, then he will give that particular details in that report, which is given by management auditor. So these are the techniques for identifying problem areas by the management auditor when doing the management audit. First, what he will do, he will identify whether there are any difficult operations. Then he will collect the MIS report and management generated report from the management and do the analysis of that. Third, evaluate the previous audit findings. Fourth, take 4 to 5 transactions. Those could be called as sample transactions. Try to ensure that those transactions are adhered to prescribed rules or not. Fifth, gather the information through conversations with the concerned individuals. These are the 5 techniques which can be followed by the auditor when identifying problem areas. So this is what I have given. Control weaknesses identification, management report review, internal audit review, transaction testing and discussions with officials. So that is our concept 12, which is techniques for identifying problem areas. Now, we have different techniques of management audit. These are management audit techniques. Accounting techniques, scientific techniques, statistical techniques, personal techniques and general techniques. These are also same techniques for identifying the problem, but which we already know. Certain techniques in management audit. What are accounting techniques? Break-even analysis, budgetary control, cost management techniques, cost benefit analysis, standard costing. These are all the techniques which we use in accounting. So those are called as accounting techniques. Now, scientific techniques. Computer models for decision making, network analysis for project sequencing, mathematical programming. Statistical techniques are activity sampling, Monte Carlo simulation, which you see in SCM, exponential smoothing. Personal techniques, attitude surveys, ergonomic assessment, training evaluations. What are general techniques? Statistical theory of management, brainstorming, management by objectives and exceptions. So these are the techniques which we already have in management audit. What are those 5 techniques? Accounting, scientific, statistical, personal, general. So these are the 5 techniques which we have in management audit and 5 techniques of identifying the problematic areas. That is concept 12. I hope that's clear. Now, coming to our last concept in unit 1, which is management audit program. Management audit report. Management audit is started. Management audit program is done. Management audit report. What is management audit report? It is a reflection of quality of review performed in various areas. Whatever review, whatever work performed by the auditor, reflection of that is nothing but management audit report. It motivates the management to get the required results. Management audit report plays a crucial role in reflecting the quality of management review in an organization. It is not only about identifying issues, but also motivating management to achieve the desired goals. Below is a simplified breakdown of characteristics, contents, and considerations for preparing the effective MAR. MAR is nothing but management audit report. First, characteristics of good management audit report. How a management audit report can be good? If it has these characters, it will be called as good management audit report. What are those 5 characteristics? Pertinence, relevant to current issue and contents. If any management audit report details which are considered, which are there in that particular report is related to this particular case, then that is called as pertinence. Comprehensiveness, covers all necessary aspects of audit. It is called as comprehensiveness. Brevity is nothing but concise yet informative. No extra add-on details are there. No unnecessary details are there. Whatever details are there, those are enough and those are required for this particular audit. If it is required, it should be there in the report. If it is not required, if it is unnecessary, it should not be there in a report. Report should be concise yet informative. That is called as brevity. Timeliness, prepared and delivered at right time to help in decision making. Motivating, improves actions and motivates the management. These are the 5 main characters which are to be there in the management audit report so that it will be called as good MAR. What are those? Pertinence, comprehensiveness, brevity, timeliness, motivating. I hope that's clear. Now coming to key components of MAR. What are the key components of MAR? Management audit report focuses mainly on deviations from established process. It mainly focuses on the deviations from established process, unauthorized activities, performance issues and areas for improvement. So in this report, whatever details and information are there, that will majorly focus on whether there is any deviation, whether there is any unauthorized access, how performance is done, whether there are any issues in the performance and what are the areas for improvement. Create benchmarking, compare with industrial norms, compare our industries, work with another industry, whether they are meeting with the industry norms or not. Create a benchmark. Benchmark means the one, benchmark is nothing but a point which has to be meted by us. That is a goal which has to be shattered. So that is a benchmark. We have to do the work to reach that particular benchmark. To identify scope of improvement. So whatever improvement is there, that is done to meet this particular benchmark. Address fraudulent activities, reputational risk, inefficiencies in control measures. So it has to address all these things. So these are nothing but key components of management audit report. In management audit report, this should be compulsorily there. Now, MAR should cover highlight. It should mainly highlight weakness areas and suggest for improvement. Review stakeholders relationship and how benefits are passed on to the stakeholders. Cover details regarding methods and procedures involved in production. So regarding all these details also should be there in where? Management audit report. So these are the characteristics: pertinence, comprehensiveness, brevity, timeliness and motivating. Key components: exceptional reporting, focus on deviations, create benchmarking, address fraudulent activities and risk reporting, management focus. Important considerations for writing the report. When any auditor is writing the report, these are the considerations which are to be considered. Use simple language. Avoid technical terms. These technical terms are nothing but jargon. Jargon is nothing but technical terms which are used by certain individuals in related to their work. That is called as jargon. Jargon is nothing but technical terms. Remember that. So, what are the considerations? Use simple language. Avoid technical terms. Ensure that there is a clear communication. Organize content for easy navigation and understanding. Choose data relevant for the report. Use a standardized format that helps both auditor in drafting and recipient in reading. So these are the considerations which are to be taken and important when writing the report. By whom? By management auditor. Now, till now we have seen management audit report. I hope management audit report is clear. There are certain special reports which are to be maintained or prepared by these banks and creditors, shareholders, employees and small business. See, this we have already seen. Management audit report should cover. Now, special reports are to be prepared by special categories, which are banks, creditors, shareholders, employees, and small businesses. What those reports will focus on, we'll see now. For banks and creditors, when special report is prepared, a report must be clear, reliable, and include verified statements and certifications. Banks not only requires financial statements but also comprehensive explanatory notes, because there needs to be transparency and clarity regarding the information. So in banks, if any report is being made, for that not only financial statements should be there but explanatory notes also should be there. In such a way, a report has to be prepared for whom? For banks and creditors. For shareholders, reports are read by financial experts, tax authorities, public, everyone. So they need to give detailed and accurate information. Reports should be understood even to non-experts. In such a way, shareholders' report should be prepared. Employees' report address misconceptions, union concerns. A report must gain employee trust. So, in that report, whatever misconceptions are there to the employee, for that misconceptions, rectification has to be there in that particular report. The report information should be in such a way that is addressing misconceptions and union concerns. If any employee is reading that report, the employee should trust on that particular organization. In such a way, employee's report has to be prepared. Small business reports should be straightforward and easy to understand. Due to limited data, reports are often subjective, making it crucial for the auditor to provide suggestions, because for small businesses, they will not give all information. They will not record all information at all. In such a case, reviewing that particular reports and giving suggestion will be quite difficult for the auditor in case of small businesses. In such a way, small business report should be prepared. So these are the 4 special reports which we have for banks, creditors, shareholders, employees, and small business. So that is what we have seen in Unit 1, Basics of Management Audit. What we have learned in this? What is management audit? When management audit is conducted? Why management audit is necessary for an organization? Management audit is conducted by whom? Objectives, scope, qualities of management auditor, advantages of management audit, functions of management audit, periodicity of management audit, steps in management audit, and at last we have seen management audit program and management audit report. And there are certain special reports for certain 4 special areas, which is banks and creditors, shareholders, employees, and at last small business. So that those we have special reports. That is. So that is the end of our Unit 1, Basics of Management Audit. Will there be question from this unit? Yes, there will be question from this unit. So I hope Unit 1 is clear. Yes. Now we are going to start with our Unit 2 in Section B, which is Management Reporting Issues and Analysis. What we are going to see in this particular unit is, we are going to see regarding management reporting. Till now we have seen Management Audit Program, Management Audit Report. And now we are going to see about management reporting. Like what is management reporting? What is reporting? What is a report? Regarding those things we are going to see. And after that we are going to see entire in detail explanation regarding management reporting. And after that some analysis regarding what? When management audit is being done by any auditor, there are certain analysis which has to be done by them. Because the management audit report has to be prepared. For that, something has to be analyzed, something has to be reviewed. Regarding what analysis has to be done? we have different kinds of analysis like performance analysis, contribution analysis, capacity utilization analysis, manpower analysis. For each and every sector or unit of the organization, we have different kinds of analysis. Regarding that also in detail we are going to see in this particular unit. So that is the overview what we are going to learn and see in this particular unit. Now, coming to our concept 1, management reporting. What is management reporting? First, before getting into management reporting, let us see what is report. Report is nothing but a statement containing about all the information and data. Whatever is being done or whatever analyzed, whatever reviewed, everything, facts, information, data, everything is collected and put it in a format statement which is called as a report. What is reporting? Reporting means whatever facts are there in the report, communicating that information between two parties is nothing but reporting. So, nothing but a conversation regarding the facts and information in the report between two parties is nothing but reporting. Now coming to management reporting. What is management reporting? It is a process of giving this information, whichever it is there in the report or a statement, to management. So, communicating the information, facts, data, whichever is there in a statement as a form of report with the management is called as management reporting. So that is nothing but management reporting. Now we have seen management audit report in our previous unit. There are certain characteristics for management audit report to be a good MAR. What are those characteristics which we have seen? We have 5 characteristics. Pertinence. We have around 5. What are those? See, here those are. Pertinence, comprehensiveness, brevity, timeliness, motivating. These are 5 characteristics for any report. If it is a MAR report, to be categorized as good MAR, these 5 characteristics has to be there. What if these 5 characteristics are there and it is a good MAR, what it is useful to? That we are going to see here. If any management reporting, after reporting, they give MAR, which is management audit report. If it is a good management report, then what it helps for? It gives clarity regarding these 3 things. What are those 3 things? It gives clarity regarding objective for which audit is conducted. Like for what purpose this audit has been started, the main objective, goal of audit, it gives clarity regarding it. In management audit report, the details regarding audit procedure, audit program, audit process will be there, isn't it? Now, if it is a good MAR, it will follow all the characteristics which will lead to satisfaction of that main objective of for which audit is conducted. Second, clarity is nothing but giving a clarity regarding the capabilities of auditing. Whoever members are there in the audit team, what are their experiences, what are their skills, what are the actual efficiency of those members who are working in audit team, what are their capabilities. Regarding that also management audit report can give clarity. How that can give clarity? See, for example, if any audit team is there who is working for a management audit and at last they have given a management audit report. In that report, everything is given in detailed manner. Even a non-compete person is able to being understand. Then what they will say, like whatever the company will say, this management audit report is perfect. Like whatever organization is doing, everything is reflected in this particular audit report. If any shareholder or investor or consumer, customer, whoever it could be, if they are looking into just this audit report, they will entirely know about our organization. Then that is nothing but a good management audit report. How that good management audit report has been bought? Because audit team members have proper expertise and capability of giving that particular good MAR report. So, if any MAR report or management reporting is good, then it gives clarity regarding capabilities of audit team, because that how the capability of audit team will be reflected in report. And also regarding their skills, regarding their handling specific issues, like in this situation how audit team is being able to handle, If any problem is there, how they are able to resolve it. If any deficiencies are there in any statement, how they are handling it. Regarding the capability of handling any specific issues and what are their skills. All these things will be clarified by which? By having a good management report. So that is what we have here. Good management report gives clarity on objectives for which audit is conducted, efficiency and capabilities of audit team, and depth of their skills on handling specific issues. Now, see, this is what I have told you. Reporting is defined as a communication of statement confirming whatever relevant information is there between two parties. That is reporting. Management reporting is nothing but a process of providing information to the management. A report is a statement containing facts. Regarding these three things we have seen: report, reporting and management reporting. Now, importance of quality in reporting. If any reporting is in good quality, then what are its importance? For what it is useful for? It gives clarity regarding these three things. We have seen it. Regular reports keep management informed about the effectiveness of respective responsibilities, enabling timely and informed decision making. If good management report is there, then what it helps for? And if reports are prepared regular basis, then it will give regarding what are the responsibilities of each and every person. Enabling timeliness, which means each and every process will be completed on timely basis, because that should be given in a report. And informed decision making. Whatever activities have been completed till now, on the basis of that a report will be prepared. On the basis of report, decisions will be taken by the management. So all these things will be happened if good MAR is there. That is regarding management reporting. Now, types of report. This is not the exact types of report. What is exact types of report is there here. But what is this? Why types of report is given? See, if any report is being prepared in management, then that will be based on the management requirement, isn't it? See, for example, if CFO is there for any company, then what kind of report CFO needs? CFO needs a daily collection report with total inventory value from all branches. That is what a report needed for CFO. Because on the basis of that daily collection report, he will take decision. If national sales head is there, then the report should be detailed SKU wise daily collection report. What is SKU? SKU is nothing but stock keeping unit. What is this stock keeping unit? There will be many products in the organization. For each and every product, a number will be assigned, which is called a stock keeping unit number. That number is assigned for any product so that the management will be easily able to track that particular product. So for easy tracking and for easy inventory management, this stock keeping unit number will be assigned for each and every product. So if sales head is there, for sales head, the report should be based on what? SKU wise daily collection. So what are the daily collections are? That details and information should be there in the report which is given to national sales head, because based on that only he will take decisions regarding sales and stock. Now coming to production head. If production head is there, then what is hourly production happening in the organization? What is the production per product? What is the production per plant? Regarding that details, he want a report. Now coming to national plant head. Then what is shift wise? How many workers are there? How many laborers are there? How much shift are being changing? What is the location? What is the time per shift? How many workers are working in that particular shift? Regarding all details, all information should be there in a report which is given to plant head. So, why I am telling this is, preparation of report will be usually based on management requirement. For whom this report is being useful for? Who are taking decisions based on this report? Based on that, the report will be prepared. So, that is the type of report. Type of report usually depends on management requirement. Similar to that, frequency of report also depends on operational purposes and organizational hierarchy. Hierarchy is not what you think as father and son, they are maintaining business. Not like that. Hierarchy in this case is position of that particular individual. See, if CFO is there and if they need daily collection report, then they need report based on daily basis. And they need report on daily basis. If national sales head is there, then they need daily collection report. So report should be daily given. If production head is there, after completion of every hour or after completion of that production process, they need that report. If national plant head is there, then based on the location wise, monthly report or quarterly report will be given to national plant head. So, what is the organizational hierarchy or what is the operations happening? Based on that, frequency of report will be changed. If it is hourly report, if it is daily report, if it is quarterly report, if it is monthly report, will be based on what? Based on the operations and organizational hierarchy. Similarly, I have given here an example. If managing director is there, then they want monthly cost benefit analysis report. So, the report given to managing director should be monthly basis. So, based on that, the frequency of that report is changing. Similarly, costing head is there. After completion of all performance of the individual product, the costing details of entire product has to be given to costing head as a report. So, after completion of product performance, they need a report. So, frequency of report also changes from operational purpose and an organizational hierarchy basis. And at last, management audit report is submitted. Now, if any report is generated through ERP system, then that kind of report is called as operational report or business intelligence. So, this is a name which is given to a report, management report, which is prepared or generated through ERP system. This is important. You have to remember it. Any management report, if it is prepared or generated through ERP system, then it is called as operational report or business intelligence. So, that is regarding management reporting. We have understood what is management reporting. Why good management report has to be given? Because it will help us in these three things. And always the time of report and frequency of report will change based on the circumstances. And if any report is prepared through ERP system, it is called as business intelligence and operational report. Till now, I hope everything is clear. So, this is what I have given here. Types of report will be based on these and frequency will be depending on these things. Now, what are the characteristics of management report? They are categorized into three: financial report, information report and control report. See, characteristics of management report. Financial report. Management report is in kind of financial report when usually compared with prior periods. We already know when any financial report is being prepared, that will be based on comparison with prior periods to know how financial position is there in that particular entity. Includes, financials will include cash flow, borrowing cost and performance report against the budget. What is the budget performance and what is the actual performance? Based on that report also will be there. If the management audit report is having all these things, like if report is prepared based on comparison with prior periods, if it is including cash flow related information, borrowing cost information or performance report information, then that will be categorized into what? Financial report. It is management report, but it is based on financial. So, it is called as financial report. Now, information report, that is subcategorized into three: trend report, analytical report and activity report. What is trend report? If any information given in the report is based on comparison between comparison of the uh, activities which are happened on a specified period to identify whatever trends are there. See, for example, a report is there. In that, information regarding past 5 years is given, and based on the past 5 years comparison data, we are being able to know what is the trend of that particular period. So if we are getting to know regarding the trend identification based on the comparative information which is given in the report, then that is a trend report. So that is based on information. So it is information report. Analytical report, comparison among different activities. Activity itself is different, but we are comparing it because the output which is getting from both the activities is similar output. Activities are different, but output is similar. So we are comparing the two activities and giving information in a statement format. That is called as analytical report. Activity report, based on operational activities, day-to-day activities regarding all specific activities which are happening in the organization. If report and statement is prepared, that is called as activity report. In these three cases, some kind of information is being given, isn't it? So that is called as information report if it is given as a management audit report. Now, control report. If a report giving information regarding the assessment of performance of various responsibilities centers within the organization. In an organization, there will be different cost centers. You already know what a cost center is. So there will be many different cost centers in an organization. Now, what is the responsibility of that particular cost center? What is the performance of that cost center? Is it directly or indirectly reflecting to the profit or not? Is it being useful to the organization objectives meeting or not? Regarding all that, if information is given, then that is called as a control report. So these are the three categorizations of characteristics of management audit report. What are those three things? Financial report, information report, and control report. I hope that's understood by you. Management report should be purposeful and catered to specific management requirements. So always management report should be based on management requirements. That characteristics are based on this. Now, at last, regarding management reporting is types of management reporting. These are actual types of management reporting. It is categorized into nature-based and functional activities based. Nature-based is subcategorized into two: enterprise report and investigative report. And functional activities are categorized into two: individual activity report and joint activity report. What are these types of reports? We'll see. See, if management audit report is based on nature, then it could be of two kinds: enterprise report and investigative report. What is enterprise report? The detailed description regarding entire enterprise, entire organization, operational activities, financial position, what are the process, what is the profitability, regarding all details. If it is given as a statement, then that is called as a enterprise report. It will involve all internal and external factors which could be useful for whom? For the bankers, stakeholders, customers. So whoever external people are there who want to know regarding our information, if they see this enterprise report, they will get to know regarding our organization. So that is based on nature. If it is an enterprise report, that contains all details regarding entire organization, that is enterprise report. Investigative report. If any report is prepared on the investigation of particular problem or particular risk analysis, any such kind of specific area, if investigation is done, then that is called as investigative report. Now, based on functional activities, we have to individual activity report and joint activity report. As name itself is saying, if for one single department where one supervisor is there to check regarding the work done by in the department, then that is called as individual activity report, prepared for a single department under the supervision of an executive. So one executive is there who is supervising that one department. Regarding that, information will be given in where? Individual activity report. Joint activity report is quite opposite to the individual activity report. Multiple departments information is given in one report. That multiple departments are working under the same project and same executive. So for one project, multiple departments are working. Then such kind of statement is prepared is called as joint activity report. So these are the types of management reporting based on nature, and based on functional activities. Based on nature, it is enterprise report and investigative report. Based on functional activities, it is individual activity report and joint activity report. So this is the detailed explanation regarding management reporting. I hope it is clear to you. Now, getting into analysis. We have different kinds of analysis as I have already told you. So first analysis is performance analysis, which is our concept 2. What is performance analysis? As it is already telling, it is performance, it is analysis of performance. But whose performance? That we are going to see. Performance analysis is nothing but evaluation of how effectively the work is done by individual or by organization for a specified time framework. See, for example, if 3 months, how that 3 months work has been done by individual or organization is being evaluated, then that is a performance analysis. For yearly basis, for this particular year, how the work has been performed, then that is a performance analysis. So, specified time frame is also important. Critical evaluation of how effectively they are achieving goals, who? Individual or organization within a specified time frame. That is called as performance analysis. Why performance analysis has to be analyzed when doing the management audit? Because it helps to identify whether there are any deviations from the projected metrics. What are these projected metrics? See, whenever any activity is being done, a metric has to be fixed. They have to identify what is the performance metric. Metric is nothing but a standard which has to be met by all the individuals who are working in that particular area of work. See, for example, if you are going to give exam for cost and management audit, what is your metric? Your metric will be 80 plus marks or 60 plus marks, for example. So, what is that metric? Your metric is to have 60 plus marks scoreage. That is projected metrics. So, if performance analysis is done, then you will be able to know whether there is any deviation from that performance metrics. So, you have fixed your metrics for 60 plus marks. Now, your exam is completed and I am coming as a management auditor and checking your performance analysis. Now, as we have already have that 60 plus marks metrics, if I am coming and doing the analysis, will I be not able to tell whether there is any deviation? Yes. If it is less than 60 or more than 60, that is a deviation, isn't it? So that will be identified by doing what? Performance analysis. And next thing, while decision making to prevent potential failures. Now you are giving test. In that test, your projected metrics is 60 plus marks. I have done the performance analysis and told you that here are some failures or here are some mistakes which you have to rectify it. You will rectify it in your next examination and you will make the decision according to that while giving your answers in the next examination, isn't it? So, it will help in decision making for what purpose? To prevent the failures in the next stage. So, these are the two reasons why performance analysis are important in any organization. I have given example as an examination like paper, but you can connect it with the management related issues. Okay. So what is performance analysis? I hope you have understood. Why performance analysis has to be done? I hope that's understood. Now, there are certain key components while conducting this performance analysis. What are those key components? We have around 7 key components. What are those? We'll see now. See, performance metrics and goals. As I've already told you, when any management is being involved in any performance, they have to establish a performance metric. They have to put a standard that has to be followed by each and everyone in the organization. So establish a clear company performance metrics that align with the business objectives. Define what is the specific goal against what is the performance has to be measured. So this is the goal. Based on this goal, you have to measure the performance, like whether they are performing correctly or whether they are not performing up to the mark. Based on that, everything has to be measured. So before measurement, we need to have a standard, we need to have a goal, we need to have a metrics. Establishing that is the first key component in performance analysis. Now, second key component is performance metrics has been fixed. Now, identify the parameters for which measurement has to be done, which means a proper benchmark has to be set. What is the benchmark? See, for example, same examination example I'm taking again. See, in June 24, we already have a question paper. And in that, one question has been asked for 7 marks. Now, what I will tell you guys, I will tell you that this is a benchmark. Always when I analyze past 10 attempts question paper, this question is being asked for 7 marks only. So, that is a benchmark. So, if this same question has been asked in December 24, for how much marks they will ask? They will ask it as 7 marks question. So, that is a benchmark. So, that is a standard way of doing anything. So, and also, if till now, when that question is being asked for 7 marks, all students who are attempting that particular question are getting 6 marks for 7 marks. Now, what I will tell you, see, this is the benchmark. If the same question has been asked in the December 24 attempt, you have to score 6 marks in that particular question. So, that is a benchmark which is being set. Based on that benchmark, performance metrics will be established. And based on that performance metrics, what we will measure? We will measure the performance. So, first key component is nothing but establishing a performance metric. Second, identify the parameters for measurement, or else you can write it as establish a benchmark. Third key component is historical comparisons. Historical comparisons is nothing but past periods analysis. Utilize past periods analysis. How past period performance is there. Based on that, we will put certain standards. See, for example, as I have already told you, till now, students are being scored in that particular question 6 marks. So, that is how I am telling you based on past period records. If in previous attempts the question isn't asked, new question is being asked, will I be able to tell it as a historical comparison? No, because it is asking for the first time. But now I have a historical comparison because same question has been asked in the previous attempts also. So that is nothing but past performance parameters. Look into the past performance, how the performance is being done, how it is being measured. Based on that, you will put a measuring yardstick, which could be used for measuring purposes. That is our third key component. Fourth, performance metrics is established, benchmark has been set, and past performance has also been analyzed. Now, measure what is the actual performance. That is our fourth key component. Actual delivery measurement. Measure the actual delivery of result against the set performance metrics. So, this is the performance metric which is to score 60 plus marks. Now, what is actual delivery? How much you have scored? Is it 40 plus? Is it 80 marks? How much is your actual delivery. Time frame consistency. Not only measuring the performance is important, measuring it based on time frame consistency is also important. See, for example, there are two students, student number 1 and student number 2, who are giving their same examination in December 24 examination. Now, this first student has prepared for just 3 months and scored 60 marks. And this second student has prepared for 6 months and scored 60 marks. Now, can I compare student 1 with student 2? No, because there is a time frame consistency. Student 1 prepared for examination for just 3 months, but student 2 prepared for 6 months period. Now, if I am going to compare the student 2, I have to compare with the same student who has prepared for 6 months. Then only the performance measurement or the analysis will be done properly. Ensure that evaluations are conducted in equal periods or time frames. That is our fifth component. Now, sixth is root cause analysis. There will be deviation from performance metrics. No one can tell that all will have particular metric. If any particular metric is established, the management has to compulsorily follow it. No one will be able to follow it, isn't it? So, there could be some deviations. Now, if any auditor is there, he has to identify a root cause. What is the reason for the deviation? They have to identify it. And at last, feedback mechanism. Implement a structured feedback process for employees regarding business performance improvement. Tell the employees that this is the performance till now and you have to take this particular steps to improve the performance. So, these are the 7 key components which are there for what? For performance analysis. What are the 7 components? Performance metrics and goals. Performance metrics and goals. Parameters for measurement. Historical comparisons. Actual delivery measurement. Time frame consistency. Root cause analysis. And at last, feedback mechanism. So, these are the key components for performance analysis. I hope you have understood what is performance analysis. Now, hoping with that, getting into concept 3. First analysis is completed. Performance analysis is done. Now, capacity utilization analysis. What is capacity utilization? What is capacity? You already know because we have already done it in cost audit, isn't it? Now, capacity utilization analysis is nothing but what is actual company capacity and what is maximum capacity. The comparison between these two in a given time is nothing but capacity utilization analysis. As we have already know, what is maximum potential? We will consider it as an installed capacity. And what is actual capacity? Comparison between these two or a percentage is nothing but capacity, actual capacity, utilization. Are you being able to recall it? Installed capacity, actual capacity. What is actual capacity utilization? Actual capacity divided by installed capacity into 100. This is a formula. I hope you are remembering it or recalling it. So, actual company's production capacity at a given time, comparing it with the maximum potential. So, what is capacity utilization? Actual level of output divided by maximum level of output into 100. On this formula basis only, capacity utilization analysis will be done. So, this is what here is there here also. Capacity utilization is a measure of how much a company production capacity is being used at a given time, comparing it with maximum potential. It reflects the efficiency with which business and its resources, what are resources, machinery, labor and raw materials to produce goods are being used. So, how much is the efficiency and how much resources are being used? That will be known by which analysis? By capacity utilization analysis. This is the formula. And what is the importance of capacity utilization? Why we are doing this particular analysis? Capacity utilization indicates how effectively management has utilized Available resources. So what are the available resources and how these are being utilized by the management? That will be known clearly if we are doing capacity utilization analysis. Regarding plant and machinery details, regarding building, regarding land, raw materials, manpower, utilities, all these information and how these are being utilized by the management, that will be known by analyzing capacity utilization analysis. So that's why capacity utilization analysis has to be done. To know about all these, how plant and machinery are working, how business building are working, how land are working, how many resources are being utilized for them. Regarding that, we'll know. Now, getting into if higher capacity utilized, then what are advantages? Advantages of higher capacity utilization. Resource efficiency, better utilization of available resources. Now, capacity has been utilized higher, which means resources are utilized in a better way. More resources have been used. If more resources are used, better outcomes will also be bought. Cost reduction, reduced per unit fixed cost, leading to improved profitability. If higher capacity utilization is there, then fixed cost will be reduced. If fixed cost is reduced, profit will increase. So these are the advantages of higher capacity utilization. How any company will address lower capacity utilization. Capacity should be used up to the mark or maximum capacity, but it should not go to minimum capacity. Not even once the capacity should be utilized lower, which means resources are not being used properly. Resources are being used in a wasteful manner, which means profit is not reflecting. So lower capacity utilization should not be there. In what way they can address, like management can address lower capacity utilization? We'll see now. For lower capacity utilization, it's crucial to identify the reasons and take corrective action. So what is the reason for lower capacity utilization? And what are the corrective measures which has to be taken? That has to be analyzed by whom? By management. Machine breakdowns. What are machine breakdowns? Improve maintenance schedule to minimize downtime. Losing market share. Invest in R&D to develop better and improved products. Non-availability of key raw materials. Develop a relationship with the vendors, with suppliers. Then, whenever we require important materials, that will be received in a right time. Non-availability of electricity. Explore alternative energy sources like wind and solar power. If electricity is not able to be or not available, then we can go for wind and solar power to generate the energy. So these are the reasons for lower capacity utilization. They have to identify what is the exact reason for lower capacity utilization and take the corrective measures to rectify this lower capacity and to be able to meet the actual capacity utilization. And this is nothing but economic significance of capacity utilization, like how capacity utilization will affect the economic stages. This you can just read, but I hope you have understood till now. What is capacity utilization? What is formula for it? What is importance of capacity utilization? And if higher capacity is utilized, what is its advantage? If lower capacity utilized, how the management has to address it. So that is our concept 3, capacity utilization analysis. And now getting to our third analysis, productivity and efficiency analysis. Productivity and efficiency analysis. What is productivity and efficiency analysis? Is nothing but doing the analysis for productivity and efficiency. What analysis are being done? Ability to produce maximum possible output from given set of resources. So from input and output. What is the productivity? How much maximum productivity is being able to be done? Yes. From input and output, how much maximum possible output is being able to be produced. That is called as productivity analysis. Analyzing that maximum possible output is called as productivity and efficiency analysis. Productive efficiency or production efficiency can be called both ways, refers to the ability to produce the maximum possible output from the given set of resources. How productivity efficiency works? Productivity efficiency becomes vital in competitive industries with shared limited resources. In competitive industries, resources will be shared and will be limited. So in that kind of entities or enterprises, productive efficiency will work or be benefited more. Marginal costing and improving efficiency. What is marginal cost? You have already known. As production approaches its maximum efficiency, the marginal cost of producing additional units increases. So, as production approaches its maximum efficiency, when production capacity or efficiency is in maximum state, marginal cost also increases. So, if production increases, marginal cost also simultaneously increases. Improving efficiency. Companies can improve workflows, enhance technical efficiency, and achieve economies of scale to overcome these limitations, especially in a short run. So, any organization objective is to reduce the cost. So if production is increasing and marginal cost is increasing, this cost has to be reduced. For that, they have to increase the efficiency. How? By improving the workflows, by enhancing technical efficiency and achieving economies of scale to overcome these limitations. As to overcome this limitation, they can follow all these. So that is how productive efficiency works. There is another word called as production possibility frontile, PPF. What is production possibility frontile? It is a graphical representation that illustrates about output limits of two products competing for finite resources. So for some resources, if two products are competing with each other and if any graph is representing regarding that, that is called as production possibility frontile. Yes, it is a production possibility frontend. It helps to understand opportunity cost associated with reallocating resources from one product to another. So what is this PPF? PPF is nothing but resources are being used between two products. How resources are being used effectively. That graphical representation is called PPF. It helps to understand what is the opportunity cost. What is opportunity cost? To lose something. See, if one we are getting, we are losing something. So what we are losing, that is called as opportunity cost. The next benefit. Reallocating resources from one product to another. When from one product to another product, anything is being reallocated, then what is the opportunity cost that we are losing? Regarding that knowing is called as PPF. PPF helps us to know regarding the opportunity cost. So that is called as production possibility frontend. Now, we have seen regarding productivity and efficiency analysis. So this is called as productivity analysis. Now, what is allocative efficiency? We have two different efficiencies. One is productive efficiency, one is allocative efficiency. What is difference between this productive efficiency and allocative efficiency? Productive efficiency is nothing but called as productive efficiency and allocative efficiency are similar, but there is a difference between both. Productive efficiency is focusing on maximum output with limited resources. From limited resources, what will be the maximum output generated? That is called as productive efficiency. It also helps us to identify opportunity cost. That is what we have seen just now. Now, what is allocative efficiency? Optimal distribution of goods or services achieved when marginal cost is equal to marginal benefit. So when this allocative efficiency will be bought, when marginal cost equal to marginal benefit, we will get this allocative efficiency. It is nothing but optimal distribution of goods or services. Ensures that both producers and customers benefit from the market. So allocative efficiency is also getting the maximum output, but that maximum output is derived when marginal cost equal to marginal benefit. Both suppliers, customers, and both producer and customer will have same benefit from the market. In that stage, we will get this allocative efficiency. So that is productive efficiency and allocative efficiency. While both productive efficiency and allocative efficiency relate to resource utilization, both are similar to resource utilization, but they are distinct from each other. How? Productive efficiency mainly focuses on getting maximum output from limited resources, but allocative efficiency means optimal distribution of goods or services. So that is regarding productivity and efficiency analysis. I hope that's clear what is productivity analysis and what is allocative analysis. So that is our concept 4. Just a minute. Yes. Next concept 5 is utility efficiency analysis and energy efficiency analysis. See, utilities and energy efficiency analysis. Why it is getting stuck? Just a moment. Yes. Utilities and energy efficiency analysis. When energy, if it is using less to provide same level of product or services. So, if what kinds of energy we have, what are utilities? We have already discussed utilities as transportation, electricity, water supply. Energies are also lighting, heating and transportation. So, both utilities and energy are one and the same. Now, if energy is utilized less to produce the same level of product or services, regarding that analysis is done in utilities and energy efficiency analysis. Energy efficiency is to practice of using less energy to provide the same level of product or services. Always the energy utilities which are used, those should be used in a less quantity, but the products or services should be produced higher. Only then we'll be able to get the profit, isn't it? Such as lighting, heating and transportation. So energy efficiency is nothing but effectively using the energy to produce the same product or services, same level of product or services. Utilities and energy efficiency analysis. Management auditors can explore several avenues to improve the energy efficiency. How they will be able to get to this energy efficiency? By following all this. Energy generated per unit of fuel. Analyze the energy generated per unit of fuel consumed for electricity and steam generation. Based on that, they will try to control it. Trend analysis. Monitor energy cost as a percentage of total production cost. So this is the total product cost and this is the percentage of energy which is utilized for this particular product. Based on that, analyze what is the trend. Recycling. Explore opportunities for recycling materials like paper, glass, plastic, aluminium and generating energy from these things. Reduce energy consumption and CO2 emissions. Capacity utilization. Improve capacity utilization to enhance the input-output ratio. Plant and machinery upgrades. Replace existing equipments with new equipments after conducting a cost-benefit analysis and assessing payback periods. Calculate what is payback period, what is cost benefit analysis and replace the old machinery with the new machinery or old plant with the new plant so that plant and machinery will be upgraded. So these are the factors or analysis which can be done by whom? Management auditor when doing the energy efficiency. We have energy efficiency in 3. Industry, homes and buildings, and transportation. Energy efficiency in industry. If it is industry, then what management auditor has to do? Electric motors, replacing old electric motors with modern motors. Efficient versions can yield significant savings, often covering the purchase cost in just few weeks. So management auditor can do the analysis for what? For recycling older electronic motors. So if we are replacing old motors with new motors, will that increase the energy efficiency? Regarding that analysis can be done. Steel production. The steel industry has adopted advanced processes like thin slab casting and direct casting to save energy and reduce CO2 emissions. So what are the new techniques which are coming in place? Regarding that analysis can be done. Whether the new techniques are being followed by the industry or not, whether enterprise is trying to reduce the cost or not, regarding that analysis can be done in where? In industry entities, when energy efficiency is being done by management auditor. And in homes and buildings, what can be done? LED lighting, transitioning to normal bulbs to LED bulbs, which can save energy up to 75%. You all already know this. Energy efficient appliances, low electricity bill, purchase the appliances which will lead to lower electricity bill, through which energy can be utilized in an effective manner. In transportation, improved engine technologies, advancement in hybrid and electrical vehicles. Everyone are shifting to electrical vehicles. Have increased fuel efficiency and reduced emissions. Gases are not being produced and fuel is being reduced. Fuel usage is being reduced. Mass transit systems, investing in public transport, cycling, walking infrastructure. The director telling not at all use the vehicles. Go on by walk, use public transportation, go on cycling, so that energy will be utilized less. Use human energy more and use the energy which is produced by nature limitedly. Walking infrastructure can lead to lower CO2 emissions and improve air quality. So nothing but how effectively we can reduce the energy utilization by taking proper steps in industry, in homes and buildings, and in transportation, are nothing but energy efficiency techniques. What is the recycling and its importance? Recycling materials like paper, glass, plastics, and aluminium is crucial for reducing energy consumption and emissions. For instance, aluminium recycling can save 95% of energy required for primary production. If we are recycling glass, it can reduce air and water pollution. If we are recycling paper, 60% of energy needed for new paper production will be reduced. Plastics, 14% of plastics are recycled. Efforts to increase recycling rates can have significant environmental benefits, which means no one will throw off plastics. Plastics cannot be easily decomposed. You all already know this. So if you are recycling plastic, then environmental benefits will also increase. So this is why they are trying to tell that recycle everything like paper, glass, plastic, aluminium, recycle everything and try to produce the energy from it. Utilize it again for the production, in which energy will be reduced. Try to implement techniques in the industry when doing the energy, when using the energy for production. So regarding all these, analysis has to be done by management auditor, whether that particular entity, organization, company is complying with this recycling techniques, energy efficiency techniques or not. So that is regarding utilities and energy efficiency analysis, are concept 5. Hoping that you have understood it. Getting to our concept 6, contribution analysis. As you already know what is contribution, same thing is there here also. Contribution analysis is a tool used by business to assess how variable cost affects the net income. What is contribution? Sales minus variable cost. So how variable cost is affecting the sales? Regarding analysis of that is called as contribution analysis. By measuring contribution margin, companies can understand profitability of individual product. How they will analyze how they will measure the contribution margin? Total revenue minus variable cost, which is called as contribution, divided by total number of units sold. which is called as contribution margin. Contribution analysis is a crucial tool used by business to assess how variable costs affect net income by calculating the contribution margin. What is contribution margin? This total revenue minus variable cost divided by number of units sold. Now, decision making. If product has a low contribution margin and variable cost cannot be reduced. See, if contribution is less, variable cost should also be less. Only then sales value will be correct. But if contribution is low and variable cost cannot be reduced, then the company may consider to discontinue that particular product, due to which the sale price will also reduce. Contribution analysis helps to identify strong and weak areas within the business and determines how each unit contributes to covering fixed cost. So, contribution analysis not only help us to know which products to be discontinued, but also it will help to identify strong and weak areas within the business. Factors considered during contribution analysis, managers must also consider internal and external factors that may influence product performance. So what we have seen till now, what is contribution margin? You already know it. When contribution margin is low and variable cost cannot be reduced, by doing this contribution analysis, we can get to know what products to be discontinued and what are strong and weak areas in the business. So for that, contribution analysis has to be done. And also, what kind of factors to be considered while doing this contribution analysis? Both internal factors and external factors have to be considered. What is the importance of contribution analysis? It supports in decision making, particularly in conjunction with budgeting processes and management accounting functions. So it will help in decision making, it will help in budgeting process, it will help in management accounting function. So for that, contribution analysis has to be done. PV chart, profit to volume chart. What is profit volume ratio? Relationship between volume and profit is nothing but PV. Helping non-technical managers easily understand the impact of sales volume on profitability, so that everyone will know regarding profitability and sales. What is the impact on profit? What is the impact on sales? For that, we have to know regarding profit volume chart. The contribution figure is treated as a variable in this chart. So what we are doing? We are doing contribution divided by sales into 100. Isn't it? So that is called as profit volume chart. Break-even analysis. What is break-even analysis? A point where there is no profit, no loss. The point where net total revenue equals total cost. Margin of safety. The margin of safety indicates how much sales can drop before the business is reaching the break-even point. It can calculate it in percentage terms to assess the risk. So everything what you already know in your SEM, that is called as contribution analysis. Analyzing regarding all these things is called as contribution analysis. What are the advantages of contribution analysis? Ease of use. It is a straightforward and helps managers to make informed decisions. Decision making can be done because it is a straightforward. These are sales. This is variable cost. This is break-even point. This is margin of safety. Everything is straightforward. Nothing is there to analyze further, isn't it? Performance insights provides clear insight into how much profit each unit generates beyond break-even point. So this is break-even point. Beyond this, how much can be produced? Regarding that, performance insights can also be given by contribution analysis. What are disadvantages? Constant selling prices and linear relationships. Contribution analysis relies on certain assumptions such as constant selling price. It thinks that selling price is constant over the period. And there is a linear relationship which may not always hold true. So that is a disadvantage for contribution analysis. So that is regarding contribution analysis, our concept 6. Hoping that you have understood it. Now getting to concept 7, profitability analysis. What is profitability analysis? It is a process of systematically analyzing the profit derived from various activities, various projects, various products. To to analyze profit derived in a systematic way is called as profitability analysis. Why profitability analysis has to be done? To increase profit, business need to understand the drivers behind that profitability. So what is the reason for profit? What is the reason for profit reducing? Regarding that, business has to know. So for that, profitability analysis has to be done. Create efficiencies in process that generate revenue. Always check the process and improve the efficiency of process, which directly relates to the revenue. Reduce overheads and operational cost. Overheads are nothing but indirect cost. Operational cost, which means day-to-day activities cost, try to reduce that particular cost. Enhance product mix to maximize both short-term and long-term profitability. Enhance the product mixes. Mix the product, merge the product in such a way that will help the short-term and long-term to get the more profits. Support budgeting by setting realistic goals and planning how to achieve them. Properly prepare a budget which is realistic, which is capable of doing it, and try to make a plan to achieve that. By doing all these, it will reflect to profitability. Whether the organization is complying with all this or not is nothing but checking of profitability analysis. There are certain methods of performing profitability analysis. What are those? You already know regarding this. Profitability ratios, operating profit margin, return on assets, return on equity, earning before interest and tax, EBIT. By following all these ratios, you can compute profitability ratios. Customer cluster wise profitability analysis. This method looks at customer segments or markets and their contribution to overall profitability. So who are customers, what is market condition, and what is contribution. Based on this analysis, profitability analysis will be done. Qualitative analysis. What is trends and what is business cycle. Analyzing with that, profitability analysis could be done. Product profitability management. This analysis focuses on individual products, evaluating market performance, product-wise profitability, pricing strategies. By doing all these, we can know about the product profitability. So, by following all these methods, we can do the what? Profitability analysis. We can use ratios, we can use customer cluster-wise profitability analysis, we can use qualitative analysis, we can use product management. By following all these methods, we can do what? Profitability analysis. Key profitability metrics. Sales to sales ratio, sales to stock ratio, net sales divided by average inventory. This metric evaluates the relationship between stock and sales. How much sales is happening? What is the current stock? To know regarding that, sales to stock ratio can be computed. Gross margin, gross profit to net sales. Gross margin shows how much profit a company retains from every rupee of net sales. So this is the net sales and this is the profit. So this is cost, this is sales, and this is the margin. So that could also be known. By doing sales to stock ratio and gross margin ratio, we will know regarding profitability analysis. And while doing this profitability analysis, what management auditors have to do? They have to monitor and aim the increase of sales revenue. So how much sales are being increased, that has to be monitored. They have to reduce raw material cost and utilities cost. They have to increase the contribution, ensure optimal capacity utilization, and strive to increase overall profitability. All these have to be done by whom? Management auditor, while doing profitability analysis. So that is regarding profitability analysis. Next, working capital and liquidity management analysis are concept 8. What is working capital? Working capital is nothing but current assets minus current liabilities. The capital which we are using for day-to-day operating activities is called as working capital. How we are going to define working capital? Current assets minus current liabilities is a formula for contributing or measuring working capital. Effective working capital management. helps the company to avoid liquidity issues, reduce borrowing, prevent business disruptions. So, we will not have any liquidity issues, we will not have any borrowing issues, or we will not have any business disruptions if we calculate working capital, and if we do working capital analysis, we can avoid this. However, improper management such as extending too much credit can create cash flow issues and force the business to rely on debt, leading to increased interest burdens. So for that, working capital analysis has to be done. What is the importance of working capital management? Current assets often make up significant portions of companies' total assets. We already know that. Shareholders' wealth is closely linked to cash generation, which is driven by proper working capital management. By doing working capital management, shareholders' wealth can impact to cash generation. Liquidity issues stemming from poor working capital management could be reduced. We could escape from liquidity issues. Borrowing will be reduced. Current assets are nothing but total assets. So by doing working capital management, we can know regarding the current assets. Shareholders' wealth can also be identified. So this all can be done by working capital management. What is the objective of working capital management? Ensuring that there is a liquidity. Ensure that the business has enough liquid assets to meet its short-term obligations. Insufficient working capital may result in late payments, leading to reputational damage, credit downgrades, and even can go to liquidation. So for that, what we need? Money, which is called as liquid assets. Return on capital employed. An optimal level of working capital is needed to balance the liquidity with profitability. So always the liquidity should be equal to the profitability. Return should be there. If no return is there, no business will do any work. We have liquidity ratios and efficiency ratios, which are just formulas, which are very, very important for practical questions. From this unit only, you will get practical questions from ratio analysis. So try to see these formulas, which you already know, but try to revise it. These are important for practical questions. What are liquidity ratios? Current ratio and quick ratio. Efficiency ratios are inventory turnover ratio, inventory days, receivable days, payable days, and sales to working capital. Formulas I am not discussing now. You can revise it. Cash operating cycle. What is cash operating cycle? Is a time between paying to suppliers and receiving cash from customers. So whatever we are purchasing, for that we have to pay to the suppliers. Whatever we are distributing or selling, for that we have to receive cash from customers. Whatever the period between these two is there is called as cash operating cycle. A shorter cycle indicates efficient working capital management, and this is the formula for cash operating cycle. Industry specific working capital considerations. While doing this working capital management, these can be followed by any industry. Traditional manufacturing, they can go for traditional manufacturing, like maintain large inventories of raw material, work in progress, and finished goods. Modern manufacturing can also be followed. Just-in-time management can be followed. Retail sector, retail chains like Walmart, Tesco may have low current ratio because they negotiate long credit periods with suppliers. So these are the techniques which can be followed for working capital management. What are those? They can follow traditional manufacturing. They can go for modern manufacturing like just-in-time, case and costing. We all have the traditional like new modern costing systems. They can follow that, or else they can go for credit periods, long credit periods by communicating with the suppliers. So these are the techniques which can be followed for working capital management. What are key ratios? Inventory of raw material days and inventory of finished product days. These are two key ratios for management auditors. These are formulas which you have to remember compulsorily to solve practical problems. So that is our concept 8. What is our concept 8? Working capital management. and liquidity management analysis. Now, coming to our concept 9 and very, very important concept is manpower analysis. What is manpower analysis? Human resource analysis. At a micro level, manpower planning helps to allocate human resources to various departments efficiently. With technology advancement like robotics, AI, automation, the demand for new skill sets is increasing. When AI is being able to do everything which human he himself cannot do, then human resource and manpower is getting reduced. The skills which are required from man are getting increased, especially in technology driven organizations. This highlights the critical role of manpower planning in ensuring the right type of personnel is employed to meet these modern requirements. So, any human or individual who is being appointed in the organization should be in such a way that the skills and experience which he is getting is more than AI. Manpower estimation, assessing the current workforce, including job descriptions, age distributions, qualifications, and experiences. Regarding current workforce, assessment has to be done by the auditor. Estimating future manpower needs. What is future manpower needs? Considering factors like business growth, expansion, and technological changes. Ensure that the organization meets its objectives by having right quantity and quality of employees at an optimal cost. So these are manpower estimations which are to be taken by whom? Management auditor. He have to first check what is the current workforce. Then he have to estimate what is the future manpower needed. And third, he have to ensure that whoever individual is being employed, that individual is being able to meet the objectives of the entity. So these are the three estimations which are to be followed by the management auditor while going with manpower analysis. Objectives of manpower estimation: secure adequate high quality human resources, reduce recruiting and replacement cost, improve employee morale and satisfaction, prevent unnecessary workforce expansions or reductions, focusing training resources efficiently. So these why manpower analysis has to be done. Why? To reduce recruitment cost, to reduce unnecessary workforce expansion, to reduce or to improve employee morale, to see whether high quality human resources are being employed in the company or not, and at last focus on training higher employees or manpower. Regarding manpower analysis, you have to see that is important. Okay, these are the strategies of manpower planning: collection, maintenance, and interpretation of data, human resource data, periodic review of objectives, whether they are being met or not, development of forecasting procedures, utilization of manpower, allocation of work and surveys to identify performance barriers. So these are the strategies in manpower planning. So whatever manpower analysis is being done, for that a plan should be there. So these are the strategies for planning manpower analysis. And this is the process. First, what is organization objectives that has to be determined. Then, forecast future manpower requirement. Inventory of present, what is the current employment status or what is the current manpower. Anticipating manpower problems. Planning for workforce program. So, this is a process of manpower planning. And steps, there are steps, nothing but same. Anticipate manpower requirements, plan job requirements and description, analyze what are the skills that manpower is holding, selecting recruitment sources. So that is regarding manpower analysis, which is very, very important, which is similar. You can write it in your own words, like what is manpower analysis, which is related to human resources, recruiting, what is current manpower analysis, how much manpower is needed in future, How that is related to technological advancement. Everyone has to be having a proper skills and technologies. You can write it in your own words, okay? But try to inbuilt in your answer the terminology which is there in this, okay? And that's it. These are certain tools which we use for management accounting: break even, capital budgeting, inventory analysis, margin, transaction, trend analysis. These are analysis which we use in management accounting. You already know this. Yes. So these are different kinds of analysis which management auditor has to do when he is going with management audit. So that is what we have seen till now. So what are the analysis which we have seen? Performance analysis, capacity utilization analysis, productivity and efficiency analysis, utilities and energy efficiency analysis, contribution analysis, profitability analysis, working capital and liquidity management analysis, and at last we have seen regarding manpower analysis. So these are different kinds of analysis which we have in our unit 2 of section B. I hope you have understood everything. Yes. Now let us start with our unit 3 in section B, which is management audit and different functions. What we are going to see in this particular unit is under different functions, what are management audit? When management audit is being done, what are different types of audit which will be under management audit in different functions? Like what will be corporate service audit? What will be corporate development audit? And regarding social cost benefit audit, CSR audit, and proprietary audit, energy audit, and many other kinds of audits. So we have different kinds of audit in different functions. Regarding those kind of audits in detail, we are going to see in this particular unit. Now, coming to our first concept, corporate objective and culture. So what is corporate objective? The main objective or the main basis for which that particular organization is running for. What is the main goal of that particular organization? That is nothing but corporate objective, isn't it? So what is corporate objective? A result a company aims to achieve, which is nothing but a goal, including strategies, time frames, and resources availability. So what is the time framework? What are the strategies included? And what are the resources utilized? Combining all with this, if any goal has been set for a company to achieve in this particular period of time, that is called as corporate objective. For example, any company is deciding to get a profit of around 30% of entire capital or 50% of capital, something like that. If it is aiming to have a profit around like that in future periods around 3 years, in future 3 years, the profit should be $10,000 or something like that. Then that is a corporate objective, a value or a goal which company is aiming for in a proper period, in a particular time framework. That is called as corporate objective. Now, business goals versus objective. What is different between business goal and business objective? Business goals, broad primary outcomes or aspirations. Example, becoming the largest bicycle manufacturer, that is a goal. So, becoming the number one in the market is a goal. Broad primary outcome. The outcome is very broad. That is called as a goal. When coming to objective, specific, which can be measurable and which is to achieve the goal is nothing but a objective. Increasing sales by 2.5% quarterly. So, objective is based on specific time framework. So, in this period of time, like within 3 years or within 5 years, the profit should be around 10% or something like that. Within quarterly basis, the increase sales should increase about to 2.5%. So, there is a time framework. If there is any time framework of achieving a goal, that is a objective. But there is no time framework. but a basic objective that our company should be #1 company in the whole market. That is a goal, business goal. So that is the main difference between a business goal and a business objective. I hope that's clear to you. Now, key differences. What is difference between a goal and objective? Besides to this meaning of goal and objective, goals are vague, objectives are specific and measurable. So it is a vague, like it is a random thing, not a random thing, but that is vague. It is just like that. So in this period of time, we have to achieve this. That is a goal. But objective, it is a specific and measurable. Objectives are actionable steps within a defined time framework. So within this particular period of time, these are the steps which we are going to take to meet this particular objective. That is called as a objective. So this is the main difference between goal and a objective. Main objective for small companies. What could be objective for small companies? Profit maximization, ethical profit generation. So how profit could be generated for small businesses with following certain ethics? Survival, short-term and long-term sustainability. So how small companies will be included in sustainability growth in short-term and in long-term. Survival of small companies will also be a major objective because there will be competitive industries in the market. There will be large companies in the market. Besides to that, or behind to that, large companies in the competitive world, this small companies have to survive in meeting with the sustainability and ethical requirements. That is the main objective of small companies. Growth, positive development in turnover, profitability and market reach. On the basis of turnover, on the basis of profitability and on the basis of market reach. There should be a development constantly. If even in 1 year there isn't any development, small company cannot come into the market. They will try to shed that particular company. So these are the three main objectives which will be there for which companies? Small companies. Profit maximization, survival and growth. What is organizational culture? A complex, often undefined aspect of an organization influenced by values, behavioral and management. What is culture? We usually tell if any particular company is there, big type of companies like Google, Wipro or something, there will be corporate culture. What is kind of corporate culture? The behavior, how the employees be in that particular companies, how management keep certain rules in that particular companies, how the value of that particular company is that. That is nothing but a culture, isn't it? So that is similar to the organization culture. It is not a defined aspect, but that culture is influenced by behavior, management and values of the individuals who are working in that particular organization. This is not the definition for organization culture. But yes, organization culture can be influenced or can be get to know by what? By behavior, management and values of the individuals who are working in that particular organization. That is nothing but organization culture. Factors shaping organization culture. So these are the things which are influencing organization cultures. What are their factors which we consider while doing this organization culture? Shared values, common values like outcome orientation, people orientation, team orientation and innovation. When any organization culture is being identified or trying to identify the organization culture, what we'll do? We'll try to know about the outcome orientation. So what is the basic outcome? Who are the people working? Orientation is nothing but to get to know something. People to know about the team and about the new innovations. So shared values. Everything is being shared. Degree of hierarchy. Traditional channels of authority affects decision making speed. If there is a proper hierarchy, like first there will be a head of the company like CEO, CFO. After that there will be managing directors. After that, there will be directors. After that, assistant directors, and under them there will be supervisors or the executives. Under the employees will be there. So there is a proper hierarchy based on which decision making speed is also increasing. So it will affect the decision making. So this people will decide on these particular matters, and this people will decide on these particular matters. So like that, likewise, the authority is divided and authority is shifted to many people so that decision making is speedily done. That is degree of hierarchy. People versus task orientation. Preference for people focused or task focused on decision making. When any decision making is done based on the people to recruit people or to know which people will do this work properly, then people focused or task focused, that should be considered while organization is taking any decisions. Functional orientation, emphasis on specific functional areas within the organization. So some specific functional areas should be categorized and that should be explored, like risk assessment or any factor or any activity in the organization, any function in the organization which is not directly affecting to the profit. Those kind of functional areas should be identified and those should be emphasized. Subcultures, variations within the dominant culture that can either support or undermine core values. Sometimes the culture could be also get to a position of dominant culture. This dominant culture can support the organization or can undermine the organization, which means it can degrade the organization. Dominant culture is nothing but having a dominant position. Use that dominant position can support and can underlay also. So these are the factors which influence organization culture. So that is regarding corporate objective and culture. This is nothing but simply you can understand what is corporate objective, what is organization culture, and regarding organization thing. Okay. So what should be the major objective of the organization? How the culture of organization will be identified or defined. So based on that, concept 1 is there. Okay. Now, getting into our concept 2, corporate service audit. What is corporate service audit? Corporate services refers to service-oriented obligations of corporate entity to various interest groups, including consumers, employees, shareholders, community, and state. So, what is corporate service audit? It means to audit what service oriented obligation. So how services are being provided by that particular company, what is the obligation for that corporate entity to provide services, to whom it will give services, to interest groups like shareholders, stakeholders, debenture holders, whoever it could be, consumers, employees, shareholders, community, and state. So as the name saying itself, whatever corporate entity is providing services and what is the services related obligation of that particular corporate entity. To do audit regarding that is called as corporate services audit. What is the scope of CSA? Corporate service audit is nothing but critical examination of services rendered by a corporate entity and evaluating its awareness and responsiveness to stakeholders. So, it is nothing but to evaluate whether the corporate entity is providing the services properly or not. Doing the examination of that is called as corporate service audit. It is also done to state the awareness and responsiveness to stakeholders. So why corporate service audit has to be done in any organization? That importance has to be said to whom? To shareholders, so that they will understand and they will implement these corporate services audit in their organization. Who will be the key stakeholders? Who will be the stakeholders? Consumers, employees, shareholders, community, fellow businessmen, all will come under this stakeholders. You already know who stakeholders are. Conceptual approach of corporate service audit. So how this corporate service audit will be done? Evaluate contributions of business to societal quality of life over mere profit maximization. So this corporate service audit should not mainly focus on profit maximization, but the societal quality of life. How services are being provided to the society. How the services which is provided by that corporate entity is affecting the consumers, affecting the society, affecting the place like state, community, shareholders, employees, consumers, how everyone are being affected and how everyone are being benefited by services which are provided by that corporate entity. That is nothing but societal quality of life. So corporate service audit is not done in any organization for profit maximization, but for societal quality of life, which means how society is getting benefited by doing this corporate service audit. What are the key considerations which should be taken while conducting corporate service audit? Continued customer relationships, maintain and enhance connections with customers, intelligence resource use, optimize resource utilization to prevent waste, identifying social needs, view social needs as opportunities rather than artificial demands. Always the social needs should be taken as opportunity and give services to them, not as demands which are putting on by the public to the corporate entity. Fair pricing, establish fair prices and equitable distribution. Product development, innovative or improve products or services. So these are the key considerations should be taken while doing the corporate service audit, whether the entity is following with these or not. Evaluating and assessing that is nothing but corporate service audit. So that is regarding corporate service audit. I hope that's clear. Now, corporate development audit, which is our concept 3. Sorry, corporate development audit. What will be analyzed in this corporate development audit? Both the structural aspect of the entity and the operational aspect of the entity, like both internal aspects and external aspects. How the organization is getting processed and how it is doing its structure. The entire organization structure and its operations. Analyzing both structure of the organization and operations of the organization in meeting the objectives of the corporate entity of the entire organization is nothing but corporate development audit. So what is corporate development? Encompasses both potential, which is structural, and kinetic, which is called as operational aspects of the corporation. So corporate development is nothing but at a time increasing or developing the structural aspects of the entity and operational aspects of the entity, both combinedly. If it is done, it is called as corporate development. And what is corporate development audit? Evaluating that structure and process of organization is done properly or not, ensuring it is equipped to perform its functions effectively, whether the organization is doing that structure and process of organization are proper or not, and ensuring that the performance is done effectively. So checking and evaluating this is called as corporate development audit. The audit is ongoing. We already know all kinds of audit is not a single audit. It is ongoing. Corporate development audit is an ongoing process, not a one-time process. Based on continuous evaluation of internal and external environments. Essential dimensions of corporate development audit. What are the dimensions of corporate development audit? Regularity, constant monitoring of corporate elements. Always what is the corporate structure? What is the operations which are being happened in that particular entity? Constant monitoring of that is called as regulatory. That is one dimension of corporate development audit. Systematic check. Assessment of changing requirements in response to internal and external forces. Like even if it is internal force or if it is external force, how that is being affected. How that internal or external forces are affecting the operations in the company or the structure in the company. To know about that is called a systematic check. Assessing any changes or if any change is required in the organization because of internal and external forces, that is called as systematic check. Review, evaluation of past performance, quality and contributions to corporate goals, addressing any deviation. So what is the past performance? What is past quality? What is past contributions? Based on that, this year's corporate development will be set. Based on that, corporate goal will be set. So if there are any deviations from that goal, to identify and evaluating that is called as reviewing. That is one dimension of corporate development audit. And appraisal, detailed examination of corporate goals against resources used, suggesting future action. So what is the goal which is set? Is it properly being followed or not? What are the resources which are utilized till enough to follow that particular goal? And if there are any suggestive actions to be taken, so there will not be any failures in the future, that part is called as appraisal. So these are the 4 essential dimensions of corporate development audit. Regulatory, systematic check, review and appraisal. Now, what is the scope of corporate development audit? Micro and macro perspective encompasses both internal aspects and external aspects that we already know. Corporate planning and policy, long-term planning that examines strength, weaknesses, that's what analysis we have, isn't it? Strength, weakness, opportunity, threat, that will be identified by doing this corporate development audit. And that too is not for short term but for long term. Long term planning that examines strengths and weakness in the relation to the environment. Corporate forecasting, medium and short term forecasting. What is the relationship between corporate plans and industry trends? Now, if any company is getting into any project, it will not think what is current state of that particular project. There will be something forecasting. There will be budgeted priorly set. So what is medium forecast and what is short term forecast? Based on that, also corporate development audit will be done to know what is the actual corporate plan which is there and what will be the industry trend in the future period. Analyzing that is also can be done in corporate development audit. Medium and short term forecasting, assessing the relationship between corporate plans and industry trends. Corporate strategy, evaluating of survival as a viable entity and analysis of ongoing strategies. So what is the current strategy? What is the future strategy? And accordingly changes being made as a ongoing strategies. Evaluating everything is a corporate development audit. That is called as corporate strategy. Corporate externalities. External factors like economic factors, technical factors, political factors, social factors, all these factors will influence the organization business directly or indirectly. Regarding that, evaluation and analysis is also corporate development audit, because corporate development audit will include both internal aspects and external aspects. corporate internalities, which will be strengths, weakness, opportunities, threats for that particular organization. So, to know about all these is nothing but scope of corporate development audit. What will be helpful if we are doing corporate development audit? Long-term planning can be done. Short-term and medium forecasting can be done to know about the corporate plans and industry trends. That is our second point. Third point, what is the ongoing strategies, what is the current strategy, what is future strategy. To know about strategy also, corporate development audit can be done. And fourth, to know about the external factors, to evaluate regarding the external factors, corporate development audit will be done. And to know about internal factors like strength, weakness, opportunities, threats, regarding that also corporate development audit can be. So that is the scope of corporate development audit. I hope that's clear. Now, coming to characteristics of corporate development. What is the characteristic of corporate development? Growth stage. Similar to human life cycle, corporate development reflects growth and decline, success versus degrowth. As there is a human life cycle, corporate development will also have that stages in life. Life introduction, growth, maturity, decline. We have that stages, isn't it? So that is nothing but this corporate development will come in with stage, growth stage. Corporate is being introduced, growth stage is there, that is corporate development stage. Then there will be maturity stage, at last there will be decline stage. So corporate development is introduced as a growth stage. Corporate development reflects growth and decline, success versus degrowth. What are the characteristics of corporate development? Multidisciplinary teams require diverse teams with experience for comprehensive audits. If, see, for example, if cost audit is being done, who will do it? CMA, who is having experience in analyzing cost statements, cost records, and cost related information, they will go for cost audit. Financial audit will be done by CAs, who will have the work experience or knowledge regarding financial statements. And if any environmental audit, management audit is being done, then auditor who is related to management or who is appointed by management company, they will do the management audit. Similarly, corporate development audit has to be done by a diverse team members with different experiences to comprehend that particular audit. They have to know regarding corporate in and out. What is internal, what is external regarding corporate, everything they have to know. Will one person entirely know regarding corporate? No, that is impossible. So, for corporate development audit, that particular organization will require a diverse team members, which means each one of the team member will be expertised in different aspects. Decision making, planning and validation of decisions are crucial for corporate development. Performance indicators, what is achievement, what is failure, what are inefficiencies, and review process. All these should be done in where? Corporate development audit. Discussions routed through empowered management representatives. Whatever development has been done till now, whatever audit has been done till now, that has to be discussed with whom? With the management, and based on the expertise or representations which are given by the management, based on that, the audit should move on. Further process should be move on. So these are the characteristics of corporate development audit. So that is regarding corporate development audit. What we have seen till now, we have seen what is corporate development, what is corporate development audit, and what are essential dimensions of corporate development audit. Then we have seen scope of corporate development and characteristics of corporate development. I hope that's clear. So that is our concept 3, corporate development audit. Now, evaluation of personal development. In this evaluation of personal development, we are going to see how personal development will be evaluated. Personal, which means employees, management, directors, regarding those things. So, employee development strategies. We have 3 strategies for employee development. Role of managers in employee development, formal employee development strategies, informal employee development strategies. I'm sorry. So yes, what is the role of managers in employee development? What managers have to do? Delegation. Encourage employees by delegating the responsibilities rather than solving problems for them. So what managers have to do, they have to not directly get involved in everything. They have to assign the duties and responsibilities to the employees. So main work of manager is nothing but to delegate the responsibilities. Feedback. Provide honest and constructive feedback for employee growth. If one manager is there and the employee is doing work properly, what will employee expect from management or manager? They will expect the appreciation, they will expect some kind of motivation, some kind of rewarding. If that reward is not getting properly, will that employee be encouraged to do any work? No. So feedback is very, very important as a role of manager in employee development. If proper feedbacks are given, like in such a way, even if the employee is not doing their work properly, the feedback should be given in such a way that will motivate that employee. See, you have not done this work properly. This is the way of doing it. Try to do it in this way. Try to encourage that particular employee. Try to correct that particular employee, which will boost that employee confidence. Yes, I have done a mistake and I have realized regarding that mistake. I'll try to rectify it from the next time. So that is the kind of attitude which has to be bought by the managers within the employees. So that is the role of managers in employee development. Feedback. Development opportunities. Suggest specific training and development opportunities. If anyone of you are working professionals, you will know in many of the companies training is being provided. Development opportunities, like a company itself is telling you to write exams, telling you to take some courses, telling you to take some certifications, give exams and try to take the certifications. They'll suggest many certifications which has to be done. So that is called as development opportunities. Motivation. Inspire employees to take a risk and pursue rewards. Leadership attitudes. What is leadership? Leadership is given as a definition, or you can say it is defined in our management audit. Leadership. L is loyalty, E is empathy, A is accountability, D is determination, and dutifulness. Determination, dutifulness. Any of that you can take. E is encouragement, R is respect, S is selflessness, H is humility, I is integrity, innovation, both can be taken, and P is passion. So, leadership is nothing but to have all these inbuiltly. Then that kind of qualities, these all qualities should be included in one individual. Then that individual will be called as a leader. If he is loyal, if he is empathized, if he is accountable, if he is dutiful, if he is encouraging, if he is giving respect, if he is having selflessness, integrity, passion about his work, he is being innovative with his work, combining with all these qualities, he will become a leader. So manager should have the leadership quality. So this all combining is the role of managers in employee development. Delegation, feedback, development opportunities, motivation, and leadership attitude. Formal employee development strategies. What are formal? From the side of company, Training, offer both general and specific training, soft skills and hard skills. Interpersonal communication, public speaking, negotiation, leadership skills. These are soft skills. Hardships, nothing but technical skills like coding, accounting, system administration, etc. So, formally, how employee development can be taken place? By providing proper training to the employees. Psychometric studies assess mental capabilities for leadership roles. Try to make them motivate. Try to make them be loyal enough. Try to increase the capability of that particular employee. So mental capability of that particular employee should be boosted so that he will be able to manage the leadership roles. That is called as psychometric studies. So this is a formal way of employee development. Now getting into informal way, on the job training, learn from real work experience. No one will come and tell you that you have to learn this in your work. No, while doing the work, you will learn it by yourself. That is informal employee development. Shadowing and mentorship. Allow newer employees to learn from experienced seniors. Coaching, managers coach promising employees for future roles. Like if you have done this particular project properly, then you will be promoted to next executive, something like that. They will be promising. That is called as coaching. Managers coach promising employees for future roles. So these are informal employee development strategies. So these are employee development strategies. Role of managers in employee development, formal employee development strategies and informal employee development strategies. Now, performance evaluation methods. How performance evaluation will be done? Annual performance evaluation can be done. How? Assess employees against their assessed key result areas, KRAs. So what is the main area in which that particular employee is doing very good? What is the area in which he is lacking behind? Key result areas that could be found. Utilize goal setting exercises to define roles and assignment. Establish a proper goal for that particular employee based on which he will do his work, and based on that assigning work will be done to that particular employee. Conduct periodic reviews to track progress and make adjustments as necessary. Annual review can be done. Aggregate feedback from previous evaluation. So this all combinedly it is an annual performance evaluation. Yearly ones, they will check with regarding the key result areas. They'll set a proper goal based on the work will be assigned to that particular employee. Periodic reviews will be given, like when work is completed, the work review will be given. After that, annual review will also be given. So this is annual performance evaluation. Or else some kind of evaluation techniques can be followed, which is rating scales. Rate employee performance using numerical scale to identify top performance, or 360-degree feedback can be also given. Collect feedback from various sources like managers, subordinates, peers who are working with that particular team members. Peers are nothing but who are working with us. First, well-rounded evaluation. So 360 degrees feedback was nothing but personally who are working with that particular individual, going on to the managers, directors, supervisors, executives and asking regarding that particular employee's performance. So these techniques can also be followed. Management by objectives. Evaluate performance against agreed upon objectives set at the beginning of the period. Targets will be given for employees, and based on target, if it is satisfied, then employee is performing very well. If target is not satisfied, employee performance is not up to the mark. So based on that particular objective which is set, target which is set at the beginning of the period also, performance can be evaluated. So this is regarding evaluation of performance development. This can also be told as performance evaluation audit. Okay. Performance audit or performance evaluation audit. You can call it in any way. Okay. So that is our fourth audit, which is performance audit. Now coming to concept 5, consumer service audit. What is consumer service? Customer service encompasses the experience customers have when interacting with the organization. So what is customer service? Customer service is nothing but what customer is telling. What is the experience of customer when customer is interacting with the management or the organization? How the services are being provided by the organization. So what is the experience of that particular customer? That is called as consumer service audit, including both business to business and business to consumer context. So evaluating the experience of the customer when the customer is interacting with the management or the organization, that is called as customer or consumer service audit. What are the key principles? Respect for customer needs. First, what is the need of customer? That has to be understood. What is the requirement of customer? See, if I need cost and management audit class, and if I am going to the management and asking regarding cost and management audit class and they are giving me DT class, what will happen? What is my requirement? That has to be fulfilled. As a customer, I will give my experience as a good experience only if I get what I need, isn't it? So, report for customer needs. Commitment. Demonstrate dedication to serving customers. Always should be dedicated, should be innovative, bring new things to the customers so that customers will feel like, yes, these are providing us way more good quality products. So, commitment should be there. Clear information should be provided. Provide relevant and accessible information. Well-trained staff. Ensure employees are customer-focused and well-trained. Clarity in communication. Communicate effectively with customers. So, these are the key principles of good customer service. If all are there, then that is called as good customer service. If the products are being delivered based on customer requirement, if commitment is there, if clear information is provided, clarity in communication is there, well-trained staff is there, then and combinedly is called as customer service, good customer service. How we will get to know regarding customer satisfaction? See, okay, that something you have told regarding consumer service audit, which has to be done by the management auditor to know whether the management is performing good or not. So, in management audit, there is a consumer service audit that we will do. Okay. So, you have told that uh, the relationship or the expectation which customer is having, review that customer is having on the organization. To analyze and review, to assess, that is called as consumer service audit. Now, how we will know that the customer is satisfied or not? For that, we have these things. Customer satisfaction monitoring. Surveys can be conducted. Use customer surveys often conducted by third parties to gauge satisfaction. Data analysis. Analyze survey results and feedback for actionable insights. Collect data regarding surveys. Key performance indicators. Implement and track KPIs related to customer service. Real-time feedback like collect colleague feedback and analyze trends promptly. So what is the current trend? Based on that trend, our products are being produced or not? What is the colleague feedback? Colleagues are nothing but whoever peers are there. Social media monitoring. Monitor social media channels, whatever it is there. Even if it is regarding product, even if it is regarding any person, everything will be there in social media nowadays. So, monitor social media channels for customer input and response accordingly. So, by following all these, we will get to know regarding customer satisfaction, isn't it? So, we can do customer satisfaction monitoring by getting into surveys, by doing data analysis, by implementing KPIs, real-time feedback, and going to social media. What internal auditor has to do? Role of internal auditor when doing this consumer service audit. Assurance. Provide reasonable assurance over the customer services and complaint resolution process. So internal auditor should always know regarding customer service, whether the customer service is provided properly or not, whether there is any complaint raised regarding the customer service. That has to be assured by which auditor? Internal auditor has to assure regarding that. Utilization of metrics. Use customer service indicators like complaints, product recalls, resolution times for reviews. Risk assessment. Include customer service in risk assessment and periodic results. If customer service is not taken as a risk, will any organization will even think about customer service? No. So that customer service has to be included in what? Risk assessment. Only then the checking or any reviewing regarding customer service will be done in any organization. Independent assurance. Ensure controls are effective and in place. Ensure that internal controls regarding to this customer service is there in that particular management and they are properly following and complying with that internal controls or not. Cost of poor quality. Highlight cost of pure quality for product development opportunity. So what is the poor quality of the product? Based on that, assessment also should be done. Who will do all these? Internal auditor should do to know about customer service or consumer service. So that is regarding consumer service audit. I hope that's clear. What is consumer service audit? Now, concept 6. Audit of environmental pollution control. What is audit of environmental pollution control? Nothing but how company or organization is doing any activities or taking any steps related to environmental pollution. Regarding that, analysis is nothing but audit of environmental pollution control. A systematic documented review of operations related to environmental compliance, whether the company or organization is complying with the environmental rules or not. Examines the interaction between business operations and the environment, focusing on emissions, legal constraints and public perception. So what is whether the company structure is focusing on emissions or not, whether the legal constraints are being followed or not, whether public perception is taken into consideration or not. Checking about all these things and giving a documented review regarding everything is nothing but audit of environmental pollution control. What are the features of environmental pollution control audit? Role of management. Part of internal control system to manage environmental performance. So what management has to do? In internal control system itself, they have to include the rules and regulations regarding environmental performance. Environmental impact assessment predicts impacts before project starts. Whenever any project is being started by the company, before the project is being started itself, what is the impact of that particular project to the society, to the environment, that has to be assessed and predicted beforehand itself. Audits assess existing operations. Systematic process, organized approach, ensuring replicability and comparability. So what is the organized approach? To ensure that this is replicable to the environment. This is comparing to the environment. Systematic approach and systematic process should be followed. Documentation, support findings with verified data. Continuous review, ongoing monitoring process regarding environmental performance should be taken care of. So these are the features which are to be followed for environmental pollution control. In internal controls itself, management has to include regarding the rules of environmental control. Before starting of project itself, they have to predict what is the impact on the environment. A systematic process should be followed. Everything should be documented and continuous review should be there. These are the features of this audit. What is the major objective? To check whether compliance is being followed or not. What is the compliance status? Environmental performance is being improved or not. Facility management assist with the facility management, increase environmental awareness across the organization, risk management system should be enhanced, resources should be used in an optimal manner. So these are the major objectives of environmental pollution audit, environmental pollution control audit. What are the benefits of doing this audit? Enhances environmental management system in the organization. They are complying with all the legal requirements, environmental laws, reputational risk is being reduced, risk mitigation. If they are complying with the rules, the risk is being reduced. Stakeholders' expectations. If environmental controls are there in the organization, then trust will be built between the customers, and stakeholders will also trust on the particular organization. Reputation, brand, goodwill of that particular organization will increase. Cost reduction, identify areas for cost effective environmental solutions. Awareness and responsibility, increases employee awareness on the environmental practices and helps in decision making. Provides a database for management decisions. So these are the benefits if any organization is complying with this audit of environmental pollution control. What are the stages of environmental audit? There are 4 stages. Pre-audit, on-site or field audit, post-audit, follow-up or review audit. So four stages. First stage is pre-audit. Before audit is done, planning of audit, collect background information and define what is the main objective of that particular audit. What is the nature of audit? What is the scope of audit? To define all these pre-hand, planning everything is called as pre-audit. That is the first stage. Select audit team and develop audit protocols. On-site or field audit. Conduct facility tours and inspections. After planning is done, inspection will be done. Evidence will be connected. The auditor will interact with the staff and workers, employees who are working in that particular organization. He will interact and try to collect the information, data and evidence. That is on-site or field audit. Coming to next, post-audit. Share outcomes with the management. Evaluate findings against past audit. So what is the findings which has been collected in this particular step will be discussed with the management. That is post-audit. After that, at last, they will track the actions for implementation and measuring the progress. So these are the 4 stages of environmental audit. After environmental audit is done, at last report should be given, isn't it? So what will be the contents of report? Executive summary. Entire summary regarding the audit will be given. Introduction and audit background. Regarding this step, information will be given. What is the objective and scope? Audit observations. Recommendations. Agreed actions with target dates. Audit criteria. Evidence used. All these contents should be there in where? Environmental audit. Tools and techniques. What tools and techniques can be used? Similar to the other audits, checklist can be used by the auditor. Questionnaire can be settled. Observations can be taken, like frequent monitoring can be done. Photographs, visual evidence can be collected. Research, background investigation to inform audits can be done. So these are the tools and techniques which can be used by environmental auditor or internal auditor when doing the environmental audit. So this is our concept 6 regarding audit of environmental pollution control. I hope that's clear. Now coming to concept 7, audit of energy and utilities. What is utility audit? What are utility expenses? Expenses for electric, natural gas, water, sewer cost. So regarding all these is nothing but utility expenses. So audit, which is doing a review of this utility expenses and to identify if there are any billing errors, if there are any savings opportunities, if there are any efficiency improvements. To check these three things in an audit process, in a process is called as utility audit. Whether there are any billing errors, whether there are any inefficiencies or wastages of using anything, if we could save any energy, if efficiency can be improved, reviewing everything regarding the utility expenses is called as utility audit. What is the main objective of doing utility audit? Cost reduction. Identify if there are any errors and opportunity to save the utility expenses. Process control. Monitor consumption and optimal equipment design. So how the optimal can be brought, how the utilities can be utilized in an optimal manner, how it can be monitored, the consumption which is taken, how the energy is being consumed. Regarding that, a monitor can be done. That process, how we are controlling it, that can be done by using the utility audit. So main objective is nothing but cost reduction and to have a proper procedure to monitor how these utilities are being consumed and whether there is any opportunity for us to optimally utilize that particular utilities. So that is the main objective of utility audit. Cost reduction mechanism. How cost can be reduced? Ensure accurate billing rates from service providers are given. Maintain accurate consumption records. Ensure that everything is regarding to regulatory compliance. Assess the age and efficiency of equipment. By doing all these or by taking all these measures, cost reduction can be done. This is regarding what? Utility audit. Now coming to energy audit. A systematic assessment of energy usage, identifying improvement opportunities for energy efficiency and management. So these are utilities. Now coming to energy audit. How energy is being utilized? In which way it is being utilized? Is there any opportunity to efficiently utilize this energy, to reduce the consumption of energy? Is there any opportunity to know regarding that, to assess regarding that is called as energy audit. Energy management balances energy inputs with usage, identify energy streams and recommends efficiency improvements. Why energy audit is being done? So that energy is used in an optimal manner, balances energy inputs with the usage. So if any energy is being utilized, any energy is bought as an input, then that should be utilized up to the mark. It should not be overutilized. Identify energy streams and recommend the efficiency improvements. For this purpose only, energy audit is being conducted. We have certain steps in energy audit. First, collection of data. Collect baseline data on energy consumption, what is cost and what is production metrics. First, data collection. After that, analyze regarding the data. Identify what are the trends. Identify whether there are any inefficiencies. If there are any areas for improvement, do the analysis regarding the collected data. Then after that, implementation of energy efficiency measures. Short-term measures, medium-term measures, long-term measures. Based on the improvement area or based on the inefficiency, based on trend, we can take the implementation criteria. If it is short term, routine maintenance, employee engagement can be taken. If it is medium term, small investment can be taken. If long term, significant investment which will change the overall design of the process, that can be taken. So this is the stepwise procedure for energy audit. Key functions of energy auditor. What is the function which has to be done by the energy auditor? Quantify energy cost and usage. Basically, energy audit is done to know regarding the cost of energy. So, what is energy cost? How the energy is being used. To quantify it. Correlate energy cost with production trends. What is energy cost? What is production trend? Have to correlate it. Identify major energy consumes and inefficiencies. Identify the area in which energy is overly utilized, whether there is any inefficiencies in energy utilization. That should be identified by whom? Energy auditor. Recommend whether there are any further improvements, if anything can be improved. If in any area there is an opportunity of reducing the energy, those recommendations has to be given by whom? Energy auditor. So these are the functions of whom? Energy auditor. Energy auditor seeks to focus on possible sources for conserving energy. They can follow all these to reduce the energy usage. Steam generation can be done. Steam distribution can be done. Steam utilization can be done. Electrical energy utilization. Total energy system. Diesel exhaust recovery. So energy can be generated from different sources. From steam, from diesel, by using electric energy utilization. There are many ways in which energy can be consumed in a better manner, that can be conserved. So that kind of sources can be taken by the energy auditor. Types of energy audit. We have two types of energy audit: preliminary audit and detailed audit. Quick assessment to establish energy usage. So what is current energy usage? How we can save it? That is preliminary audit. Detailed audit. Comprehensive analysis for accurate savings, estimations, implementation plans. What is current state of energy usage? How we can save it accurately? What is the implementation plan? A detailed review regarding everything is there, that is called as detailed audit. We have two types of energy audit: preliminary audit and detailed audit. So that is regarding utility audit and energy audit. These two are different when it comes to audit. Okay, utility audit, what we have seen regarding what is utility audit, what are the objectives of utility audit, and how the cost reduction can be taken by using some mechanics for utility audit. This much only we have seen for utility audit. When it comes to energy audit, what is energy audit we have seen, and what are steps in energy audit, what are the types of energy audit, when energy auditor is coming to do the energy audit, what are the functions to be followed by that energy auditor, that also we have seen. So that is our concept 7. I hope that's clear to you. Now coming to concept 8, productivity audit or efficiency audit. When it comes to here, energy audit and utility audit. So these are two audits. But here, productivity audit or efficiency audit, both are same. What is productivity? It is a ratio of output to input. So what is input? What is output? A ratio between input and output is called as productivity. What is output? Goods or services. What is input? Men, material, machine, land, capital, energy, organization, whatever it is put in, that is input. To get output, which is goods or services. So ratio between input and output is called as productivity. Expression of productivity. How productivity can be expressed? Raw material, output per unit of raw material per unit of output. Electricity, output per unit of electricity. Direct labor, measured in terms of number of direct labors, man hours, value of wages. Plant and machinery, capacity utilization as a percentage of installed capacity. Capital employed, profit as a percentage of capital employed. So these are nothing but how we are going to measure it, how productivity can be expressed. Now, we have seen what is productivity and how it will be expressed. Now, productivity audit. Critical examination of various efficiency ratios. Efficiency ratio is actual production in terms of standard hours to actual hours worked. What is efficiency ratio? So what is standard hours? What is actual hours? Actual production in terms of standard hours to actual hours. That is called as efficiency ratio. Activity ratio is actual production in terms of standard hours budgeted. This you already have seen in SCM, standard costing. So efficiency ratio and activity ratio. Examination of efficiency ratios is called as productivity audit. What is the main objective of productivity audit? To scrutinize standards and actual performance. So what is standard, what is actual? To scrutinize and to ensure that both are equally matching, something like that. To evaluate productivity. So that is the main objective of the productivity audit. What are the limitations or problems in productivity audit? Diverse measurement units. Factor inputs have different units or yardstick. Productivity, like we have seen, it can be expressed in many ways. So, diverse measurement units are there. It is not a standard unit. Like productivity is measured only in terms of rupees, only in terms of units. We cannot tell like that because it has many measurement units. Interdependent of inputs. Always productivity cannot be independent. It is dependent on something input. Like if we are calculating productivity based on labor, it is dependent on labor. If it is productivity is expressed as a machinery, then it is dependent on machinery. So different inputs like labor, materials, machinery are closely interrelated, complicating measurement. So always inputs are interdependent to know what is the productivity. Complexity of simultaneous equations. Subjectivity in deriving solutions. A unique mathematical solution is challenging. We cannot get into more mathematics in cost auditing or management auditing. So when productivity is being done, this efficiency ratio, actual ratio, standards, actuals, in that mathematical formulas, it will be like mathematical formula, isn't it? So more mathematical related cannot be easily understand. It will be way more complex. So that is a limitation of productivity audit. So this is regarding productivity and productivity audit. So we have seen what is productivity, how it will be expressed, and what is productivity, what are its objectives, and what are its limitations. That is our concept 8 regarding productivity audit. I hope that's clear to you. Now coming to concept 9. Proprietary audit. What is proprietary? Which meets the test of public interest. So what is proprietary? Proprietary is nothing but the word proprietary is defined by Kohler as that which meets the test of public interest. So whoever is doing work in related to or in terms of public interest, that is called as proprietary. Proprietary audit seeks to ensure that the planned expenditure would yield the optimum returns and there is no other better alternative available. So, what is proprietary audit main objective? To ensure that whatever planned expenditure is there, that is actual expenditure. And in no other way, this planned expenditure or actual expenditure could be reduced. That is called as proprietary audit. Ensure that planned expenditure would yield optimum returns. So this is the planned expenditure, this is the actual expenditure, and this is the return which we are deriving from that. There is no other way that the return which is going to be get derived is going to change. There is no other better alternative available. So ensuring that is called as proprietary audit. It seeks to ensure that the expenditure is not only appropriate to circumstances of each case, but also has indeed achieved the objective for which it has been incurred. So proprietary audit not only ensures that planned expenditures are having optimal returns, but also it ensures that expenditure is not related to any one particular case, but it is related to the entire overall objective of that particular organization. So it seeks to ensure that expenditure is not only appropriate to that particular case, but also has indeed achieved the objectives for which it has been incurred. So what is the main purpose for which that expenditure has been incurred. Is that fulfilled or not? To know and to ensure regarding that is called as proprietary audit. See, first, what is proprietary audit? Proprietary audit is ensuring or evaluating whether planned expenditure is there, whether planned expenditure is matching with actual expenditure, and this planned expenditure is yielding the optimal returns or not. That is proprietary audit. And proprietary audit not only ensures that this expenditure has been incurred for that particular case only or not, but also whatever the result which we are getting or the main objective for which that expenditure has been incurred, that objective is fulfilled or not. That will also be ensured where? In proprietary audit. Whether the main objective for which this expenditure has been incurred, is it fulfilled or not. Regarding that, insurance is also done in proprietary audit. So, how assessment of proprietary audit will be done? Check for lack of coordination leading to waste. Whether there is any lack of coordination, checking regarding that can be done. Identify any ongoing losses, whether there are any losses or not, identifying that can be done. Analyze performance against similar schemes. How performance is there for our scheme and same similar scheme is there for another organization. How performance is there in that particular organization. Analyzing it, putting a benchmark for it. Assess if physical targets are met on time or not. Verify if expenditure objectives were achieved or not. These are the assessment criteria. So, based on all these things, assessment can be done for proprietary audit. What are its limitations? Decision making will be delayed. Scrutiny may hinder swift decision making. Why decision making will be delayed in proprietary audit? Because in proprietary audit, we are taking the decision based on planned expenditure. So, what is the planned expenditure? What is optimal returns? Based on that, we are taking the decision. So, we have to wait till the planned expenditure is actually expended. So, decision is getting delayed, isn't it? Decision making delays. Compliance constraints. Rules may limit innovative solutions and achievement of objectives. So, what is expenditure? Based on that, only the decision for proprietary audit can be taken. Innovative solutions cannot be bought like we are taking for another audits because it is already pre-planned. This is budgeted, that is actual. Based on this only you have to take the decision. We cannot go for any other changes in middle of the audit. So, compliance constraint is also there. Timeliness, delayed report reduce their usefulness, especially post loss. After loss is there, report is given. What is use of it? No use of it. So, if report is delayed, decision will be delayed. So, the usefulness of report will also be go waste. So, these are the limitations of what? Proprietary audit. Now, forms of organizations benefiting from proprietary audit. What are the kinds of organizations which will benefit from proprietary audit? Government companies. Audit of government companies will be done by whom? Controller and Auditor General of India. Private companies, chartered accountants, cost accountants who are conducting financial or cost audits under Companies Act. For them, for private companies, proprietary audit can be done. Limited companies, for limited companies also proprietary audit can be done. So, which kind of organizations will get benefited from proprietary audit? Government companies, private companies and limited companies, public limited companies. So, that is regarding proprietary audit. I hope that's clear. Now, coming to CSR audit, corporate social responsibility audit. Whatever you have in your company law regarding the CSR, same thing is there here. Why CSR audit has to be done? Because there is something called as Schedule 7. Whether that company is complying with that Schedule 7 requirements or not, to know about that CSR audit has to be done in that particular company. Same thing is there here also. Corporate social responsibility governed by section 135, schedule 7, applicable to companies who are coming under that particular threshold. Limit of profits, turnover, net worth. CRSR is defined as project or program related to activities in schedule 7 or undertaken by CSR committee as per company's CSR policy. So what is CSR? CSR is nothing but whatever activities which are there in schedule 7 regarding that programs and projects are taken, then that is called as CSR. Or if there is any CSR committee, if there is CSR policy in that particular company, then CSR committee will be formed. So whatever work undertaken by CSR committee is called as corporate social responsibility. What is the main goal of following CSR? Companies are expected to contribute social welfare and environmental sustainability, going beyond just profit generation. So why any organization have to follow CSR? Yes. So what are the benefits of CSR? We have external benefits and internal benefits. What are external benefits? A good positive corporate image, goodwill will be, brand reputation will be increased for that particular organization. That is external benefit. Internal benefit is employee loyalty will be there. Everyone will trust regarding the organization that they are following with the proper ethic principles. So these are the external and internal benefits if that particular organization is complying with the CSR policy. Stakeholders disclosures. What stakeholder disclosures should be given? CSR disclosures aim to build credibility among various stakeholders. For employees to boost confidence in system, analysts and rating agencies to enhance the reliability of reports, for business partners to strengthen the supply chain, and for communities to establish trust with local organizations. So for these people to know about these things, disclosures will be given as CSR disclosure. So in report, the CSR disclosures will be given. Our company is complying with this schedule 7 requirements. This much of amount is allocated to CSR policy. That disclosures will be given in the report. What is internal auditor should be done? What is the role of internal auditor? Internal auditor can contribute to CSR by advising on CSR self-assessment activities, auditing CSR programs, coordinating CSR report verifications, ensuring expenditures align with CSR objectives. So, what is CSR self-assessment activities? Based on that, advice can be given by the internal auditor. What is the CSR programs regarding that auditing? Internal auditor can be given. CSR report certifications, internal auditor can do. To align with CSR objectives, internal auditor can take. So these are the roles which can be done by internal auditor. CSR audit program may cover all or any of the following. Effectiveness of operating framework for CSR implementation, effectiveness of implementation for specific large CSR projects, adequacy of internal controls and review mechanisms, reliability of measures of performance, and management of risk associated with external factors like regulatory compliance. What are these? This is nothing but CSR audit program. If any CSR audit program is there, then what it should cover? It will cover regarding the operating framework, how CSR is being implemented. Regarding that details, CSR audit program will cover. Large CSR projects, how they are being implemented. Regarding that details, CSR audit program will cover. Internal country control and review mechanism, based on that also CSR audit program will cover. Performance measurement, regarding that requirements also, and regarding regulatory compliance. Every details and information will be there in where? CSR audit program. So this is regarding CSR audit. If any CSR audit question is there, you can write everything regarding section 137, schedule 7, all are there in our syllabus also. But I have not included in this concept book because everything is already there in law, isn't it? So this is different from law. If any question for regarding CSR audit has been asked in cost audit. Then what you have to write? You have to write regarding CSR requirements. After that, you have to write this CSR audit. Okay. Now coming to concept 11, social cost benefit analysis. What is social cost benefit analysis? It is a systematic process for identifying, evaluating and assessing the cost, inputs and benefits. What is cost? What is benefit of alternative activities to achieve economic and social goals. What is economic goals? What is social goals? How we are going to achieve it? What kind of alternative activities can be taken place? What is cost? What is benefit? To identify, evaluate and assess everything in a systematic manner is called as social cost benefit analysis. As you already know, regarding cost and benefit, doing any analysis, that is called as social cost benefit analysis audit. Am I fast? Okay. Regarding cost, regarding benefit, doing analysis is called as social cost benefit analysis audit. What is purpose of social cost benefit analysis audit? To measure expected future economic and social benefits from project or activity. So if any project or activity is taken by the organization, what is future economic and social benefit? To know and to measure that, social cost benefit analysis is done. Calculate net benefit from the project. What is the actual benefit from the project? Identify projects that yield maximum benefit in relation to economic standards and social goals. Based on social goals, based on economic standards, which type of project will give us maximum benefit? To identify that also, social cost benefit analysis audit can be done. Basic requirements. What are the basic requirements for doing this audit? First, define what is the goal of that particular audit. Then, measure future benefits. If any project is there, what will be the direct benefit and indirect benefit? That has to be identified. Measure relevant cost. What is direct cost? What is indirect cost? What is imputed cost? What is committed cost? Regarding all kinds of cost, we have to identify and measure. Present value calculation should also be done. Calculate the present value of benefit, because benefit will be derived after completion of everything. Cost will be incurred now, but benefit will be derived afterwards. So what is the present value of that benefit? Based on that, we have to analyze the cost and benefit analysis. Okay. So these are the requirements for doing social cost benefit analysis. First, define what is the objective, then measure what is the benefit, then measure what is the cost. After that, calculate the present value of benefit. After that, we'll do the analysis for cost and benefit. Clear? We have three techniques for social cost benefit analysis. What are three techniques? UNIDO methodology, little and mirrorless approach, Indian Planning Commission methodologies. Are these important? These are not important. Okay, you can just write these. It will be more than sufficient. This is regarding social cost benefit analysis audit or concept 11. Now coming to our last concept, ESG audit. What is ESG audit? SEBI regulates securities and protects stakeholders' interest. We already know that what SEBI will do. SEBI introduced BRSR. What is BRSR? Business Responsibility and Sustainability Report. So SEBI has introduced first Business Responsibility and Sustainability Report. To know regarding the sustainability reporting. Now, this Business Responsibility and Sustainability Report, which has been first introduced by SEBI, has been revised and replaced as Business Responsibility Reporting, which is BRR. Business Responsibility Reporting. Objective. What is the main objective of this Business Responsibility Reporting? To standardize disclosures on ESG parameters and sustainability related risk. What is ESG? Environmental. E is environmental responsibility. S is social responsibility. G is governance practices. So ESG is nothing but economic, social and governance audit. ESG is economic, social and governance audit. So this is the introduction of ESG audit. How ESG has been introduced? First, SEBI has introduced BRSR. After that, it has been changed to BRR. BRR is nothing but to standardize the way of disclosing regarding ESG parameters, like every entity is following ESG parameters or not. Regarding that, disclosures are standardized in a format, in a system called as business responsibility reporting. So this is the overview of ESG. Environmental responsibility, which means focus on minimizing carbon emissions, reducing waste, conserving resources and adapting eco-friendly technologies. Environment, everything regarding environment, to control environment, to protect environment. Social responsibility involves how companies treat its employees, customers, community, society, states. That is social responsibility. Governance practices concerned with corporate governance and ethics, including board diversity, executive compensation and shareholders' rights. So everything is governance practices. So this is the overview of ESG. What are the merits? Enhanced reputation. Reputation will increase. Risk will reduce. Cost saving will be there. Long-term value creation will be there. If there are merits, there will be demerits. What are demerits? High implementation cost. Lack of standardization. It is short-term focus. Like if any environmental, social or governance practices are being done or audit is done, that is only for short term. No one can tell that our project will be useful for environment for lifelong. It will be helpful for social. It will be helpful for customers for lifelong. No one will tell. Even if they tell, no one will believe. So it is for short-term focus. That is a demerit. Steps in planning for ESG audit. What are the steps? First, identify their stakeholders. Who are customers? Who are shareholders? Who are investors? Regarding stakeholders, they have to identify first. Understand how these stakeholders perceive their company's business activities, how they are being involved in business activity, how they are related to business. That has to be understood. Sorry. Identify risks and opportunities related to ESG issues. Develop a plan for reporting on these issues as well as procedures for evaluating them regularly. So first, identify who are the stakeholders. Then understand what is the relationship of that stakeholders with the business activities. Third, what are the opportunities and risk related to this ESG audit that has to be identified. Fourth, develop a proper plan to know or to overcome these issues which are there in ESG. So this is the stepwise procedure for ESG audit. What is the process of for ESG audit? First, which issues are to be evaluated? That has to be identified. When is the assessment being carried out and which period or time framework are being studied? What is the time frame when this assessment is being carried on? This part describes how the audit will be conducted. Third is methodology, how audit will be conducted. Companies should keep in mind that a good methodology should have layers of checks. Background check has to be done regarding environment check, social check, government check, everything has to be checked. That is third, methodology. Fourth is to evaluate whether the organization under audit have sustainable marketing focus or not. So this is the process of what? ESG audit. So that is regarding our unit 3 in section B. What is unit 3? Management audit in different functions. In this, we have seen different kinds of audits in management audit. In different functions, what are the different kinds of audit which has to be taken into consideration while doing management audit? So that is regarding our unit 3 from section B. I hope you have understood everything. Is this unit important? It is very, very, very important. One question from This unit will be definitely asked in the examination. See, for example, in one question paper, corporate service audit has been asked. In one, corporate development audit has been asked. So one question from this is compulsory. Compulsorily, it will be asked in the examination. So this is important. You have to learn for 7 marks it will be asked. So write it down as a 10 points, 7 marks question. It will be more than enough. Okay. So that is regarding unit 3. Management audit in different functions. I hope everything is clear to you. Yes. Now we are going to start with our unit 4 in section B, management audit, which deals with evaluation of corporate image. What we are going to see in this particular unit is what is corporate image and what are elements of corporate image, why for any organization corporate image is important, how they are going to measure this corporate image in any organization or entity. Regarding these details we are going to see, and after that we are going to see what is evaluation of corporate image. We have certain techniques which is given in our syllabus in this unit, uh, techniques of evaluation of corporate image. Regarding that concept also we are going to see. And corporate image can be positive and negative. Why for any organization positive corporate image is important. How any organization can build this corporate positive corporate image. Regarding all these concepts we are going to see in this particular unit in detail. So let us get into our first concept, which is a corporate image. What is corporate image? Corporate image refers to the perception of the organization in the minds of stakeholders. So what stakeholders think about the organization, what is their perspective regarding the organization, and not only stakeholders, public, customers, whoever it could be, who are external parties to the organization, what they think regarding the organization, that is called as corporate image, reflecting its reputation and identity. So what is this corporate image? Directly, it is a replicable of the reputation of the business or the organization or the identity of that particular entity. It represents what people envision or think when they hear the company's name. If we talk about any renowned company like Tata, Wipro, TCS, what we say? They are big organizations. They have better corporate image. They have better goodwill. They have better standards. They have better business culture. These are the things which will come instantly from our mouth, isn't it? So that is the corporate image which they have built over the period of years. A strong corporate image can provide tangible benefits. If any organization has a good corporate image or a positive corporate image, what will it benefit to? It will benefit to improve the customer loyalty. Customers will easily believe and be loyal to that organizations. They will continuously purchase the products which that organization is producing, even if it is a new product which isn't yet launched into the market. The customers even don't have any idea regarding that product, but even though they will believe that that particular product will be useful for them, and they will buy that product instantly without even getting into reviews of that product. They will go and buy that product because that product has been produced by that organization which has a positive corporate image. So a strong corporate image will have a improved customer loyalty. Sales will also become increased, and and even higher stock valuation. When sales are becoming higher, when customers are purchasing products of that particular organization on a continuous basis, when investors are coming and investing into that particular company, when everything is working correctly in that particular organization, having profits, good assets are there in that entity, everything will lead to higher stock valuations. Even the stock value will also increase for that particular organization. So this is regarding a corporate image. What is corporate image? what does stakeholders and public have perception or what they think regarding the organization. That is called as a corporate image. A strong corporate image can benefit in three things. One, it will improve the customer loyalty. Two, it will increase the sales. Three, it will increase the stock valuation. Yeah. So these are the three benefits which any organization will have if they have a strong corporate image. That is our concept 1. Now coming to concept 2, elements of corporate image. What are the elements of corporate image? We have 6 elements in the corporate image. One is core business and the financial performance. The financial health and the operation success of the company will be a element of corporate image. See, for example, there are losses for that particular company, which means financial health is not that good. There are frequent losses for the past period of 3 to 5 years. Will that company have a positive corporate image? No. When operational success, operations of that organization doesn't lead to success but leads to failure, will that organization will have corporate image, positive corporate image? No. So, financial health and operation success will be also a element of the corporate image, isn't it? Yes. So, that's our first point, core business and the financial performance. Second, brand reputation. The performance and the perception of its brand referred to as a brand equity. What is that particular brand? Based on that also corporate image will reflect. If the brand is a lowest brand, like cheapest brand, then that will have a different positive image, different corporate image. If it is a biggest brand which is mostly used by celebrities, business tycoons, then that will have a different corporate image. So what is the performance of that particular product? What is the brand value of that particular product or that organization will also lead to a corporate image. Innovation and technological powers. The company reputation for innovation often based on tangible achievements. If there is any organization which is producing same product from 80s till 2024, will that be a game changer for that organization? No, because timely technology is increasing day by day. Customers or the public want newest products. They are launching for new products and new technology, new techniques of production. Every customer needs newest products on daily basis. Even though it is a daily use product, even though it is a luxury product, they need a new one. No one will take a repeated product. Yes, if they are very frequent with that product or very habituated to that product, they can. But not all customers will take the same products till 40-50 years back, isn't it? So, innovation and technology should upgrade on a periodical basis with the organization also. If they are following the same techniques which used to follow in the previous years of 70s and 80s, now techniques are also become very upgraded in the manufacturing industries. If they are not implementing new innovations into their manufacturing process, that will not help that particular organization to upgrade with the newest products. So this will also reflect the corporate image of that entity. Next, employee policies, the company's treatment of its salaries, employees and workers. Now, there are many employees working in that organization. They are not getting their pays on timely basis. They are not getting any bonuses. They are not getting any incentives. They are not getting any insurance policies. Nothing is being provided by that organization. Will the employees of that organization talk positively regarding that? Sorry. Will that employees talk about positive about that organization? No. They will talk negatively only because they are being the victims of the activities which are done by the organization, isn't it? So employees, what employees need? They need their pay on timely basis. They need incentives. They need bonuses. They need increments on yearly basis. They need hikes. If any of this is missing, employees will give a negative review regarding the organization. So how the organization is treating its employees and its workers will also reflect on the corporate image that organization is holding. Next, the fifth point is external relations, relationship with customers, shareholders, and the community. Like we have many social things which companies have to do. If it is any manufacturing industry, then what is the emission which they are having? Regarding that also they have to, yes, how the customers, shareholders, and community relations are being maintained by the organization. Those will be treated as external relations. So external relations will also reflect in the company's corporate image. And lastly, market trend. Public perceptions of the trends in the markets where the company operates. As I've told you, technology is changing. Trends are being changed on timely basis. Now, when the organization is not properly following the trends, then also that could lack in the competition world. So these are the elements of corporate image. What are those? Core business and financial performance, brand reputation, innovation and technological powers, employee policies, external relations, and market trends. So these all will directly influence what? Corporate image. Now, coming to the concept 3. Measuring of the corporate image. How any entity, organization, or company will measure the corporate image. Corporations assess their image. Assess is nothing but how they will try to know regarding their image through surveys similar to political polling, by selecting representative samples and conducting interviews. They also rely on quantitative measures like sales and stock performance. How any company will know about corporate image? Directly, it will be able to know regarding the corporate image by sales and stock performance. How the sales are being happen in the market. If the customers are purchasing the products and the sales are becoming increasing day by day, then that means that company's products are having a good corporate image. And if stock performance, the stock value is getting increased day by day, then also it is having a good and positive corporate image, isn't it? Now, other than this, other than the operations of that particular organization, how will that organization will know about that corporate image? By conducting polling, by conducting surveys, by doing the sample checks, by giving the newest products as samples, how the public is reacting to those samples. Are they interested in this kind of products? Are they liking these samples or not? To by doing these all small activities, they can get to know regarding their corporate image. So corporations assess their image through surveys similar to political polling, by selecting representative samples and conducting interviews. They also rely on quantitative measures like sales and stock performance. Public perception. A well-informed public can drive sales and profits, while negative or outdated perceptions can harm the company's reputation. So, as we have already discussed, corporate image will mainly depend on public's perception. If it is well-informed public, which means if they are giving a good perception if they are having a good perception regarding the organization, that will drive into sales and profits. But if it is having any negative impact, then it will harm the company's reputation. So if it is good, the good will happen to the organization. If the perception is bad or negative, then negative will happen to the organization. So directly and indirectly, public perception depends, the corporate image depends on the public perception. So that is our concept 3. Now getting into concept 4, business and corporate image. Corporate image is closely linked to reputational risk, encompassing perceptions from employees, customers, suppliers, and the broader community. Factors influencing corporate image include brand names, website design, product or service quality, timeliness in payments, promotion, effectiveness. So, corporate image closely related to what? Reputational risk of your reputation. If corporate image is positive, reputation of that particular organization will be higher. The risk of reputational damage will not be there. If corporate image is in negative way, then there will be a reputational damage for that particular organization. Encompassing perceptions from and employees, customers, suppliers, and the community. What does they talk and think about the organization? This all will depend upon the corporate image. And also, what are the factors which will influence corporate image? Brand name, reputation, brand. If the brand name is good, then the corporate image will be good. Website design. If website is in such a way that it will tell everything about the organization, what kind of projects it had done in the past, what kind of projects it is doing in the present, what is the benefit did they derive from all these years, what is the goodwill did they gain till now, everything should be there in that particular company's website. Website nothing but have to define what does that organization mainly do. If website is giving all the details which the viewer needs, then the website design is successful. If it is not giving the sufficient information which the viewer needs, then viewers will not view that website because they'll not know anything. They'll not understand what's happening in that particular business. So website design will also influence corporate image. Product or service quality. If products and services which are provided by that organization is not quality enough, then damage will be there for corporate image. Timeliness in payments. If payments are not given on timely basis, then that will also affect promotion effectiveness. If they are not promoting enough regarding their products, or if they are overly promoting, both can affect the corporate image. So that is our concept 4 regarding business and corporate image. In this we have seen what are the major factors that influence the corporate image. What are those? Brand names, website design, product or service quality, timeliness in payments, and promotion effectiveness. So these are the factors that will influence the corporate image. And next up, coming to concept 5, evaluation of corporate image. What is evaluation of corporate image? What does it mean, evaluating corporate image? What does that mean? It means a complex examination of various internal and external business trends. So knowing about internal trends and external business trends to examine the trends is called as evaluation of corporate image. Involves a complex examination of various internal and external business trends. Steps include, what are the steps in evaluation of this corporate image? Desirable attributes. Compile a list of essential attributes for evaluation. First, we have to prepare a list of internal and external trends which we have. We have to prepare a list of attributes which we are going to examine. That has to be done first. That is desirable attributes. And next up, classification. Organize attributes into main groups with specific qualifications. Like which thing has to be examined first? What has to be in a first place of examination? Next, what has to be? It has to be grouped into specific qualifications. Weight assessment should be done. Prioritize attributes based on importance. First, it has to be placed on a specific qualification basis. Next, it has to be prioritized. Which to be examined first, then which should be examined. Expert involvement. Engage experts to rate attributes using factual data and technical studies. So, if we want, we can take help of the expert opinions to know regarding the examination results. Summarization. Consolidate ratings under selected groups. Composite evaluation. Present findings to the management comparing actual results with the anticipated ones. So these are the steps which we have in the evaluation of corporate image. What is the step process which we have seen just now? First, what they have to do? They have to desire a attributes. They have to prepare a list of both internal and external trends which is there in the business. Then they have to classify it into specific qualifications. Then they have to prioritize which has to be examined first and which has to be examined second. After that, they have to take the expert opinion regarding these attributes by using factual data and technical studies. They have to take the opinion from the experts. After taking opinion from the experts, they have to consolidate everything which is given by the experts, which has been analyzed by them. They have to consolidate all the data and prepare a report regarding that. That findings which has been prepared as a report, that has to be given to the management, and management will compare on the actual result and the anticipated or expected ones. So this is the entire stepwise process for evaluation of corporate image. We have 6 steps in evaluation of corporate image. Now, concept 6, techniques for evaluation. We have 5 techniques which can be used by any organization while doing this evaluation of corporate image. What are those 5 techniques? One is graphical method, second is point method, third is index method, fourth is survey method, and fifth is ratio method. So these are the 5 methods which or techniques which can be used by any of those who want to do the evaluation of corporate image. What is graphical method? To maintain updated graphs for each evaluated attribute. So everything, whatever data, information regarding these internal and external business factors are there, those will be represented in graphical manner. That is called as graphical method. Point method, assign points to each attributes based on the evaluation. So it will be given in the point wise. Index method, compare actual attributes with the estimated ideal indices. Whatever estimated ideas are there, that will be compared with the actual ideas, and then indexes will be prepared based on that. That is index method. Survey method, use questionnaires to gather the information regarding the survey. Ratio method, analyze events and trends to derive into the ratios. So we'll analyze what is the event, what is the trend, and based on that we'll go to the ratios. So these are the 5 techniques which can be used in the evaluation of corporate image, which is our concept 6. What are those 5 techniques which we have? Graphical method, point method, survey method, ratio method, and index method. These are the 5 methods or techniques which we have for evaluation of corporate image. Now, coming into our concept 7, benefits of positive image. We have talked till now regarding the corporate image, what are the elements of corporate image, and what is the basic techniques for doing this evaluation of corporate image. What is evaluation of corporate image? Everything we have discussed till now. Now, getting into positive image. If any organization is having a positive corporate image, then what are those benefits which that organization will get? A strong corporate image can lead to attracting talented employees. Employees, they themselves will come to the organization that they wanted to work in that particular organization. Now, even after completion of your CMEs, or if you are working professionals already and listening to this class, if any higher or reputed organization is there, won't you be interested to work in that organization, like FTCS, Wipro, or Tata Consultants, Tata Groups is coming to you, or it's not even coming to you, you are searching for the jobs, then will you not go to those companies which is having a good positive image? You will go, isn't it? So attracting talented employees. When professional employees or talented employees are there, they wanted to work in this organizations which have a positive image. Securing support from institutions and banks. When a good positive image is there, institutions and banks will not step behind when it's coming to support, financial support. They will provide the financial support throughout. Successful public offerings of shares and debentures. Everyone, public, customers, or whoever it could be, they will show the interest to buy the shares and debentures of that particular organization. Competitive product sales will also increase. Government support for projects. So these are the benefits of positive image. Talented employees will initiate themselves to come and work in our organizations. There will be a constant support on the financial terms from the institutions and banks. Offerings of shares and debentures, everyone will show interest in buying our shares and debentures. Competitive product sales will be there, and government supports our projects. So these are the benefits which we have for a positive corporate image. And concept 8, build a positive image. How that company will build a positive image? Now, we know that there will be a positive image, and the organization should have this positive image to get these benefits. Now, how the organization will build a positive image? Organizations can employ several strategies to cultivate a favorable image, and these are the strategies which can be taken up by the organization to build a positive image. Advertising. Effective advertising, particularly through televisions, can reach to diverse audience. Go to the advertisement, go to the television companies and advertise. Quality products and customer service. Delivering quality and excellent service fosters long-term customer loyalty. Social contributions, engaging in community development through public amenities and sponsorship enhances reputation. So even if the products are working good, what do they have to do? They have to constantly come to the public mentorships. They have to sponsor to many of the other organizations, trust. Support during calamities. Humanitarian efforts during crises are remembered positively by the public. When any floods are being happened, or when it comes to any disasters in the earth or in the world, what these companies have to do? They have to provide their products in free basis. They have to give complimentary products to them. In that case, they will take that company into higher levels. They will think that they are very good companies. When we are having trouble, then they gave our products. On this kind of calamities and crisis periods, majorly public will think of the organizations which could freely give them food or any kind of products which they want necessarily. If you are providing those kind of products, then they will be in need of doing that, isn't it? So they will utilize, make use of it properly. So support during calamities also will help to build a positive image for the organization. So these are the strategies which can be used by the corporates to build a positive image. What are those? One, it can advertise. Two, it can give good products and give good customer service. Three, it can do social contributions. Four, it can give support during the calamities. So these are the strategies which can be utilized by the entities or corporations to build a positive image. So these are the 8 concepts which we have in this particular small unit called as evaluation of corporate image. So yes, I hope you have understood all the 8 concepts in this particular unit of evaluation of corporate image. All the concepts which I have included in this unit are important for the examination. So try to remember those 6 points or 5 points which I have given. So it will benefit you to write the answer if these questions are being asked in the examination. So yes. So that is our unit 4, evaluation of corporate image, from our section B, management audit. Yes. Now we are going to start with our last and 5th unit from section B, management audit, which deals with information system security audit. What we are going to see in this particular unit is what is information system security and how this information system security is related to management audit. In management audit, why we are learning a topic called as information system security. And after that, we are going to see regarding information system security audit, that is IT security audit. And then we are going to see what is the main objective of this particular audit, what is the scope, and we have most important concept which is being frequently asked in the examination from this unit is IT system audit approaches, information system security audit approaches. Regarding those approaches, questions are being asked frequently. And after that, last concept we have regarding cyber security and computer forensics. That is also a very frequent question which is being asked from this particular unit. So these are the concepts which we are going to see in this particular unit. Let us start with this information system security. What is this information system security audit? Audit is nothing but independent review of doing something. Now, what is information system security audit? It is independent review to evaluate system records, activities, and documents for security improvements. So, whatever computerized documents which management will have, what is the management duty or management responsibility? Management's responsibility is to prepare records, prepare information, and to store that particular information, isn't it? So what is their main responsibility? Their responsibility is to prepare financial records, cost records, relevant information which is related to manufacturing, process, production. Those information has to be collected. That data has to be stored preservedly. So this is the main role which has to be done by the management. For doing these preparation of statements, they will have certain internal controls also. So this is the responsibility or work done by the management. Now, if the records which are prepared by the management, if those are stored in electronical format or in computerized manner, then we need this information system security audit. So it is nothing but independent review to evaluate system records and system activities and whatever documents which are uploaded in the systems. For what? For security improvement. So that those documents are securely preserved. No unauthorized access has been given to those records or documents. Those records and documents information is not in such a way that it could be easily hacked. No one could steal that particular information or data which is there in system computerized manner. So to do all these is nothing but information system security audit. What is the importance of this audit? The importance of this audit is to protect against threats like hackers, malware, viruses, and cybercrime. So mainly to avoid all these four: hacking, malwares or malfunctioning, like we will have those walls, isn't it? Even if we have so much secured data or security in our computerized way, but even though there are certain things which could happen againstly, that those are called as malwares, viruses, or any cyber crimes. To avoid all these four, what we have to do? We have to get in with the information system security audit. What does this help with? It helps businesses optimize security designs and processes. So that these designs and processes are in securitized manner. Security framework: a collection of documents, tools, and resources guiding institutions on information security planning, management, and auditing. So what is the security framework? The security framework is nothing but to the corporates, giving awareness regarding this information system security planning, management and auditing. That is called as security framework. Provides a structured approach to ensure efficient security practices. So for this security or to avoid all these into the information or the documents records which are stored in the computerized manner, all organizations have to follow what information system security audit. This is related to the management work. So it is included in the management audit. It is an ongoing process. Security is a continuous and requires a regular follow-up and updates. Auditing of information security is still a developing field requiring clear frameworks. It is still developing. We doesn't have a proper framework for this IT security audit, but yes, it is into implementation to avoid those malfunctions or viruses, cyber crimes, hackings in current period or in the recent periods. We are being able to hear many hackings, cyber crimes which are happening in the outside world. So to avoid those cyber crimes in the current generation, every organization has to get into with this information system security audit. So I hope you have understood what is IT's information system security audit and what is its relation with the management audit. Why this particular concept we are learning in management audit? Because the main objective or the main role of the management is to prepare the records and documents in the organization and to preserve those documents. If these records, documents which are prepared by the management, if those documents are preserved or stored in computerized manner, so to have a proper security for those, we have to get into with this information system security. So that is the basic introduction regarding this information system security audit and its relation with the management audit. Now coming to our concept 2, IT security audit. What is this information technology security audit? An IT security audit is a detailed evaluation of organization's information security system. So what is IT security audit? Is nothing but doing a detailed examination or evaluation of the operations which are taking place in the information security system in the organization. Conducting regular audits helps in identifying vulnerabilities, whether there are any changes, whether there are any risk in the IT security, whether there are any hacking, malware, viruses, cyber crimes. To check, to identify all these, we'll get into with this IT security audit. Conducting it on regular basis will help us to easily identify these vulnerabilities within the IT infrastructure. Verifying the effectiveness of security controls and ensuring compliance with the regulatory standards. As we have cost audit, management audit, this IT security audit is also a statutory compliance. So to get into with regulatory standards or regulatory framework to comply with those, we have to do IT security audit. What are the benefits we have if organization is doing IT security audit? What are the benefits which that organization will get? As we have already told, it could identify vulnerabilities. The audit helps to detect if there are any weakness in the hardware, software, network and data center. So if there are any weakness, any risk, any threats, that will be easily be identified. Eliminate unnecessary tools. It highlights any redundant tools or processes that do not contribute to the security. See, while getting into this IT security, we will implement many processes. We'll take into certain techniques which could be helpful, which couldn't be helpful. By implementing only, we'll get to know whether this technique is useful or not. So we have to implement all the techniques. We have to implement all the processes. Now, after implementation, some processes might work, some process might not work. So eliminating that also is very important, isn't it? Now, which kind of processes are not related to this security or not helping with the security? To identify those processes, this IT security audit will help us. So, by identifying what are the processes which are not contributing to the security, that will be identified by IT security audit, which will help us to eliminate those processes from the entire system. Strengthen defenses. It assesses the company's ability to handle security threats and recover from incidents like system outrages or data breaches. It will allow to handle security threats, and also if there are any incidents like system outrage, like if system is in downfall or any breakdown in system has happened, to come out with that, also IT security will help us. And if any data breaches happen, in that case also IT security audit will help us. Addresses flaws. If vulnerabilities are found, the audit suggests concrete steps to fix them. It will not only help us to identify what are the vulnerabilities, but also IT security audit will give us certain strategies to cover up this vulnerabilities, also to get to solve these vulnerabilities also. So these are the four main benefits or advantages which will be there for the organization if they are following what? IT security audit. Now, compliance assurance. Many organizations are required by laws and regulations to conduct the IT security audit. Now, management audit, is it mandatory requirement? No, it is not mandatory requirement. It is not a compliance tool that all organizations have to comply it no matter what. No. Management audit could be done, may not be done. It is not a compliance tool. Now, when it comes to IT security audit, as required by laws and regulations to conduct the IT security audit, these audits ensure that data handling process meet legal standards concerning the collection, usage, retention and disposal of the sensitive data. Now, management audit is not a compliance tool. But if in any organization IT security audit is there, then directly or indirectly they have to do the management audit also. So, IT security audit is a mandatory law and regulatory requirement, but management audit is not a mandatory requirement. That is regarding the compliance assurance. Types of IT security audit. We have around two types of IT security audit. What are those two types? One is internal audit and second is compliance audit. What is internal audit? Internal audit is conducted by internal teams to assess overall security posture and ensure the compliance, whether all the securities are in proper place or not, whether they are being able to detect these hackings or any cyber crimes or not. To know that, it is internal audit, and also to ensure that everything is as per compliance to the laws and regulations or not. So checking this both things, whether the overall security is in posture and to ensure the compliance. For this both we will do the internal audit. When it comes to compliance audit, often carried out by certified third-party auditors to verify compliance with specific laws and regulations. So, compliance audit will be done by whom? By certified third-party auditors. So, these are the two types of IT security audit which we have, which are internal audit and compliance audit. Now, getting into our concept 3, which talks about steps in security audit. We have around 5 steps in security audit. What are those? First step is to define the objective. Set a clear goal for the audit, ensuring that they align with the company's overall objective. Before getting into any audit, it could be cost audit, it could be management audit, it could be internal audit, it could be statutory audit. What is the main first step? The first step is to define the goal of that particular audit. What they are going to find out in that particular audit. What they are going to examine. What they are going to verify. What they are going to find out in the audit. That is the objective of the audit. So, defining the objective for what the auditors are going to work is called as objective. Set clear goals for the audit, ensuring that they align with the company's overall objective is the first step. Second step, to plan the audit. Define the roles and responsibilities of the auditing team, management and IT administration. Next, plan the schedules, tools to be used, monitoring and reporting tools, and logistics like taking equipment offline for inspection, document and share the audit plan to ensure that all staff members understand the process. So, entire planning of audit has to be done in the second step. Third step, performing the audit work. How they are going to perform? Conduct scans and assessment of IT resources such as file sharing services, database servers, and SaaS applications. So, first is nothing but to conduct a scans of the IT resources, and then they have to check network security, user across levels and system configurations. So, performing the audit work is nothing but doing the verification or doing the examination, isn't it? First examination, they have to conduct the scans regarding the IT resources, whether the resources are in proper way or not. That has to be checked. After that, they have to check the network security. Who are the users who can have the easy access to the all levels? System configurations regarding that has to be checked. Perform a physical inspection of the data center for disaster recovery measures. Whether they are following these disaster recovery measures, like if there are any fire, floods, whether the backup is provided in the data centers or not. Regarding that, physical inspection should be done. Interview non-IT employees to assess their understanding of security policies and procedures. Directly go one-on-one and interview the IT employees whether they are being able to understand the policies and procedures which are taken by the management in doing this IT security audit. So these are the four steps or four points which we have in performing the audit work, and then report the results. Create a formal report for stakeholders or regulatory agencies that highlights any detected vulnerabilities or risk. So, after performing the audit, what do they have to do? They have to prepare a proper report. What will be there in that particular report? If they have found any vulnerabilities, if they have found regarding any hacking, if they have found regarding any cyber crime, regarding any risk which could happen in the future, regarding all those information and data should be there in where? In the report. And that report should be given to the stakeholders or regulatory authorities. Include recommendations for mitigating the identified risk. If any risk has been identified, not only reporting the risk is important, but also to recommend certain steps to mitigate this risk is also a duty of that particular auditor when giving the report for IT security audit. Next, take necessary actions is our last step. Implement the recommendations from the audit report. This could include fixing specific security flaws, providing security training for the employees, implementing best practices for handling sensitive data, acquiring new technologies to enhance security and monitor risk regularly. So, whatever it could happen, any of these things could include, but fifth step is nothing but whatever recommendation is given by the auditor, that has to be implemented into the IT security system by the management. So yes, these are the 5 steps which we have in security audit. What is the first step? First step is nothing but to define what is the main goal of the audit. Second step is to plan the audit. Third step is to perform the audit. Fourth step is to report regarding the vulnerabilities and risk, and not only to report regarding the risk, but also to recommend certain ways to mitigate these risks also. And fifth step is nothing but to implement the recommendations which is given by the auditor by the management. So these are the steps which we have in the security audit concept 3. Now, concept 4, what are the objectives of this IT audit? Why IT audit is being done? Objectives of IT audit. First, risk identification and prioritization. What kind of risk which we have in this particular IT security? Regarding risk identification, and also to prioritize which risk should be taken first or should be analyzed first. Next, which information should be taken. Prioritize Standardization is also important. Next, compliance with security policies, whether policies and procedures are being followed or not, whether they are into compliance with the laws and regulations or not. That is the major objective, to check, to ensure that everything is compliance with the laws and regulations. Verifications of policies and procedures, to constantly verify the policies and procedures which management implemented. Security for IT roles, for all roles, for all employees, giving a proper security. Minimizing computer abuses and crimes, major objective which we have already discussed, to minimize or to prevent it from hacking, cyber crimes, all these. Improvement in security controls, also improving security control. So these are the 6 objectives. 7, advisory role to the management and also ethical and professional standards. So we have 8 objectives of IT security. What are the major objectives? Risk identification, prioritization, compliance with security policies, verifying these policies and procedures, security to IT risk, and monitoring this hacking, whatever cyber crimes are that, monitoring them, and also improvement in security controls, advisory role to the management, to be this IT security audit should be helpful to the management, as if they want any advice, they can take the advice from this IT security team. Ethical and professional standards. So these are the main 8 objectives which we have for IT security audit. And then concept of 5, scope of IS audit. What is scope of information system security audit? Collection and evaluation of evidence, nothing but collecting evidence or evaluating the evidence whether the crimes are being happened or not. Information system planning and organization, monitoring and management of information system activities and adequacy of information system personnel, whether the information system professionals, whether they are performing in adequate manner or not. To checking all these is nothing but the scope of IS audit, which is information system audit. This is the scope of IS audit. I hope you have understood what is the scope. Scope is nothing but what this audit will do. What is the basic scope? Entire thing which audit will be done. It will collect, it will evaluate, it will plan, it will organize, it will monitor, it will manage, and it will give the adequacy also for the personnel, like how the personnel are working. So doing collectively everything is called as a scope of IS audit. I hope it is clear till concept 5. Now, getting into our concept 6, which is information system audit approaches. This is very, very important question, has been asked in the past attempts. So, we have around 3 approaches in this information system audit approaches. What are the 3 approaches of information system audit? First is auditing around the computer. Second is auditing through the computer. Third is auditing with the computer. So these are the 3 approaches which we could follow for doing this information system audit. Getting into a first approach, auditing around the computer. This approach checks the output against the input without assessing the internal processing. So what does this main auditing will do? It will do around the computer. So audit will be done around the computer. What is input? What is output? Regarding that, analysis and verification will be done without assessing the internal processing. So what is output against the input only will be checked. Regarding internal processing, that will not be assessed. It's preferred when the auditor lacks technical skills, when he doesn't know anything much about information system security, then he can go around the computer. What is input, what is output? Regarding that, analysis can be done by the auditor. High reliance is placed on user controls rather than computer controls. If the auditor who is doing the IT security audit is more reliable on the management internal controls than this computer controls. Then in that case also he can go to with the auditing around the computer. He is believing and he is being reliable on the management performance, that they will have a proper internal controls. Due to this internal controls, there will be no any failures in the IT security audit. He has that presumption. Based on that, his experience, he is going to auditing around the computer. The system is simple with a clear audit trail, low risk and stable operations. How this system will, how this approach will work? It is a clear audit trail. So what are the audit activities or what are the audit responsibilities that are very clear? He will only go and assess what is output, what is input. Low risk because he need not get into entire internal processing, check each and every detail. He'll only go with the above thing which is low risk. Stable operations. The operations will be very much stable. Use cases batch system with the traditional controls like separation of duties. Systems using generalized packages that are well tested and minimally modified. So these kind of organizations which utilize batch system with industrial controls or traditional controls like separation of duties and all, they can go with this particular approach called as auditing around the computer. What are the limitations? It provides no information on system's ability to adapt to changes, not suitable for complex systems. So it is basically going only overview of audit. What is input, what is output. So it is just an overview of the entire system, IT security. It is not going in detail and in depth. So we cannot check regarding the system's ability, whether it could change to new things or not. So that is a limitation of auditing around the computer. Now, what is auditing through the computer? The approach involves auditing the internal processing of the computer system. So in this case, internal processing will also be audited, requiring knowledge of the system's logic, hardware and software. What auditors should have? Auditors should have the technical skills to understand regarding the internal processing, how hardware will work, how software will work, and how the system's logic will be there. Regarding all these, understanding and knowledge should be there to the auditor. Compliance and substantive tests are applied to the software and data to verify the integrity of the system. So they will check the entire integrity of the system. Everything in the system is being recorded as per the laws and regulations or not. Whether they are complying with the everything or not. Regarding everything will be verified. What are the advantages? It provides deeper insights into the system. As we are getting into deeper thing, isn't it? We are in this particular approach. What auditor will do? He will check regarding entire internal processing, which means deeper insight into the system will be there. Increases confidence in the audit findings because everything will be analyzed. So everything is as per data, valid data. Not an estimations any report is given by the auditor because he is verifying each and everything, is giving a report. What is the disadvantage? Time consume and requires technical expertise. As internal processing are being verified, the auditor should have the expertise. He should have those skills. He should have those understanding ability to get into this particular kind of audit. And also, as the auditor is going to check in deeper, getting into all insights, internal processing, everything will be checked. It is a time consuming. So that is a auditing through the computer. Now auditing with the computer. In this approach, the auditor uses the computer as a tool to analyze the largest data sets and perform substantive tests. So in this auditing, what will happen? Audit will be done in the computer itself. So auditor will take the use of computer tools and through which he'll do the auditing. The auditor retrieves data from the system and runs queries using specialized tools like computer assisted audit tools. This is given as MCQ. CAT stands for computer assisted audit tools. So what auditor will do? Auditor will retrieve all the data which has been missed and he will try to solve all the queries by using tools like computer assisted audit tools. Now these are some kind of common tools which are used in auditing with the computer. Audit softwares like package program, pre-designed for data processing, special purpose program, tailored for special audit task. Utility programs perform common functions like sorting and printing. So these are some kind of audit softwares which can be used, and test data techniques can be used. Insert sample transactions into the system to compare output with the expected results. So these are the common tools which can be used. General audit software ACL can be used to audit the particular records. What is the major advantage of following this tool, which is called as computer assisted audit tool? Improves audit coverage and independence from the technical perspective, saves time and provides more control over the audit results. So it saves time, it will give more control on the audit result, it will be as per technical experts, and it will cover all the things. What are the limitations? Requires technical knowledge to use effectively. For auditing through the computer and auditing with the computer, the major disadvantage is that it will need the major expertise for the auditor to get into this work. So this is the information system audit approaches, which is audit around the computer, audit through the computer, audit with the computer. So these are the three approaches which can be followed by the auditor when he is doing the information system audit. This is very important concept. Please do understand it. Please do learn it. Okay. Now, getting into our concept 7 and last concept in our unit 5 and entire section B management audit also. So yes, what is this concept 7? Cyber security and computer forensics. What is cyber security? The practice of protecting systems, networks and data from digital attacks, unauthorized access and damage. So protecting the system, network and data from unauthorized access and damage is called as cyber security. It involves implementing measures and protocols to prevent cyber threats and to ensure the confidentiality, integrity and availability of information. So nothing but to prevent the data and the information from the cyber crimes. It is called as cyber security. Now, what is computer forensics? The process of recovering, analyzing and preserving data from computer systems, networks and digital devices, often for the purpose of investigating cyber crimes or data breaches. So, to protect cyber crimes, cyber security is done. To do the investigation regarding cyber crimes, we use computer forensics. It involves collecting evidence in a way that maintains its integrity for the legal proceedings. So, to prevent and detect cyber crimes, we'll get into cyber security. And after cyber crime is there, to investigate regarding the cyber crimes, we'll go to computer forensics. So, here I have given in a tabular form what is the difference between cyber security and computer forensics. This is important question has been asked in your examination. What is the major focus of cyber security? To prevent cyber attacks and data breaches. But coming to computer forensics, recovering any lost or encrypted data often related to crime. Nature of work for cyber security, it is proactive, aims to prevent incidences from occurring. Computer forensics, reactive, response after cyber incident or data loss. To preventing before any cyber crime has been, what is cyber security? After cyber crime has been done, it has been detected, to cover it up or to respond for that cyber crime is called as computer forensics. Primary goal of cyber security is to create secure system and network to prevent the breaches. Coming to computer forensics, to uncover and preserve data often for criminal investigation. So, computer forensics is mainly done for criminal investigation. Now, industries involved in cybersecurity, broad application across IT system, businesses and governments usually involved in cybersecurity. Now, coming to computer forensics, mostly law enforcement, legal investigations and corporate data recovery agencies. These involve in computer forensics. What are examples of tasks? Implementing secure passwords, setting up firewalls, penetration testing. These are for cybersecurity. Recovering data from suspects' device, identifying digital evidence in the criminal cases. This is for computer forensics. What is the approach? It is a defensive, protective and preventive approach. For what? For cybersecurity. Cybersecurity is a preventive, protective and defensive approach. But computer forensic is investigative, reconstructive and evidence gathering approach. When will be applied? Before or during a potential cyber threat. Before cyber threat has been brought only, to prevent and detect it is called as cyber security. But after cyber incident has occurred, to do investigation regarding that is called as computer forensics. So this is the main difference between cyber security and computer forensics. So yes, we have also completed our concept 7, cybersecurity and computer forensics. By this, we have completed the entire unit 5 of information system security audit in our section B, management audit. So entire section B, management audit also completed. What we have seen in management audit thoroughly? In management audit, we have 5 units. Unit 1 is basics of management audit. Unit 2 is management reporting issues and analysis. Unit 3, management audit in different functions. And Unit 4, evaluation of corporate image. Unit 5 is information system security audit. These are the units which we have covered in this particular marathon. I've covered all these 5 units in section B, management audit. So entirely in this part 2 marathon, we have covered section B, section C and section D in our syllabus. And in part 1 marathon, I have covered entire section A, cost audit. So combinedly part 1 marathon and part 2 marathon covers our entire 100% syllabus coverage of this paper 17, cost and management audit. I hope you have understood all the concepts which we have discussed in part 1 and part 2 marathon. Yes, make use of everything. If you have any doubts, please do contact. Please do give in the comment section in the Telegram channel and I will be there to address your doubts. Hoping everything has been understood by you till now. All the best for your exams. We'll see you in the next video. Till then, happy studying. Bye-bye.